Yes, hello, welcome students. Welcome to this video where we are going to cover the practical questions. Can you see at the end there are some practice questions given by the CMA Institute. So we are going to cover those questions. Illustration questions, already you have the answers. Okay, it's already solved in your material and we have solved already in our material in our classroom, regular class. We have already covered questions which are similar to the ones which are going to be asked in your exam. So if you do that, that should be good enough. Okay, now I'm going to solve some of the practical questions, and also let's try to cover questions from the last 3 examinations. Okay, so chapter 1 is your accounting fundamentals. In that chapter we have some comprehensive numerical problems which we will try to discuss, for which they usually don't give the solution, they just give the final answer. Okay, now classify the following transactions between capital and revenue. Classify the transactions between capital and revenue. Remember, we had a unit called as capital and revenue expenditure. Yes. A plant constructed for 10,50,000. Plant means what? What does plant mean? Plant means machinery. Correct? Machinery is an asset. It is constructed. So obviously it is a capital expenditure. Capital expenditure. Clear? Next. Then we have profit earned by sale of fixed asset. Profit earned by sale of fixed asset. If you're doing regular business and if you're getting profit, that is your regular revenue profit. Repeated, it will keep repeating. But selling fixed asset, it's a rare event. You won't do it every time. So this will be a capital receipt. Capital receipt. Now, amount received from customers for services rendered. You have provided services, customer has paid you, this is part of your business. This is revenue receipt. This is a revenue receipt. Clear? Regular repairs and maintenance incurred on old furniture. Regular repair and maintenance. If you have a furniture, if you have an asset, okay, regularly repairing that or maintaining that, that is part. Okay, that is a regular item. So it will always be considered as revenue expenditure. If you change the furniture, that is capital expenditure. If you are just repairing the furniture, that is revenue expenditure. Annual rates and taxes paid to local authority. Annual. Every year you are going to pay. So this is a revenue expenditure. Imagine you pay for 5 years. That is a capital expenditure. Because we will take this year's expense will be considered as revenue expenditure, and if you pay for future years also, that will be considered as capital expenditure. Okay, good. First question done. Let's go into the second one. KK Transport Company of Ludhiana purchased 4 trucks for 12,50,000 each on 1st July 2020. Okay, they have purchased trucks. On 1st January 2023, one of the trucks met with a massive accident and as a result was completely destroyed. Okay. Insurance company paid 7 lakhs in full and final settlement of the claim. Okay. On the same day, the company purchased a used truck for 8,70,000 and spent 1,30,000 on its overhauling. One truck got destroyed. That's why they have purchased one more truck. You are required to show the treatment of these transactions in the final accounts and balance sheet of KK Transport Company for the 3 years ending on 31st March 2023. So 31st March 2021, 22, 23. They want you to show that. Given that company writes off depreciation at the rate of 20% per annum on straight line basis. Clear? What are they asking you? They are not asking you to prepare machinery account or what is a truck account, like how they used to ask in depreciation chapters. They have just told what is the impact. Okay, show the treatment of these transactions in final accounts. In final accounts, what will be the transaction? Okay, and the balance sheet. So what we will do year by year, we will do. So first year is 31st. Yes. So question number 2. First year ending 31st March 2021. The year ending 31st March 2021. That year what happens? You have purchased 4 trucks at 12,50,000 each. Okay, you have purchased the trucks. Purchase of trucks. What date you purchased it? 1st July 2020. 1/7/2020 you have purchased the trucks. Clear? So now what happens? 12,50,000 is the value of the truck and you have purchased 4 trucks. So that becomes not 1 crore. It becomes 50 lakhs. 50 lakhs. 12,50,000 into 4 trucks, that will make it 50 lakhs. When did you purchase it? On 1/7/2020. Okay. Now what will happen? On 1st January 2023, we are still in 31st March 2021 ka year. So this year there is nothing. Anything that is going to happen is couple of years later. That time one accident took place and a new truck is also purchased. Clear? Now what is going to happen? You're going to calculate depreciation for 2020-21. Depreciation for 2020-21. What will happen now? 50 lakhs into, they have told depreciation will be on the basis of SLM method and 20% per annum they said. So into 20%. But this was purchased on what date? 1st July. It was not used for the entire year. It was purchased on 1st July. So into 9 divided by 12. Into 9 divided by 12. So how will you calculate? 50 lakhs into 20% into 9 divided by 12. So that gives you 7,50,000. Your depreciation will be 7,50,000. Is this clear? Now, after that, what happens? What did they ask? Every year they want to know what is the impact on the final accounts. So if you're preparing P&L, you'll be preparing P&L, correct? P&L for the year ended. P&L for the year ended 31st March 2021. In this P&L, you will write to depreciation 7,50,000. In this P&L, you will write to depreciation 7,50,000. And same way, you will also prepare balance sheet. You will prepare balance sheet as at 31st March 2021. In that balance sheet, what you are going to do? You will show trucks. Trucks were purchased, so you will show trucks. It is going to be 50 lakhs. 50 lakhs minus 7,50,000. So your truck will be shown at 42,50,000. Truck will be shown at 42,50,000. Is it clear? Yes. Now what? We have done this. Truck is going to be shown at 42,50,000. This is your solution for the first year. They said for every year, no, we'll go into the next year now. So next year is year ending 31st March 2022. Year ending 31st March 2022. So basically the first year was 2020-21 and the second year is going to be 2021-22. First year is 2020-21 and second year is going to be 2021-22. Is this clear? Yes. Now, let's go further. What is the opening WDV of the machine? On 1/4/2021, what is the WDV of the machine? It is 42,50,000. It is 42,50,000. You can see from the previous year, we are bringing it down 42,50,000. Now what happens? Depreciation. Depreciation for the year. Now when we are talking about depreciation for the year, understand this. Okay, here what they have told. On 1st January 2023, that means this year the accident did not take place. So depreciation will be 50 lakhs. We are not following WDV method. We are following straight line method. 50 lakhs into What is the percentage? 20%. This year it is going to be full year. So 50 lakhs into 20%, 10 lakh will be the depreciation. So you can take 10 lakhs over here and then your resultant figure will be 32 lakh 50,000. This will be your WDV. So now if you are preparing P&L, again you are going to prepare P&L, no? Next year what is going to be the situation? Okay, they have asked every year final accounts of every year. So now when we are preparing P&L, let's try to understand. Yes, we have P&L and balance sheet. Again, they have asked to prepare. But this time it will be P&L for the year ending 2022, 31st March 2022. What is the depreciation? It is not 7,50,000. It is 10 lakhs. Depreciation is 10 lakhs. This will be the impact on the final accounts for the year ended 31st March 2022. Now, when we go to 31st for the balance sheet, what will happen? Balance sheet, it will not be 42,50,000. The balance sheet will be we have already calculated. Can you see it is 32,50,000 because 42,50,000 was previous year minus 10 lakhs. That time you get 32,50,000. 32,50,000. This is your solution for the second year. Here also there is no problem. When we go to the third year, now we finished 31st March 2022. Next year is year ending 31st March 2023. That is 2022-23. Is this clear? This is the year ending. Now what happens? Now you have to understand, in this year on Jan 1st, one truck met with a massive accident. As a result, it was completely destroyed. Okay. Now let's try to understand. Truck destroyed. One truck is destroyed. Okay. We have learned in depreciation, whenever there is a sale or whenever a truck is going out, we have to calculate depreciation till the date. Till the date the truck goes, we have to calculate depreciation. Now, what is the cost of that truck? Cost of one truck is 12,50,000. Cost of one truck is 12,50,000. Is that correct? Yes. Now what will you do? 12,50,000 minus depreciation for 2021. We need to know what is today's value, no? Depreciation for 2021. 2021 it's going to be 12,50,000 into 20% into 9 divided by 12. 12,50,000 into 20% into 9 divided by 12. 187,500. 187,500. So 12,50,000 minus 187,500. Now we are at 10,62,500. This is the WDV on 1/4/2021. Clear? Then what happens? Less depreciation for 2021-22. Depreciation for 2021-22. Now what happens? 12,50,000 into 20%. Okay, this is for the full year. So 12,50,000 into 20%, you will get 2,50,000. 2,50,000. So 10,62,500 minus 2,50,000, you will get 8,12,500. 8,12,500 is your value. Clear? This is WDV on 1/4/2022. Now this year, this truck got destroyed. This year, this truck got destroyed on what date? It got destroyed on 1/1/2023. That means this truck is used for 9 months. For 9 months, we have used this truck. So what will happen? Less depreciation 2022-23 up to 1st January 2023. That will again be for 9 months. 12,50,000 SLM method, don't forget that, into 20% into 9 divided by 12. So you will take 12,50,000 into 20% into 9 divided by 12, 187,500. 187,500. That time you will get the WDV on date of accident. This will be the WDV on the date of accident. So 8,12,500 minus 1,87,500, you're getting 6,25,000. You're getting 6,25,000. Clear? This is the WDV on the date of accident. So now what happens when you have reached this stage? Accident means what? We have insurance company coverage. So can you see insurance company has paid 7 lakhs in full settlement, full and final settlement. Insurance company paid 7 lakhs. So what happens? Insurance claim received. Insurance claim received is 7 lakhs. What was my WDV on the date of accident? 6,25,000. What is the insurance claim that I am getting? 7 lakhs. So basically, I have 75,000 profit. 75,000 rupees is profit. This were our working notes when you should prepare ledger. Clear? So what we have to understand, the truck which got damaged, it was purchased for 12,50,000. Okay. But it was purchased on 1/7/2020. Cost was on what date? 1/7/2020. Depreciation for 2021, 9 months. You get this WDV. Depreciation for 21-22, full year. Depreciation for 22-23, again 9 months. Why 9 months? Because this accident took place on 1st January 2023. Now you have the WDV on the date of accident, 6,25,000. Okay. You got 7 lakh from the insurance company. Good. 75,000 is your profit. Is this clear? Okay. 75,000 is your profit. Did you purchase a new truck? Is there a new truck that is purchased? Yes. Can you see they have told that on the same day the company purchased a new truck for 8,70,000. Now, new truck purchased. New truck purchased. It is purchased for what value? New truck means it is a second-hand truck, but for us it's a new truck. No, new truck coming into the business. Don't get confused. Okay, so new truck cost is what? 8,70,000 plus 1,30,000. You can see they have told 8,70,000 and he has spent 1,30,000. So total amount spent is 10 lakhs. Total amount spent is cost is 10 lakhs. Clear? Now, that is a new truck purchased. New truck purchased, we have spent 10 lakhs. What is the depreciation? Depreciation for 2022-23. It is purchased on what date? 1/1/2023. It is purchased on 1st January 2023. That is why the depreciation will be only for 3 months. So 10 lakh into 20% into 3 divided by 12. 10 lakh into 20% into 3 divided by 12. So you can take 10 lakh into 20% into 3 divided by 12. You are getting 50,000. 50,000 is your depreciation. Clear? Therefore, what is the WDV of new machine? New truck. New truck on 31st of March 2023. So the WDV will be 9,50,000. WDV will be 9,50,000. 10 lakh is the cost of the truck. 50,000 is the depreciation. 9,50,000 is the WDV. Is it clear? Are you able to follow? Yes. Now, this is the cost of the new truck. This is the situation of the new truck. New truck we have purchased, 3 months we have used, 50,000 depreciation. Okay. Now, what about the other old trucks? What about the other old trucks? They are still there, no? Depreciation on remaining 3 trucks old. They are still there. So what will be the depreciation for them? Depreciation will be 12,50,000. 12,50,000 into 12,50,000 is one truck cost. 12,50,000 into 3. So 3 trucks into 20%. 20% depreciation. This is the depreciation for the remaining 3 trucks. So 12,50,000 into 3. Okay, into 20% will give you 7,50,000. 7,50,000 is the depreciation. So now what and all we have had? The truck which got destroyed, we have depreciation in this year for 9 months. The truck which we purchased, we have depreciation for 3 months. The truck which was not destroyed, it was there for the entire year. On that we have depreciation for full year. So therefore, the total depreciation for 2022-23, total depreciation will be, now what we will do, old truck, how much is the depreciation this year? 1,87,500, which got destroyed, 1,87,500. So 187,500 plus the new truck, what is the depreciation? New truck we have purchased 50,000 because it's used only for 3 months. The old trucks which were not destroyed, which are used for the full year, depreciation is 7,50,000. So 187,500 plus 50,000 plus 7,50,000. Totally, the depreciation is 9,87,500. Depreciation is 9,87,500. Are you able to follow this? Yes. Let's go further. Now what happened? What else? We need to know what is the WDV. WDV of trucks on 31st March 2023. We need to know what is the WDV of the trucks on 31st of March 2023. What is the opening WDV? The WDV on 1st April 2022. It's given, no? WDV on 1st April 2022 is how much? Can you see over here? Trucks 32,50,000. Trucks 32,50,000. So WDV for 4 trucks is 32,50,000. Out of that, 1 truck is gone, minus WDV of truck destroyed. Minus WDV of truck destroyed. WDV on what date? Not on the date of destruction. On 1/4. 1/4 only we are removing it. Okay, we are calculating the WDV of 1/4, no? So can you see WDV of truck destroyed? We have already calculated. On 1/4/2022, the WDV was 8,12,500. 8,12,500 is the WDV. So what will we do now? Remove 8,12,500. So on 1st of the year, we had the WDV of all the trucks. Out of that, we remove the WDV of the truck which is destroyed. Then we will add, what will we add? We will add new truck purchased. New truck that is purchased. Are you getting my point? So new truck that is purchased. Okay, students are like, sir, can you do machinery account? Okay, fine, that is better. If you, truck account. If you are having confusion with this calculation, we'll do one thing. We'll prepare the truck account itself so that you are having crystal clear clarity. So I'm preparing the truck account. Okay. So truck account, what is the opening WDV? 1/4/2022. You are going to write to balance brought down. To balance brought down. How much is the balance brought down? Last year's balance sheet, you can see 32,50,000. Balance brought down is 32,50,000. Is that correct? Yes. Then what happened? The truck which got destroyed, we have on 1/1/2023 depreciation. So you will write by depreciation. How much is the depreciation? 187,500. 187,500 is the depreciation on the truck which got destroyed till 1/1/2023. Okay. 1/1/2023, you're going to get some money from insurance company. So you're going to write by bank account. You got 9 lakhs. I think you got 9 lakhs, right? Yes, you got, you got 7 lakhs. You got 7 lakh from the insurance company. And there, for 50,000 was profit. Profit will be debited to P&L or credited to P&L? Yes, it will be credited to P&L. So 1/1/2023, you can write to P&L account 50,000. 50,000 profit goes to P&L. This is about the truck which got destroyed. And on 1/1/2023, what else happens? You're going to purchase a new truck. So truck account debited to bank account. We know the cost of the new truck, 10 lakhs. Cost of the new truck is 10 lakhs. So then what is going to happen? 31st of March 2023, we have to calculate depreciation for the balance trucks. So by depreciation on the new truck, it was 50,000 depreciation, and for the balance trucks, it was 7,50,000, which we have already calculated. So total depreciation was 8 lakhs. So can you see depreciation on the destroyed truck is here, depreciation on the remaining trucks are here because the dates are different. Clear? Then on 31st of March 2023, you will get the balance by balance carried down. This is your machinery account for your reference. Clear? So now what will you do? 32 lakh 50,000 plus 50,000 plus 10 lakhs minus 187,500 minus 7 lakhs minus 8 lakhs. So you get 26 lakh 12,500. 26 lakhs 12,500. That is your truck account. That is your truck account. 26 lakh 12,500 is the value. Oh, the profit was 75,000. No, it was not 50,000. Sorry. Profit was 75,000 over here, not 50,000. Yes, 75,000 profit. So the balance will change. 26,12,500. It was the balance plus 25,000. 26 lakh 37,500. 26 lakhs 37,500 is the truck account balance. That is not what they have asked. That is our working note. What have they asked ultimately? They told how it will impact the final accounts. So final accounts, first thing is P&L. So in P&L for the year ended, P&L for the year ended 31st March 2023. P&L for the year ended 31st March 2023. So here what happens? First you will write to depreciation. Correct? To depreciation. How much is the depreciation? Total depreciation we have calculated and kept 987,500. So to depreciation 987,500. You get 987,500. Okay, that is the situation. Now what happens? One more thing. The effect of the effect is you're getting profit. So you'll write by profit on destruction. You did not sell it, but because of the destruction, you got 75,000 extra from the insurance company. This is the impact on your P&L. What about the impact on your final accounts balance sheet? Your balance sheet as at 31st March 2023. We are not preparing the entire balance sheet. We are only showing the part of it. So the truck. What is the truck balance? We have already calculated in the machinery account 26,37,500. 26,37,500. That is the truck balance. When you get insurance company money, cash, the bank balance increases. When you spend money on the new asset, bank balance increases. But bank we are not going to show because we don't know all the transactions which are there in the bank. We know only one or two. So we are only going to show this much. This is the impact of the assets on the final accounts. This is the impact of the assets on the final accounts. Clear? Yes, you can go back and let's see. Yeah, they have given written down value 26,37,500. Only the one point they have given. Other points they have not given. Is it clear? This is your solution for question number 2. These kind of questions you can expect in the exam as well. Yes. Yes. Next question. Question number 3. Question number 3 talks about the following errors were detected in the books of Messrs. SR traders while preparing trial balance. While preparing trial balance, they have found these errors. Okay, you are required to pass necessary journal entries to rectify the errors. That means Trial balance is already prepared. Remember, in rectification, we have three stages: before preparation of trial balance, during the preparation of trial balance, after preparation of trial balance. Clear? Before preparation of trial balance, during trial balance preparation, and after preparation of trial balance. We have three stages. So now what happens when we have three stages? Okay. Three stages we have for rectification. Here they said while preparing trial balance. That means when they prepared trial balance, they got to know these are the errors. So we are in the second stage. So what we are going to do? Rectification. Pass necessary journal entries to rectify the errors. Remember, we used to do correct entry, wrong entry, rectification entry. Yes, that's what we are supposed to do. Now, first error. First error. So now we are in question number 3. What I will do is divide the page into 3 halves so that you know the working as well. This is your correct entry. This is your wrong entry. This is the rectification entry. Correct entry, wrong entry, and rectification entry. Clear? Now, in the exam, the marks will be allotted only for the rectification entry. But if you know the correct entry and wrong entry only, it will be easy for you to pass the rectification entry. Okay, first one. Freight paid for bringing purchased goods wrongly debited to machinery account. We purchased goods, for that we paid freight. This is called as freight inward. Okay, they have debited it to machinery account. So the correct entry is what? The correct entry is freight account debited. Correct entry is freight account debited. Freight account is debited for 72,600. Freight account debited 72,600. To it is paid. So you can take it as to cash account 72,600. Freight account debited to cash account 72,600. What is the wrong entry? They have debited it to machinery account. So machinery account debited 72,600 to cash account. This is the error that they have done. This is the error. Freight was supposed to be debited. Did you debit freight? No. So go and debit it. Freight account debited 72,600. Cash was supposed to be credited. Did you credit cash? Yes. Machinery was wrongly debited. To remove that, what will you do? You will credit machinery. So the rectification entry will be to machinery account 72,600. To machinery account 72,600. Is it clear? Yes. That should be your solution for the first one. Now, when we go into the second one, second rectification, we'll see what they have asked. Equipments purchased worth 8,50,000 wrongly passed through purchases account. Equipment purchased 8,50,000 wrongly passed through purchases account. First, equipment purchased, what is the entry? Equipment purchased, the entry is equipment account debited 8,50,000 to cash or bank account 8,50,000. This is the entry. What is the wrong entry? Wrong entry is wrongly passed through purchase account. So they have to return it as purchase account debited 8,50,000 to bank account 8,50,000. Is that correct? So what should be the rectification entry? Rectification entry, equipment was supposed to be debited, you have not debited. So debit it. Equipment's account debited 8,50,000. Okay, bank was supposed to be credited. Bank is correctly credited, no problem. Correct. Purchase account is debited. Purchase account should be debited, but you have not debited purchase account. I mean, you have wrongly debited purchase account. Remove it. So you will write to purchases account 8,50,000. 8,50,000. This is your rectification entry. Is this clear? Yes. Next, let's go further. Third one, entry number 3. Okay, entry number 3. Returns outward book was overcast by 54,000. Returns outward means what? Returns outward means purchase return. Purchase return. We have done subsidiary books. Purchase return total. If it is overcast, purchase return will be affected. But what is the correct entry? The correct entry is for purchase return, creditor account debited 54,000 to purchase returns account 54,000. What is the wrong entry? What is the wrong entry? The wrong entry is creditors account debited 54,000. Have you debited creditors? Yes, creditors is correctly debited. Okay, but when you debited purchase returns, it became 54,000 plus 54,000. You have debited twice, 1,08,000. Now, when you credited, it became 1,08,000. Can you see returns outward book was overcast by 54,000? Are you getting this? So now, overcast, you put extra to purchase return. So to remove that, what will you do? Purchase return has to be debited. Purchase returns account debited 54,000. Purchase returns account debited 54,000. There is a debit. There is no credit. There is a debit, but there is no credit. What will you do? You will credit it to suspense account. You will credit it to suspense account. Okay. One-sided errors, always it will go into suspense account. We have discussed all this. Yes. Fourth one. Goods purchased from Rohan worth 79,000 has been debited to his account. Goods purchased from Rohan worth 79,000 has been debited to his account, they said. What is the correct entry for goods purchased from Rohan? The correct entry is purchase account debited 79,000 to Rohan account 79,000. Purchase account debited 79,000 to Rohan account 79,000. Is that correct? Yes. What is the wrong entry? The wrong entry, what they have done? They have debited it to Rohan. We should have credited Rohan. They have debited Rohan. So they have passed the entry Rohan account debited 79,000. Purchase account debited 79,000. Rohan is also debited. Purchase is also debited. Clear? Can you see the mistake that they have done? Rohan account is also debited. Purchase account is also debited. Now, what is the rectification entry for this? What is the rectification entry? Now, Rohan purchase had to be debited. Done. Rohan is wrongly debited. Wrongly debited. So, what we will do? We have to credit Rohan. We have to credit Rohan. So, to Rohan account 79,000 plus 79,000. Double we have to credit. So 79,000 plus 79,000 will make it 1,58,000. Why is it 1,58,000? Rohan is wrongly debited. We have to credit it, removed. Then we have to credit Rohan correctly. 79,000 was the credit. Yes. So there is no debit. Debit will be suspense account debited 1,58,000. Suspense account debited 1,58,000. Clear? Yes. Next we can go into point number 5. Fifth point. What happens in fifth point? Okay, when we go into fifth point, here E. An amount of rent outstanding 13,000 in the previous year. Last year rent was outstanding 13,000. Had not been brought forward as an opening balance in the current year. Last year there was one rent outstanding, has not been brought forward only. So what will happen? What is the rent outstanding? Rent outstanding is a liability. Liability will have credit balance. Liability should have credit balance. They did not bring it to this year. So no entry. So now we have to bring it to this year. So we have to write to rent outstanding account. The rent outstanding was 13,000. Now, this they have not done. What will you debit? What will you debit? Only credit is the mistake. So, debit will be suspense account debited 13,000 to rent outstanding. Is it clear? Yes. Let's go further. Let's go further. F. Fresh cash introduced by the proprietor 44,000 was not passed in ledger account. Was not posted in ledger account. Fresh cash introduced. What is the entry for this? Cash account debited to capital account. Cash account debited to capital account. How much? 44,000 he has introduced. 44,000 he has introduced money. Okay, cash account debited to capital account. So now what happens? Cash account debited to capital account. Now what happens? What is it? The mistake? Not posted in ledger account. It was not posted only to the ledger account. So no posting. But no posting of what? So can we tell the wrong entry is actually cash account debited 44,000. They said amount brought by proprietor is not posted. That means it has not gone into capital account. So rectification entry will be capital account you have to post to capital account 44,000. They said amount brought by proprietor not posted. That means they're talking about the owner. So now the debit will be suspense account debited 44,000 to capital account. Suspense account debited 44,000 to capital account. Is this clear? Yes. This should be it with this particular question. You can take down the solution. This is the first part of the solution and then this is the second part of the solution. Yes. Now we have one more question there. Let's go to the question number 4. The total of the debit side of SR Limited as at 31st March 2023 is 2,92,000. Okay, they have given, and that of the credit side is 1,80,800. So clearly we know that the trial balance is not tallying. If it's not tallying, what happens? That means there are errors. Difference goes into suspense account. After detailed checking, the following errors were identified. Can you see? Opening stock, correct figure is 12,000. Figure in the trial balance is 8,000. Salary, correct figure is 28,800. Figure in the trial balance is 50,400. Accounts receivable, that means trade receivable, correct figure is 83,200. In the trial balance it's showing 126,400. Trade creditors, correct figure is 64,800. In the trial balance it's 54,400. You are required to ascertain the correct total of the trial balance. Okay, correct total of the trial balance that we have to find out. Now, trial balance, let's try to understand. Okay, question number 4. Corrected trial balance. Corrected trial balance. So now we already have a trial balance which they have prepared, but obviously that trial balance is not tallying. They have prepared the trial balance, but obviously trial balance is not tallying. You know the format of the trial balance. What is the format of the trial balance? You have serial number, particulars, LF, debit in rupees, credit in rupees. Debit in rupees and credit in rupees. Is this clear? So this is the corrected trial balance. Now, if you see, what is the debit total? They said debit side total is 2,92,000. So existing total before rectification, the total is 2,92,000. And credit side 1,80,800. 1,80,800. Now, one by one, we'll try to rectify things. Okay, rectification. Opening stock was 12,000. Correct figure is 12,000. They have put it as 8,000. That means they have put less. So rectification, so rectifications, we are supposed to do the rectifications. Now, understand this. Opening stock, okay, we have put more or we have put less. We are supposed to put 12,000, but they have put only 8,000 into the trial balance. So opening stock 12,000 minus 8,000. So we still have to put 4,000 into the trial balance. Stock is a debit balance, debit item, asset it is. So 4,000 into the trial balance. Next, salaries. See what happened with salaries. 28,800 is the salary. They have put 50,400. They have put extra salary. Okay, salary, they were supposed to put something. They have put extra salary. So what will we do now? We have to reduce it. So salary 50,400 minus 28,800. So 50,400 minus 28,800. 21,600 we have to reduce it from the debit side. They have put extra salary. We have to reduce it from the debit side. Okay. Accounts receivable. Accounts receivable means what? Trade receivable. Trade receivable, what happened? They were supposed to put how much? 83,200. They have put 126,400. They have put extra. So accounts receivable. We have 83,200 and 126,400. So 126,400 minus 83,200. They have put extra. Accounts receivable is an asset. Asset will have debit balance. So if you put extra into the debit balance will increase. So what should we do now? We should reduce the debit balance. So now what happens? 126,400 minus 83,200. 43,200 you are going to reduce. 43,200 you are going to reduce. Now if you see the next error, trade creditor. Creditor is a liability. 64,800, but they have put 14,400. They have put less. So what should we do? Creditors 64,800 minus 14,400. So 64,800 minus 14,400, 50,400. 50,400 is put into creditors. So what we have to understand over here, we have to understand one thing. Opening stock, asset, they put less, so we'll put it into the trial balance. We'll debit it. Salary, expense, debit balance, they have put extra debit balance, so reduce the debit balance. Accounts receivable, asset, debit balance, they have put extra debit balance, so reduce the debit balance. Creditors, liability, they have put credit balance, but they have put less credit balance, so you have to put more into the credit side. So now when you check this, you will get 2,92,000 plus 4,000 minus 21,600 minus 43,200. You will get debit balance as 2,31,200. Going into the credit side, 180,800 plus 50,400, that is also 2,31,200. 2,31,200. This is the corrected trial balance. This is your solution. Any problem with this? No. These are the kind of questions which are there. Okay. Yes. Let's go further. There is an unsolved case. Okay. This can also be created into a question for you in the exam. Unsolved case, they have told Mr. Rishan Chowdhury is a trader engaged in retailing of computer hardware items. Okay. The name of his business is Technolink, which is a proprietary form of business. The business procures different items and goods of trade from a number of wholesalers, both cash as well as credit. The primary customers of Technolink were different academic institutions like schools and colleges. The books of accounts of the business are maintained by two accountants, and at the end of the financial year 22-23, till here, whatever they have told, story they are telling, what they are doing, from where they are purchasing, how they are purchasing, all that story they have told, to whom they are selling also they have told. Okay, after balancing the ledger accounts, they drafted the trial balance to check the arithmetical accuracy of the books. Okay, now our story starts. They prepared trial balance, but to their discomfort, the trial balance did not tally and reflected excess credit of 37,200. Okay, so what we have to understand now, chapter number 1, unsolved case. First information that we have is trial balance excess credit. Trial balance has excess credit. More credit they have put into trial balance. Clear? Excess credit. So what will happen now? What will happen? The difference 37,200 excess credit. Difference was posted to suspense account. Credit side is more. So therefore suspense account will have 37,200 debit. 37,200 will be the debit balance in the suspense account. Excess credit. So what will you do? Excess credit. So you'll put debit balance into the suspense account. Okay. On critical checking of the books, the accountants could identify the following 3 errors. They have identified some errors. Okay. Now, first one. Purchase of 4 office chairs costing 10,000 each and 2 office tables costing 40,000 each from Godrej Interior has been passed through purchase day book. Okay, very common error. So what we can do? We can pass a rectification entry for this. So first thing that we are going to do is rectification. Rectification. See the first one. What is the correct entry? What is the wrong entry? And what is the rectification entry? Correct entry, wrong entry, and rectification entry. Now, purchase of office chairs and 2 office tables from Godrej Interior. So now what happens? Purchase of chairs. So can I tell furniture account debited to Godrej? They have purchased it from Godrej. Furniture account debited to Godrej. Furniture, how much they have purchased? 4 office chairs and 2 tables. So 4 into 10,000 plus 2 into 40,000. They have purchased 4 office chairs, 10,000 each, 2 office tables, 40,000 each. So the entry is 1 lakh. 1 lakh. Furniture account debited to Godrej, 1 lakh. Is it clear? What is the wrong entry? What is the wrong entry? The wrong entry is, okay, understand the wrong entry. The wrong entry is they have purchased it, put it through purchase day book. So the entry that they have passed is purchase account debited 1 lakh to Godrej 1 lakh. So the rectification entry will be, you have to record it as per furniture. So furniture account debited 1 lakh to purchases 1 lakh. Furniture account debited 1 lakh because furniture is not debited, and purchases has to be credited because it is wrongly debited. It is wrongly debited. Clear? Next we will go into the second error. First error rectified. Next, second error. Purchase of USB drives. USB drives, they use pen drives basically, worth 26,800 has been posted to supplier's account as 12,000. Now, purchase of USB drives. Can you see the name of the company? What they are doing? Computer hardware items. So computer is not, the USB drive is not asset for you. It is purchase. They have purchased it for 26,800. Correct? So the correct entry is purchase account debited 26,800 to creditor 26,800. Yes. Purchase account debited to creditor 26,800. What is the entry they have passed? Posted to the supplier as 12,000. Posted to the creditor as 12,000. So the wrong entry is purchase account debited 26,800 to creditor 12,000. To creditor 12,000. So what is the rectification entry now? Purchase account correctly done, no problem, leave it. Creditor little less, so the rectification entry will be to creditor. How much we have not credited to creditor? 26,800 minus 12,000. So 14,800. 26,800 minus 12,000, 14,800. What will be the debit? Debit will be suspense account debited 14,800. So one-sided error, suspense account will always be there. Is it clear? Yes. Let's go further. Third one. A check worth rupees 80,000 received from ABS Higher Secondary School has been dishonored but debited to allowance account. Check is dishonored. Okay. Received from whom? ABS Higher Secondary School. When you get the check, we know the entry. When the check is dishonored, what is the entry? When check is dishonored, ABS School account debited to bank account. When we get the check, we will write bank account debited to ABS School. Now the check has bounced. So it will be 80,000. ABS School account debited. ABS School account debited to bank account. Is this clear? Yes. Has been dishonored but debited to allowance account, they said. We should have put to ABS School. No. They have put it to allowances account. So the entry will be allowance account debited 80,000 to bank account. This is the mistake that they have done. So the rectification entry will be, we should have put it to what? ABS School. So we will put it to ABS School only. ABS School account debited 80,000 to allowances account. To allowances account 80,000. ABS School account debited 80,000 to allowances account 80,000. Because we have put into the wrong account, we have rectified. These are the three rectification entries. Next, we will see what happens. Mr. Chowdhury, himself an honor graduate in commerce with specialization in accounting from City College, Kolkata, himself sat with the accounts. Okay. He only sat and tried to rectify. Okay. He managed to identify two more errors that existed in the books but were missed by the accountants. Okay. Two more errors we have to rectify now. He identified that total of the returns inward book has been cast short by 40,000. And that, okay. First error we will see. Totals of the return inward book cast short. So let's say fourth error we have returns inward is what? Sales return. Returns inward is sales return. So sales return account debited 40,000 to sales return account debited 40,000 to total has been cast short. So to whom? We don't know. But who usually returns? Debtor. To debtor 40,000. This should have been the correct entry. What have they done? What have they done? The wrong entry. Now what will be the wrong entry? Sales return account debited to debtor 40,000. What is the wrong entry? The wrong entry is sales return account debited nothing. To debtor is done. To debtor 40,000. Can you see it is cast short? Has been cast short. Total has been cast short 40,000. That means 40,000 is missing in sales return. So the rectification entry will be sales return account debited 40,000 to suspense account. Sales return account debited 40,000 to suspense account. Is it clear? Yes. This is your rectification entry. Then what is the other error he has found out? 1,50,000 paid for making showcase. Showcase means furniture of the shop has been charged to wages account. Showcase is furniture. They have charged it to wages account. So the correct entry should have been furniture account debited 1,50,000 to bank account or cash account. We don't know how they have paid. What is the wrong entry? They have treated it as wages. Wages account debited 1,50,000 to bank account. 1,50,000. So our rectification entry will be, we have to put it to furniture. So furniture account debited 1,50,000 to wages account 1,50,000. Furniture account debited 1,50,000 to wages account 1,50,000. Clear? However, he too was still uncertain whether he was able to locate all the errors. Okay. He is also not sure whether he found all the errors or not. Okay. Now we'll see what happens. First, develop the rectification entries that would be recorded in the journal of Technolink. So what are the rectification entries? First, we have one rectification entry over here. This is our rectification entry for the first error. Second error. Can you see the rectification entry for the second error? Yes. Third error. Can you see this is the rectification entry for the third error? Fourth error. This is the rectification entry for the fourth error. Okay. Fifth error. This is the rectification entry for the fifth error. Is it clear? Yes. Now what we have to go, we'll see what they have asked more. Ascertain by what amount would furniture account change after necessary rectifications are carried out. How much will furniture account change? Okay. Second thing that they have asked, furniture. Can you see in our rectification entries? First one is, there is a furniture debited for 1 lakh. So, first rectification entry, furniture increase by 1 lakh. Okay. We can tell rectification number 1. In the second rectification, there is no furniture. In the third rectification, there is no furniture. In the fourth rectification, there is no furniture. In the fifth rectification, again you have one furniture of 1,50,000. So again, furniture increase 1,50,000, rectification number 5. So totally 2,50,000 is increase in furniture. 2,50,000 is the increase in furniture. Is this clear? Yes. Let's go further to the third one. State whether all the errors that existed in the books have been identified. They are telling state whether all the errors are identified. If not, what is the amount of such undetected errors? Now what we have to do? They said that suspense account was 37,200. So third situation, what we can do is prepare the suspense account. If suspense account is gone, that means there is no suspense in life. That means there are no errors. Correct? Okay. So if suspense account is gone, that means there are no errors. So you can write suspense account and then go into the difference. They said excess credit. So we can write suspense account will have debit balance to excess credit 37,200. Correct? Excess credit was 37,200. So now what we are going to do? 37,200 excess credit. Now what we are going to do? Okay, go into each error. First error, is there any suspense account in the first error? Can you see suspense account here? No, not there. Second error, do we have suspense account? Yes, suspense account is debited to creditor. Suspense account is debited to creditor. So you'll write suspense account debited to creditor. 14,800. Suspense account debited to creditor 14,800. Now third what happens? ABS school to allowances account. There is no suspense there also. Fourth one, what happens? There is suspense. Sales return to suspense 40,000. Sales return to suspense 40,000. So you can write by sales return 40,000. Now, after that, fifth entry, there is no suspense at all. So now if you check 37,200 plus 14,800 minus 40,000, there is by balance carried down 12,000. Therefore, what we have to understand, therefore, still there is debit balance in suspense account of 12,000. Still there are debit balance in suspense account of 12,000. Therefore, still trial balance has excess credit of 12,000. Still trial balance has excess credit of 12,000. This is the solution. This is the solution. I hope it's clear. Any doubt with this? Okay. Now there is one more, fourth. What can be the possible reasons for which trial balance is still not tallying? What are the reasons? What can be the reasons? Okay. Reasons for trial balance still not tallying. That is, there can be errors of commission, which is one-sided. If it is two-sided, trial balance will not get impacted. If it's one-sided error, trial balance will get affected. That means debit and credit, both you made mistake, trial balance is not affected. But debit you put, but credit you did not put, or credit you put, or debit you did not put, or debit you put more, okay, or credit you put more, or debit you put less, or credit you put less. All one-sided errors will cause trouble. Clear? What about errors of omission? Errors of omission also. Partial omission. These are the two reasons. Complete omission will not trouble the trial balance. You did not put the entry, that means you missed debit also, you missed credit also. But if you missed only debit, then there is a problem. Okay, that will be the reason for trial balance still not tallying. Is this clear? This is your solution. This is your solution for the case. So we have solved the unsolved case also. Let's go further. Okay, students. So what we will do next is we will go through the June 2024 paper. And also the December 2023 paper. Okay, where is it? Yes. December 2023 paper. Okay, both of these papers, the last two attempts of your CMA Inter, okay, both of these papers, what we will do is, we will solve the questions from chapter number 1. Right now, we just finished the practice questions of chapter number 1. We will solve the examination questions of chapter number 1. Clear? Yes. Now, going into June 2024, there was one 7-mark question that was asked. There is a 7-mark question, question number 2A. Let's see how it goes. On 31st March 2023, in the trial balance of Singhania Brothers, balance of machinery account appears as 19,80,000. Balance appears as 19,80,000. Okay. Yes, 19,80,000. The firm follows rate of depreciation on machinery at 15% per annum on WDV method. On scrutiny, it was found that machinery appearing in the books on 1/4/2022 at 4,50,000 was disposed of on 30th November 2022 in exchange for a new machinery costing 3,50,000. So what did they do? They gave away one machine and they took another machine. They exchanged. You are required to calculate total depreciation to be charged in the P&L. Then they also asked profit or loss on exchange, book value of the machinery in balance sheet. Now, what we are supposed to do? 31st March 2023, in the trial balance, we have a machinery that appears at 19,80,000. The firm follows 15% rate of depreciation, WDV. Okay, on scrutiny, it was found that machinery appearing in the books on 1/4/2022 at 4,50,000 was disposed. So what we are supposed to do? They have given the closing balance. So now we are supposed to calculate. Understand this. What is the June attempt, they have asked this. June 2024. June 2024. Now, let's try to understand. Question number 2A. 7 marks. Now, understand this. They have given us, okay, they have given us the balance on 31st March 2023, the balance of machinery. Can you see balance of machinery on 31st of March 2023? Balance of machinery on 31st March 2023 is 19,80,000. 19,80,000. Clear? Yes. Now what they told, the firm follows rate of depreciation 15% per annum and all that. On scrutiny, it was found that machinery appearing in the books on 1/4/2022 at 4,50,000 was disposed on 30th November 2022 in exchange of new machine costing. So now what happens? Machine on 1/4/2022 was 4,50,000. Now, machine on 1/4/2022, it was 4,50,000. 4,50,000. Clear? Now, when did they exchange this? They have exchanged, disposed on 30th November 2022. 30th November 2022, they have exchanged. Therefore, depreciation till 30th November 2022. Depreciation till 30th November 2022 will be what? 4,50,000. They are following WDV method into 15% per annum into 15% into 4,50,000 into 15% into what is the rate? What is the period? April, May, June, July, August, September, October, November. 8 months. Okay, 8 months. So into 8 divided by 12. So 4,50,000 into 15% into 8 divided by 12 will be 45,000. 45,000 will be your depreciation. So when you remove 45,000, you will get 4,05,000. When you remove 45,000, you will get 4,05,000. This is the WDV on 30th November 2022. On the date you have exchanged, the WDV is 30th November. WDV is 4,05,000. Clear? In exchange for a new plant costing 3,50,000. What did you get? The WDV is 4,05,000. New plant received is how much? New plant received. New plant received is 3,50,000. So you can see 3,50,000. So basically, I gave one plant which was worth 4,05,000 in the books, and I got a new plant which is 3,50,000. So now 4,05,000 minus 3,50,000. 55,000 is loss on exchange. 55,000 is loss on exchange. This is what they have asked. Okay, so what we have to understand, machinery was there 4,50,000 on 1/4/2022. 1/4/2022, did I exchange? No, I did not exchange on 1/4/2022. When did I exchange? I exchanged on 30th November 2022. So what will I do? 4,50,000. Calculate depreciation till 30th November 2022. Till 30th November 2022, when I'm calculating depreciation, that is only 8 months, I got 45,000. I got 45,000. That means on the date of exchange, the value of the machine was 4,05,000. I had 4,05,000 ka machine. I gave it and I got a new machine of 3,50,000. That means I have loss on exchange. That was also one of the questions that they have asked. Okay, loss on exchange. Is it clear? Okay, so now loss on exchange is 55,000. What else they have asked? Total depreciation to be charged in the profit and loss account. Okay, now understand this. We had on 31st of March 2023. 31st of March 2023. We had a value. What was the WDV? What was the WDV? Can you see 31st of March 2023? They said the trial balance showed balance of machinery account at 19,80,000. So we have 19,80,000. Is it clear? 19,80,000. Now, out of this machinery, which is 19,80,000, what happens after that? Okay, there is one which is going away, and one which is coming in. Can you see? On scrutiny, it was found that machinery appearing in the books, one was disposed of and one new machinery was taken. So now what we are supposed to do? WDV 19,80,000. Okay. From this, we are supposed to remove the machinery. Which is exchanged and add the machinery which is. We have this WDV 19,80,000. This is okay at the end of the year. This is on 31st of March 2023. 31st of March 2023, we have 19,80,000. Do you agree? In this 19,80,000, we have old machine as well as new machine. We have old machine and we also have new machine. 19,80,000. In that, old machine is also there, new machine is also there. New machine we already know. New machine we have already seen. New plant purchased is 3,50,000. New machine is 3,50,000. Clear? New machine is 3,50,000. So out of 19,80,000, one machine is gone. Okay, that means old machine will be 19,80,000 minus 3,50,000. So we have 19,80,000 minus 3,50,000, 16,30,000. 16,30,000 is the value of the machine. Are you getting my point? So we have 19,80,000 in the trial balance. One machine went, one machine came. Machine which went, that is already gone. Machine which came is there. So now out of the total machine which is there, old machine which was there for the entire year, on this we will calculate 15% depreciation. On this we'll calculate 15% depreciation. So the depreciation 15% means 16,30,000 into 15%, 2,44,500. On this new machine, you will calculate 15% depreciation, but you will calculate only for 4 months. So 3,50,000 into 15% into 4 divided by 12. This becomes 17,500. Therefore, our total depreciation is actually 2,44,500 plus 17,500 plus on the old machine 45,000. So total depreciation will be 244,500 plus 17,500 plus 45,000, 3,07,000. 3,07,000 will be the total depreciation according to what they have asked in the question. Can you see total depreciation to be charged to P&L? Profit or loss on exchange. This is done. This is also done. Book value of the machinery on 31st March 2023. They are telling what should be the book value now. Now, book value they have asked. What is the machinery value right now? Machine value is 19,80,000. 19,80,000. From that, remove depreciation on old machine. 4,50,000 is fully gone. No, anyways, it's removed. Depreciation on old machine will be 2,44,500. Then remove depreciation on new machine. Depreciation on new machine will be 17,500. Now what you are going to do? 19,80,000 minus 244,500 minus 17,500. You have 17,18,000. 17,18,000 is the value of machine on 31st of March 2023. Now your question would be, sir, why haven't we removed this 45,000? Because the entire machine is only removed, no? After removing that machine only, it is 19,80,000. So out of 19,80,000, you have only the old remaining machine and the new machine which has come in. So on the old remaining machine, 244,500. On the new machine that has come, 17,500. So the remaining value of the machine is 17,18,000. The old machine is already gone on 30th of November itself. This is your solution, and this is what they have asked. Quickly have a look at it, and then we can go into the next question. Can we go further? Okay, this is your solution. 16 lakh 30. How did we get 16 lakh 30? 1980 minus 350. Yes, at 15% of that. 1630 into 15% depreciation rate. Here only 4 by 12. 3 lakh 50 into 15 into 4 by 12. January, February, March, April. Plus 244,500. Yes, this should be a solution, guys. Easy 7-mark question in the exam. They have asked it for 7 marks in the 2022 exam. Yes, June 2024 exam. Now, let's go further. One more question they have asked from basics. In this particular attempt, they have asked one more question from basics. The trial balance of Rajesh Brothers on 31st March 2023 did not agree. In order to close the books, the accountant placed the difference of 26,700 debit to suspense account for necessary adjustment in the next period. Okay, on 25th April 2023, the following errors arising in 2022-23 were detected. Now, give journal entries to rectify the errors and prepare suspense account. When are they seeing the errors? They have seen the error in the next accounting period. The mistake was on 31st March 2023. They have already put the difference to suspense account. On 25th April 2023, the following errors were detected. So we had 3 stages of rectification. Rectification before preparation of trial balance, rectification after preparation of trial balance, rectification in the next accounting period. So now, right now, we are actually in the next accounting period. This is rectification in the next accounting period that is happening. Clear? Yes. Now, what we have to do? We have seen how to solve rectification questions. Question number 2B, 7 marks. Question number 2B, which is asked for 7 marks. So now what we are going to do is 3 columns as always. Keep your correct entry, keep your wrong entry, and keep your rectification entry. Correct entry, wrong entry, and rectification entry. Now, first one. Let's go to the first one. 4,500 allowed as cash discount to trade debtor was not debited to the discount account. Tell me what is the entry for 4,500 discount allowed. So the entry is discount allowed debited 4,500 to debtor account 4,500. Discount allowed debited 4,500 to debtor account 4,500. Clear? What is the wrong entry? Was not debited to the discount account. Not debited only to the discount account. So the wrong entry they have written only to debtor 4,500. So the rectification entry, discount allowed has to be debited. But we are in the next accounting period. When we are in the next accounting period, if there are any expenses or incomes in our rectification entry, we don't use that. Instead, what we do, we write P&L adjustment account debited 4,500 to suspense account 4,500. To suspense account 4,500. That was your first one. Next, we'll go into the second rectification entry. We'll go into second rectification entry. Credit sale of 6550 was posted to the credit of the customer's account as 5650. What is the entry for credit sale? Credit sale entry is debtor account debited to sales account. Debtor account debited to sales account 6550. So we know 6550 is the sale amount. Now, what is the wrong entry? Posted to the credit of the customer account as 5650. They didn't even put it to the debit of the customer. They have posted to the credit of the customer as 5650. So now the entry is they have written two sales, that is no problem, 6550, and they have put it to debtor 5650. They have put it to the credit of the customer as 5650. So what will you do now? Debtor has to be debited, not debited, debited. So you will write debtor account debited 6550 plus 5650. So 6550 plus 5650, 12,200. 12,200. Debtor account debited. Clear? 2. Debtor account debited 2. 2 what? Only debit we have. We don't have credit. So credit entire thing will go to suspense account 12,200. Is this clear? Instead of debiting the debtor, they did not even debit wrong amount. They have credited the debtor with the wrong amount. Next. Machine purchased on 1st October 2022 for 50,000 in cash was posted to the purchase account in the ledger. Rate of depreciation was 15%. What did they do? They have purchased machinery. That is not recorded. When did they purchase? 1st October 2022. So the correct entry will be over here. Machinery account debited 50,000 to cash account 50,000. Machinery account debited 50,000 to cash account 50,000. That is the correct entry. Correct? Now, after that, what we are going to do? After this, machinery account debited to cash account 50,000. Next. What next? Depreciation is there. It is purchased on 1st October. So there should have been an entry. Depreciation account debited to machinery account. And that is going to be 50,000 into, what is the rate of depreciation? 15% per annum. So 15% into 6 divided by 12. So 50,000 into 15% into 6 divided by 12 will be 3750. 3750. What is the wrong entry? What is the wrong entry? Can you see over here? Posted to the purchase account in the ledger. Instead of machinery account, they have posted to the purchase account. So the wrong entry is purchase account debited 50,000 to cash 50,000. They have made this mistake. This is the mistake that is done. Rectification entry. Is machinery recorded? No. Machinery account debited. Should you debit? Yes, 50,000. Is cash account recorded? Yes, cash is credited. So now we will write to purchase account 50,000. Purchase has to go. This is the rectification entry. And this depreciation entry is not passed only. So the rectification entry for that will be depreciation account debited 3750 to machinery 3750. Is this clear? Depreciation account debited to machinery account 3750. That is your error. Fourth error, sales book was overcast by 10,000 in February 2023. Now, guess what? You have made some mistakes here. You cannot write purchases. Why? Because we are in the next year. So here you will write P&L adjustment. You cannot write depreciation. Why? Because we are in the next year. We will write P&L adjustment. Why are we writing machinery? Machinery is not a nominal account. That you can write. Next, going into the fourth rectification. 1, 2, 3, 4. Yes. Next, sales book was overcast by 10,000. Sales book, they have put 10,000 more. So if I write, correct entry is debtor account debited 10,000 to sales account 10,000. Wrong entry is debtor account debited 10,000 to sales 20,000. Sales book was overcast 20,000. So rectification entry, what will it be? You will write sales has to be removed. So you can't write sales. We are in the next year. So you'll write P&L adjustment debited 10,000 to suspense 10,000. P&L adjustment debited 10,000 to suspense account 10,000. This should be your rectification entry. Is this clear? These are your rectification entries carrying 7 marks in June 2024 exams, inter exams. Anybody has any doubt? No. Now, you can also see for your verification, if you prepare suspense account, if they would ask in the same question to prepare suspense account, in this question they have not asked, but in case they would ask suspense account. Okay. Give journal entries to rectify this. Oh, they have asked actually. They have asked prepare suspense account also. Can you see the difference for 26,700 debit? Okay, excess credit was there. They have put 26,700 into debit. So what we will do in suspense account? We will write to excess debit. Sorry, excess credit in trial balance 26,700. Now after rectifying the errors, this should become 0 if we have rectified all the errors. Clear? See the first rectification entry. Do we have suspense account in the first rectification entry? Yes, it is credited by 4,500. So we'll write by P&L adjustment account 4,500. Next, after that, next you have suspense account again credited by debtor. So you'll write by debtor account second rectification entry 12,200. Third rectification entry, you can see your third rectification entry, there is actually no suspense. Machinery account debited to P&L adjustment account debited to machinery. There is no suspense there. Fourth rectification entry, P&L adjustment account debited to suspense account. So we will write by P&L adjustment account 10,000. Now if you check the balance will automatically become 0. So 26,700 minus 4,500 minus 12,200 and minus 10,000. This suspense account does not have any balance anymore. Why? Because all the errors are rectified. All the errors are rectified. 7 marks, 4 rectification entries they have asked, and 1 suspense account also they have asked you to prepare. Is this clear? Yes. Now, apart from that, I think in June 2024, we don't have any basics question. It's all other chapters only. Yes. Let's move into December 2023 exam. December 2023 exam, they have asked one question for 7 marks at the starting itself. One 7-mark question is asked where they have asked you to prepare BRS, Bank Reconciliation Statement on 30/9/2023. Now here, on 30th September 2023, Shri Sachin Chatterjee's cash book shows that he had an overdraft of 400 in his current account. He had what? Overdraft balance of 400 in current account. Okay. At the bank. On checking the cash book with bank statement, you find the following. Overdraft means what? He has taken more money. Now, if you see, they told prepare adjusted cash book and then prepare bank reconciliation statement. Adjusted cash book means what we are going to do? If there are some things which we can rectify in the cash book itself, we will rectify it. After that also, if we are not able to reconcile, then we will prepare bank reconciliation statement. So this was question number 2A. This was question number 2A, December 2023 exams. Okay, you have question 2A. Question 2A. Now, what we have to understand, first we have to prepare cash book. Okay, adjusted cash book. Because already cash book is prepared, whatever is under our control, which we can prepare, only the bank column, because we are preparing bank reconciliation statement. Bank column. So now, if you notice this, on 30th September 2023, Shri Sachin Chatterjee's cash book had an overdraft of 400. There is overdraft of 400. Overdraft means what? We have to pay money. So 31st, we can write over here by balance brought down 400. Overdraft. Overdraft means it's a liability. Liability will have credit balance. Okay. Now, checks issued 1,500 has been entered in the cash book but not presented to bank. So it is entered in the cash book but it is not presented to the bank. So this will go into BRS. We can't make any changes in cash book. We have entered correctly. Dividend amounting to 150 had been directly deposited into bank. Yes, dividend we have received. It is directly deposited into bank. We have not entered in the cash book. This we can rectify. So dividend, if we get, money comes in, cash account debited or bank account debited to dividend account 150. Clear? Next, bank had credited interest on bank deposit of 170, but the same has been debited in cash book on 6th October 2023. What you have done? Bank has given you interest. Bank has credited interest. Bank has given you interest, but you have not debited in the cash book. So what we have to do? Bank account debited to interest account. Bank account debited to interest account 170. Clear? Next. Bank charges of 50. This is also rectified. Bank charges of 50 shown in the bank statement, but the same has not been entered in the cash book. Enter it. Bank charges means money will go expense. Bank charges account debited to bank account. So you will write by bank charges 50. Next, a check is issued to NK Chatterjee for 50 rupees was replaced when out of date. It was entered again in the cash book. No other entry being made. Both the checks were included in the total unpresented checks shown above. Now what has happened? What is the bouncer here? Check issued to NK Chatterjee. Clear? Check issued was how much? 50. Was replaced when it was out of date. It was entered again in the cash book. No other entry being made. Both the checks included in the total of unpresented checks shown above. So what we should do when we are showing this checks issued 1,500? It is not 1,500. It is 1,450. Why? Because one check, which is 50 rupees, it is issued twice. Okay, it is issued twice. So what we are going to do? 1,450 is the check. So 50 rupees check. Check is issued. Okay, it was replaced also. Was entered again in the cash book. No entry, no other entry being made. That means first check was replaced. We entered again in the cash book. Both the checks were included in the unpresented checks. So what should I do? I should remove the check. When I issue check, what should be the entry? Bank account. From bank money goes when I issue the check. Chatterjee account debited to bank. 2 times I passed. Chatterjee account debited to bank. Chatterjee account debited to bank. So now what I should do? I should remove one of them. Bank account debited to Chatterjee 50 rupees. Bank account debited to Chatterjee 50 rupees. Next, the receipt side of cash book has been overcast by 20. Receipt side of cash book has been overcast by 20. Receipt side more. Receipt side is what? Debit side. Overcast. So what we will do? We will write by excess receipts. We will credit it 20. We will remove 20. Clear? Again in our control. A check of 20 had been entered as receipt in the cash book instead of as a payment. 20 rupees check. We had issued it as receipt in the cash book instead of payment. We have debited the cash book instead of crediting the cash book. So what we have to do? We know rectification. So by expense or by creditor 20 plus 20 40 rupees. 20 plus 20 40 rupees. Check for 20 has been entered as a receipt in the cash book. Now it is actually a payment. So what should you do? Instead of payment, you have put receipt. First you remove the receipt, then you put the payment. Double. Clear? Check drawn for 8 rupees has been incorrectly entered in the cash book as 88. Check drawn, that means check given. By mistake, you put it as 88. So what will you do? To excess payment or excess credit 88 minus 8, 80 rupees. 80 rupees extra we have put. Clear? Now we get the cash book. Now check the cash book. What is the situation? We have 400 plus 50 plus 20 plus 40 minus 150 minus 170 minus 50 minus 80. So our balance is right now 60 rupees. So we can write 2 balance carried down 60 rupees. 60 rupees is our balance. Clear? So when I'm preparing bank reconciliation statement, we start with OD balance as per cash book. OD balance as per cash book 60. We have only one item. To be put into BRS. Checks issued 1,500 has been entered in the cash book, but had been presented into bank 1,000. Presented to bank only 1,000. So 1,000 checks issued. If I issue check, what will happen to the cash book balance when it is OD? When it is OD balance in cash book, when I issue check, what will happen? The OD balance will increase. It will increase. Passbook, there is no effect, so we have to decrease it. So minus check issued not presented for payment. Checks issued not presented for payment 1,450. Remember that 50 rupees extra, we have to remove that. Yes, 1,450 minus 1,000, so 450 rupees. So 60 minus 450 rupees, you are getting 390 negative. You started with OD. OD balance. Remember, again, if you are confused, why we have minused it? When we issue check, it is OD balance. OD balance will increase, so you will decrease it. 390. Now 390. When you start with OD balance and you get negative, negative of OD is what? Positive. Positive means it is just balance as per passbook. If you start with normal balance as per cash book, you get negative. That means negative of normal is what? OD. So it will be OD balance as per passbook. Is this clear? This is one BRS question which was asked in December 2023. First you have to prepare adjusted cash book, then you have to prepare BRS. Clear? We'll see what else they have asked from chapter 1. Then they have asked final accounts, bills of exchange, incomplete records, partnership, branch accounts, fire insurance, AS10, AS12, partnership again, basics. In this December attempt, there was only one calculation based question in your descriptive part. So they have asked one more question, that is basically your basics. Remember the starting basics which we have discussed. Explain the following concepts. They have asked for 5 marks. Okay, full disclosure concept. Full disclosure concept means what? All items will be disclosed when preparing books of accounts. Full disclosure concept means all items will be recorded when we are preparing books of accounts. What is consistency? Consistency. Whatever policies are chosen will be applied consistently from period to period. Will be applied consistently from period to period. This also is there in our basics video. Okay, materiality. Materiality means what? What is materiality? Wait 1 second. We'll delete this page, extra page. Yes, materiality. Understand this. What is materiality? Materiality, what will we do? In materiality, only items that are required for decision making to be recorded. Only items which are required for decision making should be recorded. That means don't put everything into your books of accounts. Only things which you feel, when you're passing entries and all, only which you feel, what you will disclose to the reader, only things which you feel are important, you will show to the reader. For example, we had discussed in our basic video that if at all we hire an employee, we will not tell that. But when we pay salary, we will inform. If employee comes late, we will not put it in our balance sheet. But if employee comes late and we charge penalty on that employee, that will be there impacting our financial statement. Clear? Conservatism. What is conservatism? Conservatism. That means provide for all expected losses. All future losses should be provided for. Future incomes, you don't worry. When you get the income only, you record it. But future losses, everything should be recorded. Clear? Explain the following accounting conventions. That was asked for 5 months. They didn't ask a numerical thing. Explain methods, criteria for selection and application of accounting policy. Selection and application of accounting policy. This also we have discussed in our basic video. There are 3 points. Prudence, materiality, and substance over form. Substance over form. It is there in your basic video also. It is there in Accounting Standard 1 also. Where we have discussed Accounting Standard 1, we have discussed this particular video. This particular point. Okay, how to choose an accounting policy. Now, that's it guys. This is chapter 1. We have solved the extra practice questions and the unsolved case also, and we have seen what has been asked in the last 2 examinations. In the next video, we'll go into next chapter and we will do the same procedure. Yes. Thank you guys. All the best for your exams. Yes, students, let's go to the next question. Next question is question number 3. Let's proceed to the next question. Question number 3. Question number 3, they talk about consignment. Hardik consigned to Jamal of Jabalpur 400 boxes of goods at cost of 5,000 per box and incurred the following expenses. What have they asked us to prepare? They have asked us to prepare consignment account in the books of Hardik and pass journal entries in the books of Jamal. So first what we are going to do, question number 3. We'll prepare consignment account consignment account in the books of Hardik. In the books of Hardik, consignment account. Okay. Then later on, we are supposed to pass journal entries also, but those journal entries are going to be in the books of Jamal. Hardik is the consignor, Jamal is the consignee. Clear? Yes. So let's begin here. Hardik consigned to Jamal 400 boxes of goods at 5,000 per box. Okay. For that, the entry is consignment account debited to goods sent on consignment account. Consignment account debited to goods sent on consignment account 400 boxes at the rate of 5,000 per box. 400 at the rate of 5,000 per box. That makes it 20 lakhs. 20 lakhs is the consignment value. Okay. Next, what did he incur? Following expenses were incurred: carriage 9,400, freight 34,800, insurance 1,25,000. Who incurred? Hardik incurred. So it's going to be consignment account debited to bank account. Consignment account debited to bank account. We can list those items: carriage 9,400. Then we have freight 34,800. Then we have insurance 1,25,000. 9,400 plus 34,800 plus 1,25,000. 1,69,200. Clear? Yes. On arrival of the boxes at Jabalpur, Jamal paid clearing charges of 31,200, cartage of 9,600, go down rent of 2,000. Who paid? Jamal paid. So the entry will be consignment account debited to Jamal account. Consignment account debited to Jamal account. Jamal has paid from his pocket. We are supposed to repay to Jamal. What and all he has spent on? Clearing charges 31,200. Okay. clearing charges 31,200, and he has also spent cartage 9,600, and go down rent 2,000, and he has spent 2,000 on rent. So you have 31,200 plus 9,600 plus 2,000, 42,800 is spent by Jamal. Okay. So goods went from here, we spent something, he spent something. Okay. On arrival of the goods at the godown, 60 boxes were found to be damaged and a sum of 3 lakh was realized from the insurance company by way of compensation. On arrival of the goods, see over here, at the godown, when the goods reach the godown only, they got to know that 60 boxes are damaged. So whatever we have spent till the goods reached godown, we have to calculate for abnormal loss computation. Clear? Our first working note will be working note abnormal loss. Abnormal loss. How many boxes are damaged? 60. So 60 boxes into rupees 5,000 per box. 60 boxes into 5,000 per box. Totally it is 3 lakhs. Okay. Plus proportionate expenses. Proportionate expenses of Hardik. Now Hardik has spent 169,200. Can you see he has spent 169,200 and he has spent this to send the goods. So that also should be added. Now 169,200 is spent. 169,200. But 169,200 is spent for 400 boxes. How much is it for 60 boxes? 60 divided by 400. 169,200 into 60 divided by 400. That gives you 25,380. 169,200 into 60 by 400, 25,380. Then proportionate expenses of Jamal till it reaches the godown. Till it reaches the godown. Till it reaches the godown, we have only these two expenses. This is godown rent. If the goods would reach or not reach, they would still have to pay this godown rent. So 31,200 plus 9,600. So 31,200 plus 9,600. He has spent this for how many boxes? 400. We need it for 60 boxes. 60 divided by 400. 31,200 plus 9,600 into 60 divided by 400. 6120. 6120. Clear? Now what happens? 3 lakh plus 25,380 plus 6120. 3 lakh 31,500. 3 lakh 31,500 is my abnormal loss. This is my abnormal loss. Okay. Insurance company gave us some money. Insurance company gave us 3 lakhs. So 31,500 will be debited to P&L. 31,500 will be debited to P&L. Is this clear? So now what should be the entry? Abnormal loss account debited to consignment account. Then later insurance company account debited to abnormal loss account. P&L account debited to abnormal loss account. So here I am going to write by abnormal loss 3,31,500. 3,31,500 is abnormal loss. After that, what happens? Let's continue to read. 240 of the remaining boxes were sold at a total price of 22 lakhs. 240 of the remaining boxes are sold at a price of 22 lakhs. What should be the entry? Who sold? Jamal. So Jamal's account debited to consignment account. So by Jamal's account 22 lakhs. by Jamal's account 22 lakhs. Clear? Then Jamal is entitled to an ordinary commission of 5% and 2% Del Crader commission on sales in addition to reimbursement of expenses incurred. So 5% plus 2% he is supposed to get commission. Del Crader commission is also there. So you'll write consignment account debited to Jamal account 22 lakhs into 7%. So 22 lakhs into 7%, 1,54,000. Total amount is 1,54,000. Okay. Then he sent Hardik the sales and all that, balance due to Hardik. He made the payment to Hardik also. Now finally we have only one thing remaining, that is to calculate closing stock. If you calculate closing stock on consignment, we are done with this question. Closing stock on consignment. Okay, closing stock on consignment, how are we going to do it? Simple. First we'll find out how many boxes are remaining. Okay, how many boxes are remaining? Total boxes sent. Total boxes sent were 400. Is that correct? Minus boxes spoilt 60. Boxes spoilt is 60. Minus, after that what you are supposed to remove? 400 boxes out. Out of that 60 got spoilt. 240 boxes are, I think, sold. Boxes sold was 240. Balance. How much is the balance now? 400 minus 60 minus 240. You still have 100 boxes remaining. 100 into the cost was 5,000. So 100 into 5,000, you have 5 lakh rupees. 5 lakh rupees is there. Okay, 5 lakh rupees is the cost. Plus proportionate expenses. Same thing what we did that time for abnormal loss. Proportionate expenses of Hardik. Proportionate expense of Hardik. Proportionate expense of Hardik, what was it? 169,200. So we are going to do that again. 169,200 into 100 divided by 400. So 169,200 into 100 divided by 400 gives you 42,300. Then we have proportionate expenses of Jamal. How much was Jamal's expenses that time? We saw go down rent is not going to be considered. 31,200 plus 9,600. 31,200 plus 9,600. 40,800 into 100 divided by 400. 4,800 into 100 divided by 400. 10,200. Clear? This gives you a total of 5 lakh plus 42,300 plus 10,200. 552,500. 552,500. This is the closing stock. Closing stock, what will be the entry? Closing stock on consignment account debited to consignment account. So you'll write over here by closing stock on consignment account 552,500. 552,500. Closing stock on consignment account debited to consignment account. At this point of time, you have nothing to do, just to calculate the profit. Calculate the profit, and that profit will go to P&L account. Yes. So you take 331,500 plus 22 lakhs plus 552,500 minus 20 lakhs minus 169,200 minus 42,800 minus 154, 7,18,000. The profit is 7,18,000. This is wrong. 713,680 it seems. Then what they have asked, okay, better to prepare Jamal's account also, so that we know how much money we are going to get from Jamal. So if you are preparing Jamal's account and going back to consignment account, Can you see the first entry here? This is goods sent on consignment. This is we spent the money. This Jamal has spent the money, 42,800. So what will be the entry? Consignment account debited to Jamal's account. Consignment account debited to Jamal's account. So you're going to write over here by consignment 42,800. Then we are going to write by consignment for the commission 1,54,000. Then what we have? He has to pay us to consignment 22 lakhs. 22 lakhs sales have taken place. He has to give us money for that. Clear? So basically 22 lakhs minus 42,800 minus 1,54,000. 20 lakh 3,200 he has to pay us, and they have told that he will pay it immediately. So you can write by bank account 20 lakh 3,200. 20 lakh 3,200. Is this clear? This one you can check. I think this one they got it right. 20 lakh 3,200. Next, only thing that they have asked is past journal entries in the books of Jamal. Okay, journal entries in the books of Jamal. Journal entries in the books of Jamal. Now what we have to worry about when we are passing journal entries in the books of Jamal? What is concerning Jamal? What he has spent from his pocket. So Jamal's first entry will be that 42,800 that he has spent from pocket. No, that will be his first entry. What he will write? Hardik has to pay me money. So Hardik account debited 42,800 to I paid money now from my pocket to bank account. Money went 42,800. Clear? Then Hardik has to give me commission. I have made sales. Hardik account debited 1,54,000 and commission is an income for me. So to commission account 1,54,000. Next, after that what happens? I have sold goods which belong to Hardik. I have to pay money to Hardik, but I got the money right now. So bank account debited 22 lakhs to Hardik. I am supposed to make payment to Hardik 22 lakhs. Finally, what's going to happen? The net amount I am going to pay to Hardik, and the entry for that is Hardik account debited. Hardik account debited to bank account, and we have it over here 20 lakh 3,200. 20 lakh 3,200. 20 lakh 3,200. Is this clear? Yes, these are the journal entries in the books of Jamal. So what now we have done? We have prepared consignment account in the books of Hardik, Jamal's account in the books of Hardik, journal entries in the books of Jamal. Clear? Yes. Let's go further, guys. The next question. Question number 4 from your practice questions. Okay. Question number 4. Azad and Arjun entered into a joint venture and opened a fast food shop during Durga Puja festival at Maddox Square in Kolkata. Okay. Location of their business they have told us. Let's go to the end of the question and find out. You are required to prepare memorandum joint venture account and also necessary ledger accounts in the books of Azad and Arjun. So what we are supposed to do in joint venture, if you remember, there were three types of maintenance. One, separate set of books are maintained. Second, separate set of books are not maintained, but each co-venturer keeps record of all his transaction, all the transactions of the venture. Third, each co-venturer keeps record of only the transactions which are concerned to him. In that case, what they do, each person will prepare memorandum joint venture account. Memorandum joint venture account means it's like a rough book. They are preparing that rough book so that they know what is the cost? I mean, what is the profit each person has made? So first what we will do, first we will read the question from the general angle and prepare memorandum joint venture account. First we will read the question from general angle and will prepare memorandum joint venture account. That time we'll get the profit. Then what we have to do, reread the question from Arjun's angle, reread the question from Azad's angle. Okay. Now, entered into a joint venture. Their profit sharing ratio is equal. Okay. Azad delivers stock of 50,000. So you can write over here, this is memorandum joint venture, 2 purchases. We have purchased goods, 50,000. Then we can go further. He also paid carriage charges amounting to 2,500. So you can write 2 carriage charges, 2,500. Next, Arjun incurred expenses on carriage and electricity for 6,500. 2 carriage and electricity, 6,500. Next, and receives cash from sales of 30,000. They have made sales, so you can write over here by bank account, or sorry, we can directly write by sales account, 30,000. It's a memorandum joint venture account. It's a rough book. Arjun took over the stock at an agreed value of 10,000. By Arjun, he took the stock at a value of 10,000. And Azad took over, at the end of the venture, Azad took over the remaining stock which was valued at 11,000. 10,000 stock Arjun took, 11,000 stock Azad took. By Azad account, 11,000. Clear? You are required to prepare memorandum joint venture account. This is it. Now what we are going to do? Okay. Our calculations will be 30,000 plus 10,000 plus 11,000 minus 50,000 minus 2,500 minus 6,500. We have a loss of 8,000. So what we will do? By loss, it will be shared between Azad and Arjun, 4,000, 4,000. Shared between Azad and Arjun, 4,000, 4,000. This is memorandum joint venture account. Next, what we are going to do? In the books of Azad, the necessary ledger account that you are going to prepare is joint venture with Arjun account. Joint venture with Arjun account. And in the books of Arjun, you are going to prepare joint venture with Azad account. Joint venture with Azad account. Okay, so now what we are going to do, read the question, things that are related to Azad, Azad will enter in his books. Things which are related to Arjun, Arjun will enter in his books. So now, if you check this question and reread the question again, you will be able to do it. Now, profit sharing ratio is equal. Azad delivers stock of 50,000. Azad is giving stock, so it goes from Azad's pocket. So Azad will enter it. He will write joint venture with Arjun account debited to purchases. From his purchases, it is gone 50,000. Clear? Then when we go further, he also paid carriage charges amounting to 2,500. So from his pocket, 2,500 went. Joint venture with Arjun account debited to bank account 2,500. Arjun incurred expenses on carriage and electricity of 6,500. So you go into the books of Arjun and write joint venture with Azad account debited to bank account 6,500. Next, and receives cash from sale of 30,000. Who receives? Arjun receives. So you'll write by bank account 30,000. Arjun received it. Next, Arjun took over the stock at an agreed value of 10,000. Arjun took over the stock. So for Arjun, it is purchases. So buy purchases 10,000. And Azad is going to take some stock. So buy purchases 11,000. Then both are going to share the loss. The loss is going to be by P&L 4,000 for this guy. And here it is going to be by P&L 4,000 for this guy. Can you see entire stock was supplied by Azad, but sale was done by Arjun and money was kept. So now obviously one person will have to pay the other person. Check what is the balance in the books of Azad. 50,000 plus 2,500 minus 11,000 minus 4,000. 37,500. 37,500 he has to get money. So you can write over here by bank account balancing figure. Clear? And here in this case 30,000 plus 10,000 plus 4,000 minus 6,500. He has to pay. So here it will be 2 bank account balancing figure 37,500. If you notice, he is getting 37,500. This fellow is paying 37,500. Obviously, when two parties are in transaction, one person has to pay the other, one will pay, other will receive. Amount has to be same. Is it clear? This is your fourth question which we have gone through. Any doubt with this, guys? Memorandum joint venture in the books of Azad, in the books of Arjun. Next, let's go to the next question. That is your unsolved case. Unsolved case. Now, it's again a joint venture question that they have asked. Okay. Now, let's begin. Joint venture question they have asked, because you can see the end of the question. They are asking calculate sale price, amount of interest, determine how much profit, if any, has been earned by Kapoor and Singh. Okay, some joint venture they have made. Now, let's try to understand. Unsolved case. The entire case coming in the exam might not be possible, but any part of it might be appearing in the exam. So you should be prepared for that. Clear? Yes. Now, Mr. Sudhir Kapoor is an executive in a multinational financing consultancy firm and is presently working at Pune, Maharashtra. Okay. He belongs to well-to-do family who were erstwhile landlords at Hisar district of Haryana. Okay. He inherited large plots of land as a result of his family lineage. Okay. During the end of 2023, Mr. Kapoor decided to develop a part of the inherited land and for this purpose entered into a joint venture with Harmeet Singh of Ludhiana to develop some building and sell them. They agreed among themselves that the operating results will be shared between them in 4:5 ratio. It was further agreed that between them that any cash investment made by co-venturers in the venture would be entitled to interest of 10% per annum. Okay. Clear? What did they tell from this? Okay, what do we understand when we start this question? First thing is profit sharing ratio will be 4:5. Who are the people? We have Sudhir and we have Harmeet. We have Sudhir and then we have Harmeet. Correct, right? Yeah, Harmeet Singh and Sudhir Kapoor have entered into this joint venture. Sudhir Kapoor and Harmeet Singh. Clear? These are the two people, 4:5 ratio. And interest on investment. Interest on investment, what did they tell? 10% per annum. They are going to get 10% on whatever they invest. Clear? Mr. Kapoor decided to use 5 bigha. 5 biga, 1 biga is equal to 20 katas. 1 biga is equal to 20 katas plot for this purpose, and it was purchased by the venture for 60 lakhs. 60 lakhs they have paid and purchased the land. Okay. Now let's try to understand. Cost of land 60 lakhs. Okay. Mr. Kapoor and Mr. Singh approached Bank of Baroda, a nationalized bank, for financing the venture. Bank, after due consideration of the case, agreed to finance them to the extent of 80% of the cost at 16% per interest per annum. The buying agreements were finalized by the advocate of Mr. Kapoor and Mr. Singh on January 1st, 2024, and the payment was made on the same day. Mr. Singh agreed to pay the balance for the purchase consideration, and registration expenses amounting to 48 lakhs also met by him. Okay. What do we understand here? This 60 lakhs was contributed like this. 60 lakhs, Bank of Baroda has given 80%. 80% of 60 lakhs is 48 lakhs. 80% of 60 lakhs is 48 lakhs. But Bank of Baroda has given this loan at an interest rate of 16% per annum. At an interest rate of 16% per annum. Clear? Then 20% who has put? Singh has put 20% from his pocket. 20%. That makes it 12 lakhs. Plus he has put registration charges. 48 lakhs, that totals up to 60 lakhs. That totals up to 60 lakhs. So this is the contribution made by Bank of Baroda. They gave us loan and Singh has put money from his pocket. Bank of Baroda, we will have to pay 16% per annum. Singh, we will have to pay 10% per annum interest. Okay, till there we are clear. Kapoor approached Mrs. Kulvinder Kaur, his school friend who is practicing architect. Kaur provided the following details plan relating to the plot. Okay. Now we have to understand this. 10% of the total area to be left for roads. 10% of the total area to be left for roads. Now how much area do we have in the first place? 5 bigas, 20 katas. So basically, if you see the area distribution, we have 5 into 20, 100 katas. 100 katas. Okay, 10% we can't use only. So 10 katas left. Parking and all that stuff. What did they tell? Yeah, 10 katas will be used for roads, parks, not parking, roads. That cannot be used for constructing any building. Then 3 types of building were developed. Regular 1.5 katas, deluxe 2.5 katas and executive 3 katas. 12 buildings of each type will be developed. 12 buildings. So then what we are going to do? Regular 12 into 1.5, 18, 18 katas. After regular, what is the next thing? Deluxe. $12 into, how much does the deluxe cost? 2.5. 2.5 katas it will take 12 into 2.5, 30 katas. And finally you have executive rooms also. Executive 12 into 3, 36 katas. 12 into 3, 36 katas. 10 plus 18 plus 30 plus 36, 94 katas. Okay. The sale price of each kata was determined as follows. They are telling cost plus 50%. cost plus 40% and cost plus 25%. Balance area will be equally taken by co-venturers at cost. So balance area. So if you see 96 katas, 94 katas are done. 10 plus 18 plus 30 plus 36. 10 plus 18 plus 30. 10 plus 18 plus 30 plus 36. 94. So balance is 6 katas. Balance is 6 katas. This will be taken by whom? This will be taken by whom? Mr. Kapoor and Mr. Singh. 1:1. Clear? This will be taken at cost. This will help us do our calculations. Advertisement for the project being given in local newspaper and other media on 1st February, and the following expenses took place in relation to this project. Expenses they have told. Expenses. Now what we have to do? Other expenses we have to total. Other expenses. Because total cost, whatever is there, we are going to charge a premium on that. Okay. Now, leveling and ground preparation expenses. Leveling and ground preparation. How much are we spending for the leveling and ground preparation? 12,000 per kata. We have 100 katas into 12,000. So 12,000 into 100. 12,000 into 100. 12 lakhs. We are going to spend 12 lakhs on leveling and ground preparation. Okay. Next. Engineering expenses 28,000 per kata. Engineering. Now, engineering expense, do we have to pay for 100 katas? No. We have to pay for what? Only where the construction is taking place. Construction is taking place in how many katas? 6 katas, like that only left over. Okay, so 84 katas into 28,000 per kata. 28,000 per kata. So 84 into 28,000, 23 lakh 52,000. 23 lakh 52,000. Construction expenses 22,000 per kata. Construction. Again, construction is happening in 84 katas only. 84 katas into 22,000 per kata. That is 84 into 22,000, 18 lakh 48,000. 18 lakh 48,000. Next, municipal taxes 3,000 per kata. Municipal taxes 3,000 per kata. Now tax, government will take from 100 katas also. They will not tell, boss, you pay municipal tax only on what you are constructing. No. 100 katas into 3,000. So you will do 100 into 3,000, 3 lakhs. Clear? Next you have advertisement expense incurred, 15 lakhs. Advertisement expenses, no calculation, direct amount it is 15 lakhs. After that you have office and admin expenses, 650. Office and admin, 6,50,000. Clear? Then we have site expenses. Site expenses is 270. So you can take that also. Site expenses 2,70,000. Next, sundry expenses 80,000. Sundry expenses 80,000. Clear? This much money they have spent for the entire construction. Mr. Kapoor met all these aforementioned expenses. Moreover, it was Mr. Kapoor who took the sole responsibility of sale of the plots, also entitled to receive 8% of the sale proceeds. So now all these expenses are spent by whom? Mr. Kapoor. So now what we have to do? We have to total this 12 lakhs plus 2352 plus 1848 plus 3 lakhs plus 15 lakhs plus 650 plus 270 plus 80. So 82 lakhs they have spent. 82 lakhs spent. By whom? Paid by Kapoor. So we have to pay Kapoor 10% interest. We know all that already. Bank of Baroda 16% interest, Kapoor 10%, Singh 10%. The entire business was over by December 31st and all the remaining transactions were settled on that day. You, being the professional accountant and colleague come friend of Mr. Kapoor, you have been approached by him to do the accounts of the joint venture. What is the cost per kata of land? Oh. Beautiful. What is the cost per kata of land? Tell me. How will we calculate that? Total cost we need divided by the property. Total cost is how much? Our land acquisition cost is how much? Land acquisition cost is, understand this, land acquisition cost is 60 lakhs plus 48 lakhs. So you have spent 108 lakhs. Land acquisition cost 108 lakhs plus other expenses 82 lakhs. What did they ask you? Cost per kata of land 82 lakhs. If you add the other expenses also except interest, 108 lakhs plus 82 lakhs, you're getting 190 lakhs divided by 100 katas, 1,90,000 per kata. Cost before interest per kata. Cost before interest per kata will be 19,000. Okay. Calculate the sale price of each type of building. Calculate the sale price of each type of building. Now, how will we do that? Understand this. We know the total cost, right? Total cost we know. Interest will be later. Commission will be later. Now, selling price. Now, if you see this. Okay. Now, if you see this, understand this simple. Selling price. We have our total cost, which we have already calculated, 190 lakhs. Total cost 190 lakhs. Correct? Now, this 190 lakhs we are going to divide between what? This is the total cost. This we are going to divide between three things. What are the three things? The regular rooms, or sorry, not rooms. What are the regular flats? Deluxe flats, executive flats. Regular, deluxe and executive. Okay. Now, understand this. 190 lakhs. Now, regular, deluxe and executive. Regular, deluxe and executive. What is the situation? Okay. Now, when we talk about regular, deluxe and executive, we have already calculated how much area they are taking. Regular is taking 18 katas. Regular is taking 18 katas. So, what we are going to do? We are going to be like 190 lakhs into 18 by 90. Not 18 by 100, 18 by 90. Why? 10 katas, we are just going to leave it over. No, you can't put it to the this thing flat. 190 lakhs into 18 by 90. That gives us 38 lakhs. 38 lakhs is the cost of regular. What about deluxe? 190 lakhs into deluxe we had calculated. Area is 30 katas for deluxe. So, 30 divided by 90. 190 into 30 divided by 90. 190 lakhs into 30 divided by 90. 63 lakhs 33,333. 63 lakhs 33,333. And here we have 190 lakhs executive. Executive, what is the situation? 36 katas. 190 lakhs into 36 divided by 90. 190 lakhs into 36 divided by 90. 76 lakhs. What about the balance cost? Balance cost. 190 lakhs into 190 lakhs into 6 divided by 90. 12,66,667. This is land taken over. Remember, 6 katas of land was remaining. They are taking it over. That is this land. Okay, this is the situation. Now we have to find the selling price. How much premium here? 50% premium. Add 50%. How much premium here? 40% premium. Add 40%. How much premium here? 25% premium. Add 25%. Clear? That time you will get your values. 38 lakhs plus 50% will give you 57 lakhs. 63,33333 plus 40% will give you 88 lakh 66,666. 76 lakhs plus 25% will give you 95 lakhs. 95 lakhs. Is this clear? This is the sale price. This is the sale price. What did they ask you? Sale price of each type of building. Divide by 12. Divide by 12. Divide by 12. You'll know the price per flat. 57 lakhs divided by 12. You will be the flat is quoted as 4,75,000. 88,66,666 divided by 12. 738,889. 95 lakhs divided by 12. 791,667. This is the price of each flat. Calculate the amount of interest due to each of the co-ventures. Interest due to each of the co-ventures. Now, that should be not a problem at all, because we already know Singh has spent how much from his pocket. Starting only, Singh has spent starting only something. What is that? 60 lakhs. Singh has spent 60 lakhs. On that, we will give him 10% interest, 6 lakhs. And Kapoor has spent how much? Kapoor just now spent, no, 82 lakhs something he spent. 82 lakhs Kapoor has spent. So we will be like 82 lakhs into 10% is equal to 8,20,000. This is the interest. Finally, determine how much profit, if any, may be earned by Kapoor and Singh. What is the profit they are telling? Now, everything is done. What is the sales? We know. What is the sales? We know. Take the sales. We have the sales over here. 57 lakhs plus 88 lakhs, 66,666 plus 95 lakhs. Clear? And the remaining land is taken at cost 12 lakhs, 66,667. So total sale value is 2 crore 53 lakh 33,333. Clear? Then the cost. We already know total cost. We had calculated once that time. What is the total cost? 190 lakhs. 1 crore 90 lakhs. Then we also know interest cost, which we just calculated, 6 and 8.2. So 14 lakh 20,000. And there is also sales commission. Sales commission is also there. We had discussed the sales commission. Now, what is the sales commission? Sales commission, we have to understand 8% he is going to receive out of the sale proceeds. Now sale proceeds only what we are selling to outsiders. 57 lakhs plus 88 lakhs 66,666 plus 95 lakhs. So basically it will be 240 66 666 into 8%. 19 lakh 25,333. This is the profit. So 253,33333 minus 190 lakhs gone. Okay, sorry, 253,33333 minus 190 lakhs, that is gone, minus 14 lakh 20,000 interest, minus 19,25,333 is sales commission. You have 29 lakh 88,000 as profit, and this will be shared in the ratio of, it will be shared in the ratio of 4:5 between Kapoor and Singh, into 4 by 9, 13 lakh 28,000, 29 lakh 88,000 into 5 by 9, 16 lakh 60,000. This should be the situation. This is your question. This is your unsolved case. Okay. After this, in this chapter, we are going into our next task. That is, we are going to start looking at the last two papers. What we did in the previous chapter, same thing we will follow here also. In the last two papers, whatever is asked from this chapter, we will solve that. Okay. Yes, that should be it. Yes, let's proceed. Let's go to December 2023. Let's see what was asked in December 2023 attempt. December 2023, they have asked one bills of exchange question for 7 marks. Both the attempts 7 marks, surely asked from this particular chapter. Okay. On 1st July, yeah, we'll solve this question. December 2023. 7 marks. And it was question number 3A. Question 3A. On 1st July 2023, G drew a bill. Okay, we'll go straight to the end of the question. Necessary journal entries in the books of H. So we know we have to think from H's point of view only. Now we are going to write journal entries. Okay, we know directly that it is from H's point of view. So directly we are going to write journal entries in the books of H. Okay, journal entries in the books of H. Now our entire question will be thinking from H's point of view. We'll be thinking that you are only H. You are H in this question. Clear? On 1st July 2023, G drew a bill of 80,000 for 3 months on H for mutual accommodation. Someone drew a bill on you and he accepted the bill of exchange. You have accepted it. 1st July 2023, it will be G account debited to bills payable account 80,000. G's account debited to bills payable account 80,000. Is this clear? G had purchased goods worth rupees 81,000 from J. Who are you? Who are you? You are H. You are not going to bother. G purchased goods from J. You are not going to bother. G endorsed H's acceptance to J. G has endorsed to J. We are not going to bother. On 1st September 2023, J purchased goods worth rupees 90,000 from H. J purchased goods worth rupees 90,000 from H. J purchased. So from us, 1st September 2023, J has purchased, that means we have sold. J's account debited to sales. 90,000. Next, they said J endorsed the bill of exchange received from G to H and paid 9,000 in full settlement of the amount due. Oh. Our own bill is coming back to us. Now understand this diagram, it will help you. Who are the parties here? G, H, J. H is you only. Starting of the question, can you see G drew a bill of exchange on H. So H has given accepted one bill. So H is having bills payable. For G it is bills receivable. G has endorsed it to J. G has endorsed it to J. And J has endorsed it to H. J has endorsed it to H. So for us, our bills payable is gone. 1st September 2023, our bills payable is gone. Bills payable account debited. My bills payable is 80,000. That came back to me only. Now, and he paid 9,000 in full settlement. How much he had to pay me? J had to pay me 90,000. How much is he paying? 9,000 rupees he is paying. So I get 9,000. Bank account debited 9,000. When someone was supposed to pay me 90,000, if they are paying me 9,000 and they're giving me a bill back of 80,000, that means 1,000 is discount allowed. 1,000 is discount allowed, account debited 1,000. Two what? Who gave us all this? J. To J's account 90,000. J is out of our books. Let's continue to read. On 1st October 2023, H purchased goods worth rupees 1 lakh from G. H has purchased 1st October 2023. Purchases account debited 1 lakh to G's account 1 lakh. Purchases account debited to G's account 1 lakh. H paid the amount due to G by check. H paid the amount due to G by check. Now see over here. Simple. G is debited. That means G has to give us money. Then there is no G. G is credited. That means we have to give G money. So 1st October 2023, G has to give us 80,000. We have to give G 1 lakh. So we will make a payment. G's account debited 20,000 to bank account 20,000. And you can show in bracket 1 lakh minus 80,000. This is the amount that is paid. This is accommodation of bill situation. Clear? Easy 7-mark question in the exam. Surely they will ask one question from this chapter every time in the exam. Clear? Yes. Let's go further. Now the next question that we have to address is your June 2024. June 2024 exam. Yeah, June 2024 exam, I think they have asked consignment for 7 marks. June 2024 exams, consignment is asked for 7 marks. Clear? Now, understand this. What and all they have asked. Can you see this? Kush of Kanpur sent to Jatin of Jaipur. All this story we will read. You are required to show consignment account, Jatin's account and loss in transit account in the books of Kush. So one, we know in whose books we are preparing everything. That's very important to think. So we know in the books of Kush. In the books of Kush. Clear? So we know that it's in the books of Kush. Then what did they ask us? They have asked us consignment account. Yes. Consignment account. In the books of Kush, you have consignment account. Then what did they ask? Jatin's account. Jatin is the consignee. Jatin's account. And they have also asked goods lost in transit. Loss in transit. That is basically abnormal loss. Loss in transit account. This much they have asked. Clear? Now these three ledgers we have to do, and whatever working notes as we require, we will keep on doing that. Kush of Kanpur sent to Jatin of Jaipur a consignment of 400 electrical sewing machines costing 24,000, invoice value 30,000. Okay. We know how this works. Goods are sent at invoice price. Consignment account debited to goods sent on consignment. Consignment account debited to goods sent on consignment account. 400 into 30,000. 400 into 30,000. So basically 400 into 30,000, it makes it 1 crore 120 lakhs. Okay. Next, what we are supposed to do, whenever goods are sent at invoice price, you record it at invoice price, but immediately pass the opposite entry by goods sent on consignment. By goods sent on consignment account, remove the profit 400 sorry, it was 30,000, right? I wrote it as 3,000. 400 into 30,000, 120 lakhs. Now it's going to be 400 into 6,000. 24 lakhs. Clear? 24 lakhs. Any doubt with this loading effect? This we have done in regular class as well. Kush paid freight and insurance of 96,000. Who paid? Kush. So we are going to write consignment account debited to bank account 96,000. Next, Jatin spent 31,000 for clearance and selling expenses 1,500 per sewing machine. Selling expenses is 1,500 per sewing machine, that we will see later. Now he has spent, so to Jatin's account 31,500. He has spent 31,200. 31,200. Go to Jatin's account and write by consignment account 31,200. So we got so much from Jatin. Next, selling expense we'll see later. We'll calculate it per sewing machine as and when the sales was made by Jatin. In transit, 10 sewing machines were stolen, for which insurance company paid 1,85,000 in full settlement to Kush. In transit, it is stolen. That means it didn't reach Jatin only. In transit, it is stolen. Jatin sold 10 machines. That is later. Now, first we have to calculate abnormal loss. Working note, abnormal loss. Okay. 10 machines. Cost per machine is 24,000. That makes it 2,40,000. 2,40,000. Plus expenses. It is stolen, it is lost in transit. So it has not reached the godown. So on these machines, the Jatin has not spent any money. So you don't have to add Jatin's expenses. You just have to add Kush's expenses. Kush has spent how much? 96,000. Okay, freight and insurance. Jatin has spent 31,200 for clearance. It has not reached Jatin itself. So expenses 96,000 into 10 divided by how many machines? 400 machines. So 96,000 into 10 divided by 400. So that makes it 2,400. 2,40,000 plus 2,400. 2,42,400. 2,42,400. Clear? What is this? This is the abnormal loss. Now, what is insurance company giving us? Insurance company is giving us 1,85,000. That means 242,400 minus 185,000, 57,400 is going to be debited to P&L. Debit P&L. 57,400. Clear? Now tell me the entry. Abnormal loss account debited to consignment account 242,400. Abnormal loss account debited to consignment account 242,400. Go to consignment account and write by loss in transit. $242,400. That is one thing. Then, are we getting any money? Did they tell insurance company paid? Yes, insurance company paid. So we are going to write by bank account insurance company. We got 185,000. 1,85,000. Then remaining will go to P&L. So by P&L account 57,400. By P&L account 57,400. Is it clear? This is your loss in transit. That is done and dusted. Now, Jatin sold 210 sewing machines at 32,000 per sewing machines, 130 sewing machines at 35,000 per sewing machine. Okay. So we know the sales now. So we can directly write Jatin's account debited to consignment account. Jatin's account debited to consignment account. How many machines he sold? First thing he sold was 210 sewing machines at 32,000. 210 into 32,000. That makes it 210 into 32,000. 67,20,000. And then he has again sold 130 sewing machines at 35,000. 130 sewing machines at 35,000. So 130 into 35,000, 45,50,000. 45,50,000 plus 67,20,000. So total amount he has sold is 1,127, 1 crore 12,70,000. So you can write over here by Jatin's account. By Jatin's account 67,20,000 plus 45,50,000. 67,20,000 plus 45,50,000. 1 crore 12,70,000. 1 crore 12,70,000. Clear? Yes. Jatin was entitled to a commission of 5% on total sales. Commission you forget. Before that, there is a expense here. Selling expense 1,500 per sewing machine sold. So again, you have to pass that entry also to Jatin's account. 1,500 rupees per sewing machine. So 210 plus 130, 340 machines they have sold. So 340 into 1,500, 5,10,000 Jatin has spent. So you're going to write by consignment. By consignment account 5,10,000. Is this clear? Yes. Now after that, what do we need? Jatin was entitled commission of 5% on total sales value plus 1/4 of the amount by which the gross sale proceeds less total commission thereof exceeded the invoice price. Okay. Final amount due was settled. Commission is going to be one calculation. Overriding commission is what we call this. Overriding commission. Overriding commission. What is the commission first? Sale is how much? Sale is 1 crore 12,70,000. So 1,12,70,000. On that, there is a commission fixed at 5%. So 1,12,70,000 into 5% will be 5,63,500. Then what did they tell? Total sales value plus 1/4 of the amount by which gross sale proceeds. Gross sale proceeds. Okay. less total commission thereon exceeded the invoice price. Exceeded the invoice price. What is the invoice price over here? Invoice price. We have sold 340 machines. Invoice price per machine was 30,000. 340 into 30,000 is 102 lakhs. Invoice price is 102 lakhs. So here they are telling, understand the language. Jatin was entitled to a commission of 5% on total sales value plus 1/4 of the amount by which the gross sale proceeds less total commission thereon exceeded the invoice price. Now, we have the sale. We have this much commission fixed. So, excess sales will be 112,70,000 minus 563,500 minus 102 lakhs. So our gross sales was 112 crore 70 lakhs. I mean 1 crore 12 lakh 70,000. From that remove the commission 563,500 minus 102 lakhs, which is the invoice price. We have 506,500. Excess sales is 506,500. Of this, he will get 1/4 again. Of this, he'll get 1/4. That makes it 126,625. 126,625. So total commission will be, what will be the total commission? Already we have to pay 563,500 plus 126,625. So 563,500 plus 126,625, you have 6,90,125. 6,90,125 should be a commission. What is the entry? This is called as overriding commission. We have had questions in class also. Okay, what is the entry now? Entry will be simple. Consignment account debited to Jatin. Consignment account debited because it's expense Jatin, we have to make payment. Consignment account debited to Jatin's account 690,125. And here you are going to write by consignment 690,125. Okay, 690,125. That is the consignment, that is the commission which we calculated. Commission is 690,125. That should be good to go. Now what next? What next after the commission? Okay, after the commission, the final amount due was settled. Final amount due was settled. Okay, but before going to that, in consignment, the last portion is always closing stock. We have to calculate the closing stock. Now, if you look at the closing stock, 400 machines minus 10 minus 340, you have 50 machines remaining. 50 machines. 50 machines into 30,000 invoice price. Okay, 50 into 30,000 invoice price, that makes it 15 lakhs. 15 lakhs. 50 into 30,000, 15 lakhs. Clear? Now what we have to add? Add the proportionate expense. Add the proportionate expenses. How much expense is incurred by Kush? Kush has spent 96,000. Kush has spent 96,000. So that will be 96,000 into 50 divided by 400. Into 50 divided by 400, 12,000. 12,000 is the proportionate expenses. Clear? Now, what about the proportionate expense of Jatin? This was of Kush, of Jatin. Jatin has spent some clearing charges, no? Do you remember? Jatin has spent clearing charges of 31,200. So 31,200 into 50 machines divided by 390, not 400, 390, because out of 400 machines, what reached Jatin is only 390. So he'll pay clearing charges only for those. 31,200 into 50 divided by 390. So you get 4,000 rupees. 4,000. This is your closing stock. 15 lakh plus 12,000 plus 4,000. So you have 15 lakh 16,000. This is your closing stock. Entry for closing stock is closing stock on consignment account debited to consignment account. So you'll write by closing stock on consignment 15 lakh 16,000. But remember, whenever closing stock is shown at invoice price, immediately what you have to remember, we have to create stock reserve, boss. We have to create stock reserve. Stock reserve. So stock reserve will be 50 machines into per machine the profit is 6,000. So 50 into 6,000, we have 3 lakhs. With that, we are done with the profit calculation, stock reserve calculation. Everything is entered. Only thing that is to be done now is calculate the profit and transfer it to P&L account of Kush. So you take your calculator, 24 lakhs on the credit side plus 242,400 plus 112,70,000 plus 15 lakhs 16,000 minus 120 lakhs minus 96,000 minus 31,200 minus 5 lakh 10,000 minus 690 125 minus 3 lakhs. Totally 18 lakh 1,075. 18 lakh 1,075. Okay, if people have confusion, look at the credit side. 24 lakhs, 242,400 plus 112,70,000, 15, 16,000 minus 120 lakhs minus 96,000 minus 31,200 minus 5 lakh 10,000 minus 690 125 minus 3 lakhs 18 lakh 1,075. That is the profit, and that will be transferred to P&L. To P&L account. This is the balancing figure. That is the profit. And what is the situation over here? Jatin had spent on clearing charges 31,200. Jatin had spent on selling the machines 5 lakh 10,000. Jatin has to get commission 690 125. Jatin made the sales, kept the money that he has to give us. So now 67 lakh 20,000 plus 45 lakh 50,000 minus 31,200 minus 5 lakh 10,000 minus 690 125. So we are getting money by bank account 100,38675. 100,38675. This is the amount that is going to be paid. Is this clear? Nice 7-mark question asked in the exam. Consignment account done. Jatin's account, loss in transit, abnormal loss calculation, commission calculation, closing stock calculation, everything is done. Clear? What next we need to do? We'll move into the next chapter. Next chapter, same process. We'll solve the practical questions, practice questions at the end, and we will go into the examination questions as well. Thank you guys. All the best for your CMA exam. See you in the next video. Hello students, welcome back. Okay, we go into chapter 3 now. Chapter 3, we'll do the same thing, solve all the unsolved questions, practice questions at the end, and then we will go into the unsolved case, and then we will see what is asked in the past 2 examinations from that particular chapter. Good weightage for chapter 3. Okay, around 10 marks, more than 10 marks only they are asking usually. Okay, let's go into the first one. In this, what and all is covered? Final accounts. Okay, preparation of financial statements. We have NPO, incomplete records. All this covered in this chapter. Question number 1. Okay. From the following trial balance of Sri Gurudas, prepare trading account and profit and loss account for the year ended 31st March 2023 and balance sheet as on that date after taking into consideration the following adjustments. So what they have asked us to prepare? Trading, P&L, balance sheet, all 3. Okay, this is the trial balance and these are the adjustments. These are the adjustments. So always what we are supposed to do, understand this. First question, always you are supposed to do this. First, you are supposed to keep everything ready. Trading, P&L and balance sheet. Trading and P&L account. Trading and P&L account for the year ended. For the year ended. And the year end is 31st March 2023. 31st March 2023. Okay. Then you can also write balance sheet as at 31st March 2023. Okay. So you have to keep everything ready. Always look at the adjustments first. First one is stock on 31st March to 31st December 2023 was valued at 9,000. In view of the constant fall in prices, it has been decided to value stock at 10% less. They have valued stock at 10% less. Which one? 31st December 2023. Okay, they have made a mistake, obviously. 31st December 2023, it's not possible because 31st March 2023 is the trial balance date. So this should have been 31st March 2023 only. It's valued at 10% less, 9,000. But we should, when we prepare final accounts, what we should do? We should always take it at cost or NRV, whichever is less. Inventory should be taken at cost or NRV, whichever is less. And they are only telling that it is less, NRV is less. What we can get, market price has fallen, so we are taking it as 10% less. So take 9,000. This is your closing stock. This is your closing stock. Closing stock will go to two places. It will go to your trading account and it will go to your balance sheet. Now, furniture book value 1/4/2022, 800 was sold on 39/2022 for 900 and it was passed through the sales day book. Rectification of errors they have put over here. It is passed through the sales day book. So now what you are going to do? From furniture, you are going to minus, and from sales you are going to minus. Okay, rectification entry. They should have passed the entry bank account debited to furniture. They have passed the entry bank account debited to sales. So now the rectification entry will become sales account debited to furniture. So both will get subtracted. But be careful, it was sold on 39/2022 for 900. Profit or loss also has to be calculated. Now, we will make a working note for that. Working note. Sale of furniture. Now what will happen is sales furniture. Go to the trial balance and check what is the trial balance amount of sales. How much sales is given in the trial balance? Can you see sales is 185,600? Yes, 185,600. And in the trial balance, what is the furniture value? Furniture value is 8,000. Furniture value is 8,000. Okay. Book value on 1/4/2022, 800 was sold. Correct? 800 was sold. So now what happens? Minus sale of furniture. This 800 will go removed from sales and it will be removed from furniture as well. 800. Is this clear? Yes, that is the rectification. What will happen? So remaining furniture is 7,200 and remaining sales is 1,84,800. This is what we are supposed to do. Next, what happens after that? Private purchases of the proprietor amounting to 200 had been booked through the purchase book. Private purchases of the proprietor, that means he purchased for his personal purpose, it is put into purchase book. So what we are going to do? So what is the purchases? In the trial balance, the purchase is showing, find the purchase, 162,400. 162,400. From that minus drawings. You have to remove drawings, and drawings is 200. 162, 200. And this drawings will be subtracted from capital. This drawings will be subtracted from capital. Depreciate furniture at 10% per annum. Depreciate furniture at 10% per annum. So now what's going to happen? We have to be careful about the sale part. Sale of furniture. Sale of furniture. Okay, when was it sold? It was sold on 39. So 6 months it is used. Okay, 800 into 10% into 6 by 12. 40 rupees. 800 into 10% into 6 by 12 will be 40 rupees. Okay, this is the depreciation. Depreciation till sale. So depreciation till the date of sale is 40 rupees. Okay. What is the WDV on date of sale then? WDV on date of sale will be 800 minus 40, 760. What is the sale value? Sale value is 900. So 140 rupees is profit. 140 rupees is profit on sale. This has to be recorded. Okay. Once again, how much did they sell it for? 900, no? So this has to be 900. 900 you have to remove from sale. So 185, 600 minus 900, 184, 700 and 8,000 minus 900, 7,100. That will be taken care of. Okay, don't worry about it. This will be the treatment. So basically, if you are passing rectification entry, sales account debited 900 to furniture account 900. Okay. Then what you are going to do? After that, what you are going to do? Then you are going to write depreciation account debited 40 to furniture account 40. Then furniture account debited 140 to P&L account 140. This is for your understanding. Okay, this is for your understanding. Okay, if you want rectification entries. Okay. Yes, this is how we are supposed to give the effect. Sales book was overcast by 100. Sales book was overcast by 100. Extra 100 was there in sales book. But how is it tallying then? Once we'll have a look at their trial balance. If the trial balance tallying, what if they have given wrong trial balance only? And we are doing everything. Okay, debit side is tallying. Credit side is also telling. Okay, they are telling sales book was overcast by 100. They put extra 100 sales. Extra 100 sales. So what we are going to do? Sales minus 100. 100 you will reduce from sales. If you reduce 100 from sales, what will happen? Everything will change. Extra 100 if you have put to sales, you have to reduce 100 from sales, and maybe you have to reduce 100 from debtors as well. 100 from debtors as well. Assuming that you have put extra 100. Wages outstanding 100 rupees, though included in wages account, was not included in the trial balance. Wages outstanding 100 included in the wages account but not included in the trial balance. So what should we do now? Outstanding wages, liability in the balance sheet. Outstanding wages, liability in the balance sheet. Are you getting my point? Sales you put more and then you did not take. Can you see these two are compensating errors? So debtors also is not required. These two are compensating errors. Sales you have put 100 rupees more. Outstanding wages you have not put. This got compensated. Remove sales, put outstanding wages. Both are 100 rupees. It will match that time. Clear? This is called as compensating error. See closely, they have put compensating error into the question. Provide for bad debts at 5% on debtors and 2.5% for discount on debtors. Okay, simple question. Now, we'll go one by one. Start with the question. Cash in hand. First one. Cash in hand. 2000. Do we have any adjustment related to cash in hand? No. Go directly into the balance sheet. Okay. Upper portion of the asset side, keep it for the fixed assets. Right. Cash 2000. Done. Next. Stock. This is opening stock. Go to the trading account and write to opening stock 7000. Next. Creditors 7800. We don't have any adjustment related to creditors. Go into the balance sheet, write creditors 7800. Next, debtors. Debtors we have adjustments. So 38400. Now understand this. Write debtors 38400. Okay. Do we have any provision for doubtful debt? No. In the trial balance? No. They have told provide for bad debt at the rate of 5%. So minus provision for bad debt at the rate of 5%. 38400 into 5%, 1920. When you remove that, you will get a resultant figure of 36,480. Clear? Next, provision for discount on debtors at the rate of 2.5%. Provision for discount on debtors at the rate of 2.5%. So 36,480 into 2.5%, 912. That time 36,480 minus 912, you will get 35,568. This will be your debtor figure. And these two provisions will have to go into P&L as well. If your trading account closes over here, you can write 2 provision for bad debt, 2 provision for discount on debtors. Okay, one is 1920, other one is 912. 1920, 912. Clear? Yes. Next, after that, you have drawings. 10,260 drawings. Where will drawings go? In the balance sheet, you will have capital, and capital you will write balance plus any profit, net profit, minus drawings. Drawings 10,260 plus, then one drawing was there, no? 200 rupees extra. So 10,260 plus 200. This becomes 10,460. So drawings will be 10,460, which will be subtracted from capital. Okay. And that 200 will be subtracted from purchases also. Yes, 10,260. Sales 185,600. So what we are going to write? By sales 185,600. And out of that, there is one thing that has to be removed. 800 rupees, 900 rupees, sale of furniture. 900 rupees, sale of furniture, that has to be removed from sales. Okay, so what will happen? Where is it? Yeah, right, minus 900. So 185,600 minus 900, 184. 700, and one more effect is there on sale, that is they only have told sale is over cost. Extra 100 you have put sale, so you'll have to remove that also, minus 100. So 185,600 minus 900 minus 100, 184,600. That is your sales. That is sorted. Clear? Next, after sales, you have purchases 162, 400, to purchases 162, 400. Okay, minus that one adjustment 200, 162, 200 purchases. That one small adjustment. See, here we have discussed that. Where is it? Yes, 160 to 200. Personal purpose was included in purchases. Drawings in goods, basically. Next, purchases done. Wages, they said there is outstanding. It is already included. Wages 14,400. So you'll write 2 wages 14,400. And remember, outstanding wages they have not put in the balance sheet. Outstanding wages 100 rupees. They had not put. We are supposed to put it. Expenses, directly put it. P&L to expenses 10,340. 10,340. Next you have furniture. This one has to be very, very careful. Furniture. Okay. Go directly into the balance sheet. Right? Furniture. Furniture. Okay. Now furniture, some calculations we have done. Profit on sale and all that. Now 800 is gone. 7,200 is still there. Now on that we have to calculate depreciation. Now out of, understand this, out of 8,000 ka furniture, 800 went. Okay, out of 8,000 ka furniture, 800 went. Now on that remaining 7,200, we are going to remove 10% depreciation. Full year it was used. So 7,200 minus 10%, 6,480 is your furniture. 6,480 is your furniture. Out of 8,800 ka furniture is sold. Remaining remains. On that 10% depreciation you remove 6,480. Go to P&L and write 2 depreciation on furniture. 7,200 into 10% plus that 40 rupees depreciation on the asset which is sold. 40 rupees depreciation on the asset which is sold plus 40. 7,200 into 10% is 720 plus 40 rupees will be 760. And did we make any profit on sale? Did we make any profit on sale? Yes, 140 rupees profit on sale we have made. So we can write over here by profit on sale 140 rupees. All this was our rectification entries. Okay. Yes. Next, goodwill 6,000. It will go into balance sheet. Asset it is. Intangible asset. Goodwill 6,000. Next, capital 65,400. Okay. Capital 65,400. Profit we will add, subtract the drawings. That time we'll get the final amount. Of the adjustments, closing stock is not taken. 9,000. We can take the closing stock. By closing stock 9,000 and go to the balance sheet and write stock 9,000. Clear? Next, after that, furniture done, purchases done, depreciation done, sales book overcast done, wages outstanding done, provision for bad debt and doubtful debts done. Done or done. Everything is done. Okay, now you are supposed to calculate gross profit. Use your calculators. 184,600 plus 9,000 minus 7,000 minus 162,200 minus 14,400. 10,000 is the gross profit. So 2 gross profit carried down by gross profit brought down 10,000 plus 140 minus 1920 minus 912 minus 10,340 minus 760. So you get 3792 of loss. There is no profit. 3792 of loss. So you'll write by net loss carried forward to balance sheet 3792. 3792 carried forward to balance sheet. So instead of writing plus net profit here, I'll write minus net loss 3792. 3792. So now what happens? 65,400 minus 3792 minus 10,460. So the capital is 51,148. 148. Now you can check your balance sheet. You can total the balance sheet. 51,148 plus 7,800 plus 100 on the liability side. And on the asset side, 6,480 plus 6,000 plus 9,000 plus 2,000 plus 35,568. 59,048 is the balance sheet total. 59,048. 59,048. This is your balance sheet. As always, they have some different totals only. Wrong, wrong. You have the solution here. Use the corrected solutions. Okay. Because dates only were wrong in the question. We have corrected the dates. Trading and P&L account. And this is our balance sheet. This is question number 1. Clear? Yes, let's go to the next question. Question number 2. And working notes are also there, which you can take it down. Let's go into question number 2. We'll see what they have asked. From the following ledger balances and additional information obtained from Mrs. Kamala Srivatsav, prepare trading account, P&L account for the year ended and also balance sheet. Same final accounts they have asked again. Okay, trial balance is given. Additional information is also there. We'll see the additional information first. Closing stock. We know what to do. Stock destroyed by fire was 20,000 and the insurance company accepted the claim partly for 15,000. We know the entries for this. Abnormal loss account debited to trading account. Then insurance company account debited. P&L account debited to abnormal loss. Okay, we have done this just now in consignment also. Goods purchased on credit worth rupees 30,000 was omitted to be recorded. Goods purchased not recorded. So what you will do? Add it to purchases, add it to creditors. Purchase account debited to creditors. Purchase includes goods worth rupees 10,000 purchased for private purpose. So minus from purchases and add it to drawings. Bills receivable and checks from customer dishonor 20,000 and 10,000 respectively, but no entries were made in the books of accounts. No entries were made in the books of accounts. Bills receivable and check. What we are going to do for both these? Debtor will be debited to bills receivable to bank. Checks dishonored. Okay. This will be our treatments. So what we need first? First we need trading and P&L. Let's keep the trading and P&L ready. Okay. Which year they have asked? Trading and P&L account for the year ended 31st March. Check the year end. 31st March 2023. 31st March 2023. Then next thing you're going to do is balance sheet. Balance sheet as at 31st March 2023. Clear? Yes. Let's begin. Now let's begin one by one. Stock. Opening stock. Go to the trading account and write 2 opening stock 3 lakhs. 2 opening stock 3 lakhs. Purchases, sales. We also have return. Purchase, here this is purchase return. Sales, this is sales return. Purchase return, sales return. So what we are going to do? Purchase and sales. We are going to write 2 purchases less returns. Purchases will sort first. 20 lakh 50,000. 20 lakh 50,000 minus 50,000. Okay. And for purchases, we had some adjustments also. Goods purchased on credit was omitted to be recorded. Okay. We will record it now. 30,000. So plus 30,000. And then purchased goods included 10,000 purchased for private purpose. So we'll remove that minus 10,000. That is the situation. 20 lakh 50 minus 50 plus 30 minus 10. 20 lakh 20,000. 20 lakh 20,000. Is this clear? Yes. Next, what happens after that? Purchases is done. Sales. 35 lakh 40 minus 40. So sales also you're going to write by sales less returns. 35 lakh 40 minus 40. 35 lakh 40 minus 40. Now what's going to happen? Now see. Any adjustment for sales? Sales, there is nothing, clean, no rectification, no adjustment to be done. So directly sales you can take 35 lakh 40 minus 40, 35 lakhs. 35 lakhs. Clear? Next you have wages. Any adjustment was there for wages, outstanding or anything? No. 2 wages, 2 lakhs. 2 wages, 2 lakhs. Then you have carriage inward. Carriage inward is always a direct expense. It will go to trading account. 2 carriage inwards 50,000. Next, power and light. Power and light is also a direct expense. It will go to trading account. So you'll write 2 power and light 20,000. Next, discount. 2 are there. Debit one is discount allowed, credit one is discount received. So imagine your trading account gets over here. Let's say P&L. You can write 2 discount allowed, and here it's going to be by discount received. Discount allowed is 10,000, discount received is 20,000. 10,000 and 20,000. Miscellaneous expense 1,50,000. 2 miscellaneous expenses 1,50,000. Next, salaries 1 lakh. No adjustments to any of this. So you'll write 2 salaries 1 lakh expense. Clear? Outstanding salary. It's there in the trial balance, so it will go directly into balance sheet. Outstanding salary, you'll write in the liability side, outstanding salaries 30,000. Next, outstanding rent, also in the trial balance, it's a liability, outstanding rent 10,000. Next, depreciation. Depreciation already in the trial balance. If it's outside the trial balance, we have to give 2 effects. It's in the trial balance, so directly we'll put into P&L 2 depreciation 1,50,000. Next, rent and rates expense 1,20,000. Next, prepaid insurance. Prepaid insurance is an asset. Go and put it into the balance sheet. Prepaid insurance 10,000. Next, life insurance premium. Life insurance premium is an expense. Wait, who is it? Mrs. Kamala Srivatsav. Life insurance premium, if you pay for Mrs. Kamala Srivatsav, that is her personal expense. It cannot be taken as the expense of the business. So what we will do now, life insurance premium will also be considered as drawings. Now, just observe what I'm going to do. In the balance sheet, I'll write capital. Under that, I'll write whatever the balance is going to be, plus net profit minus drawings minus LIC paid. That is also drawings. And how much is that LIC paid? 10,000. 10,000. Okay. Next, insurance 20,000. This is told insurance. Here it's told life insurance premium. Life insurance premium is personal. Insurance is related to business. So insurance will go into P&L. So to insurance 20,000. After that, you have income tax paid. Income tax paid is also a personal expense for sole proprietors minus tax paid. It will be subtracted from capital, 30,000. Next, freehold premises is an asset. So you're going to write premises 10 lakhs. 10 lakhs. Furniture is also an asset. Furniture 2 lakhs. Debtors and creditors. Is there any provision for bad debts in this question? Have they given any provision for bad debt and all? Nothing. See, no adjustments are there. Two are related to purchase. Then one is stock destroyed. Other one is debtors and creditors. Okay. So directly you can write debtors. Debtors are 4,50,000. And then we can put creditors. But creditors, there is an adjustment. Creditors, if you see, we can take 5 lakh here, and they told goods purchased on credit was omitted. So we have to add it to creditors. So 5 lakh plus 30,000. That makes it 5,30,000. Okay. Next, after that, yeah. Then we have bills receivable and bills payable. Bills receivable, bills payable. Bills receivable and bills payable. Bills receivable is 1 lakh, but we know in that 1 lakh, bills receivable dishonored is 20,000. So bills receivable 1 lakh minus 20,000, 80,000. Oh, and this will get added to debtors. Yes, 4,50,000 plus 20,000. Remember dishonor entry, debtor account debited to bills receivable. Okay, 4 lakh, you'll add 20,000 over there. Bills payable, what is the situation? Bills payable is 90,000. There is no problem there. No adjustment, 90,000. After that, you have drawings and capital. Capital is 20 lakhs, drawings is 50,000. Capital 20 lakhs, drawings is 50,000. But we have already entered other drawings also, that is LIC paid and tax paid and all that. Next, we have cash and bank, 680. Now see, cash and bank, 6,80,000. Here what happened? There is also one check dishonored. Check from customer dishonored, 10,000. So minus 10,000. So this becomes 670. And that will get added to the customer's balance plus 10,000. So this becomes 4,80,000 of debtors. I hope you're getting this. Yes. After that, you have finally plant. Plant means plant and machinery. Plant 5 lakhs. After that, if you go into this thing, closing stock is remaining. We have not passed the entry for closing stock. Closing stock will go to trading account. You will write by closing stock 4 lakhs. 4 lakhs is the closing stock. And then you will put that closing stock into the balance sheet, stock 4 lakhs. Then you'll go into the next adjustment. Stock destroyed by fire. So first abnormal loss account debited to trading account. So you'll write over here by abnormal loss 20,000. And insurance company accepted the claim partly for 15,000. So 15,000 insurance company is going to give us. So what we are going to do, insurance company, because it is receivable, we'll show it as asset 15,000. 5,000 we are not going to get, that is a loss. To abnormal loss 5,000. Next, goods purchased on credit was omitted to be recorded, that we have recorded. Purchased goods for private purpose, that we have recorded. How much is that? 10,000. Have we put that 10,000? Drawings. Okay. Drawings will become 50,000 plus 10,000 because there is some goods which is purchased. So this will become 60,000 drawings. Next, bills receivable and check and all that we have already done. That should be it. With this, we are able to calculate our gross profit, net profit, and then finally balance sheet we should check. Yes, we will write to gross profit carried down. And here it will be by gross profit brought down. Use your calculators. 35 lakhs plus 4 lakhs plus 20,000 minus 3 lakhs minus 20 lakh 20,000 minus 2 lakhs minus 50,000 minus 20,000. 13 lakh 30,000. That is your gross profit. 13 lakh 30,000 plus 20,000 minus 10,000 minus 150 minus 1 lakh minus 150 minus 120 minus 20,000 minus 5,000. So you're getting net profit of net profit carried forward 7,95,000. 7,95,000. Again, we'll check 1330 plus 20 minus 10 minus 150 minus 1 lakh minus 150 minus 120 minus 20 minus 5. 795. So you can add the profit here, 7,95,000. So 20 lakhs plus 795 minus 60,000 minus 10,000 minus 30,000, you'll get 26,95,000. Okay, and you can add the balance sheet asset side and liability side. 26,95,000 plus 30,000 plus 10,000 plus 530 plus 90, and other side you can check 10 lakh premises plus 2 lakhs furniture plus 5 lakhs 4 lakh 80, 10,000 plus 80,000 plus 670 plus 15,000, 33,55,000. Balance sheet has to tally 33,55,000. Is this clear? Okay, so this is your balance sheet, 3355, net profit 795, gross profit is 1330. They got this right, they got this wrong. What is this? So many mistakes. Yes, this is your balance sheet. You have the balance sheet as well. Next, we can go into the next question. Question number 3. Question number 3. Following is the receipt and payment account of Galaxy Women's Cricket Club for the year ended 31st March to 31st December 2023. So next question is not about final accounts of sole proprietor. Next question is about NPO. Next question is NPO. Okay, they have given the receipt and payment account. Additional information is also given. And finally, they have asked us to do, you are required to prepare income and expenditure account of the club for the year ended 31st December 2023. Only income and expenditure they have asked us to prepare. Only income and expenditure, nothing else. Okay, so question number 3. Income and expenditure account for the year ended 31st December 2023. Okay, this is your solution, what they are expecting. Now, we'll check one by one. Interest on savings bank account for 880 has not been entered in cash book. Oh. That means there is an error there. 80% of the life membership fees is to be capitalized. That means 20% is not to be capitalized. That will go to income and expenditure account. Okay. An old gym equipment of 20,000 was exchanged at an agreed price of 12,500 for a new gym equipment. Okay, fine, no problem. You do whatever you want. Profit or loss, we will record. Balance of some other accounts whereas under. Outstanding salary, arrears of subscription. Arrears subscription means what? Arrears of subscription means what? Subscription receivable. This is subscription receivable. Advance subscription means what? Subscription received in advance. Prepaid ground insurance. Prepaid gym equipment is also given. You are required to prepare income and expenditure account. Okay. Now, let's go and start from here. Receipts. Obviously, these two will not go into income and expenditure account. This is the opening balance of cash and bank. Next, 2 subscriptions, 61,250. 2 subscriptions. Okay, so what we are going to do? We are going to write by subscription 61,250. 61,250. Now there are some adjustments to be done. Okay, some adjustments are to be done. Last year's receivable, what you will do? It is last year's. This year it would have been received, but we'll subtract it. Last year's we'll subtract 8,000. This year's we will add 5,250. Last year received in advance means it is related to this year plus 6250, 6750. This year received in advance means it is related to, wait. Again, they have messed up the dates. See, 31st December 2020 to 31st December 2021. But we are preparing for 31st December 2023. Okay, making the change. What is this? This will be 3. This will be 2. Making the change. Okay, so that we can solve. It's a good question. Just the dates are issue. So now everything will change, obviously. Yes. Understand this? Yeah. Last year's receivable is 5250. So minus 5250. This year's receivable is 8,000. So plus 8,000. Plus 8,000. Last year received in advance means related to this year. So plus 3,500. And this year received in advance means related to next year. So minus 6750. That should be your subscriptions. 61,250 minus 5250 plus 8,000 plus 3,500 minus 6750. 60,750. Okay, understand this. 61,250. Last year's outstanding minus. This year's outstanding plus. This last year received in advance plus. This year received in advance minus 60,750 will be your subscriptions. Clear? Next we go into, after subscriptions are done, life membership fees. What did they tell about life membership fees? they told over here 80% of life membership fees is to be capitalized. That means 20% is income. So you'll write by life membership fees 7,500 into 20%. 1,500. 1,500 is taken as life membership fees. Clear? Next, after that, what do we have next? Done with the receipt side, we'll go into the payment side. Ground maintenance. Did we have anything related to ground maintenance? Any adjustment? Prepaid ground maintenance. Can you see this? Yes. Go into the expense side, write to ground maintenance. Ground maintenance. How much is ground maintenance? 5250. 5250. Okay. Last year, prepaid, add because it's related to this year. This year, prepaid, minus because it's related to next year. Minus 2250. 5250 plus 3000 minus 2250. That makes it 6000 ground maintenance. Is this clear? Three things done. Next, salary. For salary, what do we have? Outstanding salary is there. Salary 9,000 and write to salaries 9,000 outstanding. What will you do? Last year's outstanding minus 1,500. This year's outstanding add plus 750. So 9,000 minus 1,500 plus 750. 8250. That should be your salary related items. Gym equipments. Now gym equipment will need a working note. This is gym equipment payment. That means they have made purchase of gym equipment. That will not go to income and expenditure account. Income and expenditure account, what will happen? Only if you have depreciation on gym equipment, it will be there. Profit or loss on sale, it will be there. Now see over here. Old gym equipment WDB 20,000 gone, was exchanged at an agreed price of 12,500. Okay, so 20,000 was exchanged at an agreed price of 12,500 for a new gym equipment of 37,500. Are you getting my point? So new gym equipment is 37,500. So 37,500 minus 12,500. They had to pay 25,000 rupees. That is what they have paid over here. It will go to balance sheet. Correct? Now, but what was the old equipment? Old equipment was 20,000. They have agreed only 12,500. So what happens? 7,500 is loss. Loss on exchange. So that will go to your income and expenditure. 2. Loss on exchange of gym equipment. Loss on exchange of gym equipment. 20,000 minus 12,500, 7,500. 20,000 ka gym equipment, they have given it off for 12,500. So 7,500 is the loss. Now we need one small working note. Gym equipment to see if what is the depreciation, if there is any. Opening balance. What is the opening balance? 45,000 minus sale 20,000 went plus purchase. Purchase was 37,500. So 45,000 minus 20,000 plus 37,500 should be 62,500. But can you see over here? 57,500. 57,500 is the closing balance. Therefore, this 5,000 is depreciation. 5,000 is depreciation. 62,500 minus 57,500. 5,000 will be depreciation. So now 5,000, how will we write? We'll write to depreciation on Gym equipment 5,000. That wasn't told to us directly. It was a hidden information which we had to crack. Okay. Now, we had this kind of questions in regular class also. So no issues. Sports expense. Expense it is. To sports expense 11,750. Okay. Next. Coaches remuneration, that is also expense. To coach remuneration 10,000. Okay. General expense is general. To general expense 2,750. Traveling expense. To travel expenses 2,000. This is the closing balance which will not affect us. Interest on savings bank account 880 has not been recorded in the cash book. Okay, interest on savings bank means income. So we'll write by interest on SB 880. Not recorded. We are recording it now. Life membership fee is done. Old gym already we have sorted. Outstanding salary and all these 5 items also done. Done. Now what we are supposed to do? Calculate the surplus. 60 done. No, everything is done. Yes. 60,750 plus 1,500 plus 880 minus 6,000 minus 8,250 minus 7,500 minus 5,000 minus 11,750 minus 10,000 minus 2,750 minus 2,000, 9,880 to surplus. So 9,880 is your surplus. Oh, they got it right this time. 9,880. Is this clear? This is your solution for the third one. Third question, solution. Done? Yes. Let's go further. Let's go to the fourth question. Fourth is also receipt and payment only. NPO only. Fifth also they have asked NPO question. I think sixth is our incomplete records. Then we go into unsolved case. Yes, let's go to the fourth question. They have asked income and expenditure account and balance sheet this time. Not one, both. Okay, let's go into the next one. Next question, question number 4. The following is the receipt and payment account of Citizen Sports Club for the year ended 31st December 2022. Okay. Now, they have asked you to prepare income and expenditure account and balance sheet. Let's keep it ready. We need income and expenditure account for the year ended 31st December 2023. Then what do we need? We need balance sheet, as at 31st December 2023. These are the things that we require. Clear? Next, let's go further. Now, if you look at the question, receipt and payment account is given. Now, one by one, we will see the additional information that is provided to us. Additional information. Subscription include arrear subscription bought over from previous year 50,000. In subscription, there is something that is bought over from previous year. That means what? Arrear subscription means last year it was not received, this year it is received. Interest on investments include 10,000 in respect of interest accrued in the preceding period. Last year's outstanding. Okay. Upkeep of ground and wages of groundsmen include 30,000 and 15,000 respectively applicable to the preceding year related to last year. Okay. All this we have to remove. If it is related to last year, we have to remove it. Other ledger balances at the commencement of the financial period. Commencement means starting. Our capital fund 40 lakh 10,000. Okay, they have given the opening balance of the capital fund. Go to balance sheet and write capital fund opening balance 40 lakh 10,000. Okay, surplus brought forward. Surplus brought forward. That means we already had some surplus. So plus surplus 8,90,000. 8,90,000. Then club premises and ground as per valuation 30 lakhs it was. Investments 10 lakhs, sports material, furniture. Those things we have to see what has happened during the year. Entrance fees to be capitalized, they said. Entrance fees to be capitalized. So this will get added over here plus entrance fees. It will get added to balance sheet, capital fund. Outstanding liabilities as on 31st December 2022. Wages for groundsmen 20,000, printing 10,000. Outstanding liabilities as on 31st December 2022. We are preparing for what date now? 31st December 2022. I think again they have messed up the date. End of the question they have told 31st December 2023, but starting of the question it is 31st December 2022. Okay. Again they have messed up the date. It's 31st December 2022, not 23. Number of mistakes are huge. Yes. So 31st December 2022, wages for groundsmen this year's outstanding. Interest accrued and outstanding investment on investment was 12,000. Depreciation to be provided by club premises 2%, furniture 5%, sports equipment 33.33%. You are required to prepare income and expenditure account and balance sheet. Clear? Yes. One by one we'll start now. First what we will do. This is opening balance sheet. Opening balance, it has gone into last year's balance sheet. Now, what about this one? Subscriptions, 8,70,000. Subscriptions, 8,70,000. You can write by subscriptions, 8,70,000. By subscriptions, 8,70,000. Okay. And then, see, this point we have to take. Subscription includes brought forward from previous year. So minus 50,000. Brought forward from previous year. So minus 50,000. Then one more point for subscription. Do we have any other point for subscription? Anywhere? Anything? No. That's it. So this will be 8,20,000. Next, after that, interest on investments. We will see that. Entrance fees 50,000. Will it go to income and expenditure? No, straight to balance sheet. Entrance fees 50,000, fully capitalized. Next, proceeds of concert. From one concert we got money 1,50,000. We'll write by proceeds of concert, and that is 1,50,000. Done. Next, interest on investment 50,000. By interest on investment 50,000. And you can see the question. Interest on investment include 10,000 in respect of interest accrued in the preceding period. Last year's 10,000 minus. And here you can see interest accrued and outstanding on investment was 12,000. This year's add 12,000. So this should become 52,000. 52,000. Now what will you do? Outstanding interest will go into balance sheet. Interest accrued 12,000. Clear? Next, after that, what do we do? Done. Next, upkeep of ground. Upkeep of ground means maintenance of ground. Do we have anything related to that? Yes. You can write to upkeep of ground. Upkeep of ground is 2,10,000. 2,10,000. And here they have told upkeep of ground and wages of groundmen include 30,000 and 15,000 applicable to the preceding year. So 30,000 we have to subtract minus 30,000. And then outstanding liability, wages for groundsmen, they have told upkeep of ground is not there, wages outstanding is there. So this year there is nothing outstanding, but last year there was something outstanding related to upkeep of ground. So 1,80,000 will be your upkeep of ground. Clear? Next, after that, secretary's salary. For that there was no outstanding. So you can write to secretary's salary 3,60,000. Next, wages of groundsmen. 2 wages. Wages, there is 100% adjustment, 2,40,000. Okay. And you can see 15,000 of wages relates to last year. So minus 15,000. Then outstanding liability, wages for groundsmen 20,000. So plus 20,000, 2,45,000. And in balance sheet you can write outstanding wages 20,000. Next, ground rent. Anything related to ground rent, upkeep of ground and wages of groundsmen include this. This is done. Other ledger balances that we have already seen. Entrance fees capitalizing is done. Outstanding liability 1 point is remaining, and then depreciation points are remaining. Ground rent, there is no adjustment. So go to the income and expenditure account and write to ground rent. To ground rent. How much is the ground rent? The ground rent is 15,000. Ground rent 15,000. Next you're going to write to printing. Next you're going to write to printing 20,000. There wasn't anything that is related to last year which is included in printing. They have not told, but this year there is 10,000 outstanding. So plus 10,000. So this makes it 30,000. And then in the balance sheet you can write outstanding printing. Outstanding printing 10,000. Clear? Yes. After that, what do we do? After that, sundry expenses. Straight away you can put into income and expenditure account to sundry expenses, which is 17,500. Sundry expenses 17,500. With that we are done with the items which are given there. Okay. Now what do we do? Depreciations. One by one. Club premises 2% depreciation. Club premises was 30 lakhs. So you will write 2 depreciation on club 30 lakhs into 2%, 60,000. Clear? Next, after that, Furniture 5%. Furniture was 4 lakh. So 2 depreciation on furniture 4 lakh into 5%, 20,000. Next, sports equipment 33.33%. Sports material we can see 245 here. 2 depreciation on sports equipment 2,45,000 into 33.33%. 245 into 33.33%. 81,659. 81,659 is the depreciation. $245. Actually, 81,666. Yeah. 81,667. 81,667. 33.33%. Because it is 33.333333. Okay, that should be it. We do not have anything else. That is your income and expenditure account. Now, when we go to balance sheet, what will happen? First, club premises. Premises was 30 lakhs. From 30 lakhs, you remove 2%, so it becomes 29 lakh 40,000. After that, you have furniture. Furniture was how much? Furniture was 4 lakhs. From 4 lakh, you remove 5%, it becomes 3 lakh 80,000. Depreciation you remove, you get the values. After furniture, what do we have? What did we have? Sports material. Sports material 2,45,000 minus 81,667. 163,333. 163,333. Sports material. Then investments. Investments are still there. We haven't sold them. Investments 10 lakhs. Investments 10 lakhs. Okay, capital fund, surplus brought forward, club premises and ground, all that we have seen, investment, sports material, furniture. Clear? Yeah, that should be it. Now what we are going to do is just close the question, calculate the surplus or deficit, we don't know. 820 plus 150 plus 52,000 minus 1,80,000 minus 3,60,000 minus 245 minus 15,000 minus 30,000 minus 17,500 minus 60,000 minus 20,000 minus 81,667. Oh, surplus 12,833 to surplus carried forward to balance sheet. 12,833 plus surplus 12,833. So now you can total 40 lakh 10,000 plus last year's surplus 890 plus 50,000 entrance fees plus 12,833. So 49 lakhs 62,000, 49 lakhs 62,833. 49 lakhs 62,833. Okay, plus 20,000 plus 10,000. Then other side you can see 29 lakh 40,000 premises, 3 lakh 80,000 plus 163,333 plus 10 lakhs plus 12,000, and we have to put the closing balance of cash, which is 497,500. Cash and bank 497,500. 49,92,833. 49 92 833. Clear? This is how it's going to work. This is the balance sheet. I think they have given the balance sheet total. Yeah, they got it right. 4992 833. Next question, guys. Question number 5. Following is the income and expenditure account of Moon Club. They have given the income and expenditure now. Following is the balance sheet. Balance sheet is also provided for both the years. From the following details, prepare receipt and payment account for the year ended. So you are supposed to prepare the receipt and payment account. What is given to you is income and expenditure account. So you're basically going reverse calculation. Till now, 2 questions what we did, using the receipt and payment account, we prepared the income and expenditure account. Now using the income and expenditure account, we are going to prepare the receipt and payment account. Is this clear? Yes. Question number 5. Question number 5, receipt and payment account for the year ended. Let's see if they've gotten the date right this time. Okay, receipt and payment account they have asked. Yes, 31st March 2023. Yes, 31st March 2023. Now, have a look at this. Subscription is there, 68,000. First, what we need always, receipt and payment account. We need to balance brought down. Correct? Receipt and payment account should have the balance brought down. Where is the cash and bank in hand? They have given already. We are 31st March 2023. Can you see the opening balance? 90,000. Okay. Opening balance 90,000. Closing balance 60,000. See the dates. 90,000, 60,000. Cash at bank and cash in hand. But see what they have told here. Closing cash and bank balance of receipt and payment account is 90,000. What is this? Either they have missed the dates again or they have missed the answer at the end. Okay, we'll follow this only. Okay, I think they have missed the dates. Again, they have missed the dates. Because you can see capital fund is increasing. That means this should be 22 and this should be 23. This should be 22 and this should be 23. That time the problem solves. Okay, so balance brought down 60,000 and by balance carried down 90,000. Rest of the things we have to do it now. Okay, subscription 68,000. Subscription is a receipt, so you'll write to subscription. To subscription 68,000. 68,000. Okay, and then where is it? Yeah, subscription. We have one arrears of subscription. Can you see arrears of subscription? Last year 10,000, this year 20,000. So last year's you add because you got the money plus 10,000. This year's you remove because you are going to get it next year 20,000. So 68,000 plus 10,000 minus 20,000. 58,000 is our subscription that is received. Clear? This is how it works when we go from income and expenditure to receipt and payment account. After subscription, sale of provisions 3,26,000. Supplier for provision is also there. Sale of provision is there. Supplier of provision is there. So we have to prepare one supplier's account to see how much money we received. Okay, understand this. Supplier account by balance brought down to balance carried down. What is the balance brought down? Supplier 16,000. What is the balance carried down? 20,000. How much did we sell? 3,26,000. So by sales 3,26,000. One second. We need debtor also, no? Stock of provisions. Too many things are there. Stock of provision is also given. Okay, stock of provision. 20,000, 10,000. Supplier for provision. 16,000, 20,000. So payment also must be there. Payment for provision, not there. Subscription. Okay, purchases. It's there over here. Opening stock, 20,000. Opening stock 20,000 plus purchases 2,80,000 minus closing stock. Okay, provision used, that is consumed. Remember, I used to always tell you that you should only take the stock consumed in the books. You cannot take the entire thing. You have to take the stock consumed only. You cannot show opening stock, closing stock in NPO because it's a non-profit organization. Stock cannot be shown like that. Okay, so here income and expenditure account, they have done this. Purchases is 280. Purchases is 280. Now see over here. By sales, no. By purchases 280. So now 16,000 plus 280 minus 20,000, 2,76,000. 2,76,000 you're going to make payment to bank. Balancing figure. 2,76,000 you're making payment to bank, balancing figure. Is this clear? 16,000 we had to pay last time. 20,000 we still have to pay this time. Purchase we have made 280. How do we know that? Over here 280 is sitting. 280. So 16,000 plus 280 minus 20,000. 276 we have made payment. So that will go into your receipt and payment account, into the payment side by supplier. 2,76,000. Clear? 2,76,000. What next? Sale of provision. Do we have any debtor? Anywhere sale of provision? Debtors. No. So what we can write? By sale 3,26,000. 3,26,000. Next, after that, till here we are done. Opening stock, closing stock, all that is done. Now, salary and wages. Do we have any outstanding salary, anything like that? See, equipment, we have to see. Outstanding salary, do we have? No. So, by salaries, we have made payment. Salaries is 36,000. Next, general expenses. By general expenses 10,000. Depreciation on equipment, they said. Depreciation on equipment. Now see, this was 20,000. If you remove the depreciation 2,000, this should become 18,000. How did it become 50,000? That means 32,000 equipment is purchased. Equipment is purchased. So the entry will be equipment account debited to bank account. So by equipment 32,000. Receipt and payment account will have all kinds of payments in it. Surplus will not come here. That should be it. Suppliers for provision done. Capital fund is just the surplus 94 to 150. See, can you see 94,000 plus 56,000 is 150. So 100% the dates were wrong. Okay, equipment is done. Stock of provisions we have taken care. It's there. Arrear of subscription is also considered. Cash and bank opening balance, closing balance we had already received. This is your receipt and payment account. Have a look at it. Sorry, this should have been this side, no? What sale is going that side? To sales 3,26,000. 60,000 plus 58,000 plus 326. 276 plus 36 plus 10,000 plus 32,000 plus 90,000. 4,44,000 will be your total. It should tally because you have both the opening balance and the closing balances. Is it clear? This should be your solution for question number 5. Yes. So that was your 5th unsolved question which we have done today. Let's go to the next question. Question number 6. Question number 6 they have given from incomplete records. Question number 6 is from incomplete records. Then there is also an unsolved case. Unsolved case you can also try it as homework because again it is income and it's NPO only. So many questions of NPO we have done. Prepare match fund, that this balance sheet and all they have asked. You can try it as homework, unsolved case of this chapter because already 6 questions are there here. Okay. Mr. Raja, a sole trader, furnishes you with the following bank summary for the year ended 31st December 2023. 31st December 2023 is giving you the bank summary. Okay. Balance 31st December 2022, 11,000 was there. Add the deposits, cash out of cash sales, collection from credit customers, that is debtors, income from personal investment, that means it should get added to capital, deduct cash withdrawn, personal drawing, shop expenses. Cash withdrawn from personal drawings and shop expenses. Yes. Checks issued to suppliers of goods, services, checks issued for personal purpose, bank charges, balance on 31st December 2022. 31st December 2022 we are starting and we are ending also on 31st December 2022 only. Again the date is wrong. 31st December 2023 it should be. Imagine we are starting on 31st December 2022 doing all the transactions and ending up on 31st December 2022 itself. Yes. Raja informs you that he had the following assets and liabilities in addition to the bank balances described on December 31st. Assets and liabilities are given. Okay. So with this we can find the capital. Can you see cash balance is there? Amount due from customer. These are called debtors. Unsold inventory. This is called stock. Prepaid expenses. We know. Then liabilities for creditors for goods and services. Both of these we can take it as creditors. He also informs you some additional information. He uses 75% of the cash sale proceeds for making cash purchases and remaining balance being deposited into bank. 75% of cash sale proceeds for making cash purchases. Remaining only he puts into bank. He had allowed cash discount of 5,000 to his credit customers for prompt payment. He was allowed cash discount of 7,000 by his suppliers for goods for prompt payment. Okay. Collection from credit customers and payment to suppliers are invariably by cross check. Okay. They are making only payment to creditor and the receipt from debtor is only from checks. Raja asks you to show his capital account and prepare receipt and payment account for the year ended, trading and P&L account and balance sheet. Receipt and payment account means what? Cash book only, no? Trading and P&L account and balance sheet he wants to prepare. Now, so what and all we need? Receipt and payment account. Nothing but cash book for the year ended. For which year end they are asking this receipt and payment account? 31st December 2023. 31st December 2023. Okay. Next. After this. Closing cash balance, closing bank balance. So what we will do is we'll prepare cash book separately, bank book separately. This doesn't make sense showing everything together. Okay. First thing that you're supposed to do is cash account. You need cash account. Now understand this. Have they given you cash balance? Yes. Can you see here? Cash balance is given. Okay. We need cash account. In fact, cash account closing cash balance 7,000 is given here. I don't know why again. But we'll prepare cash account to see the missing figures. We know incomplete records. Then we have to prepare bank account. After bank account, we will also have to prepare debtors account. We have to prepare the debtors account. After debtors account, we will have to prepare creditors account. Creditors account. After creditors account, you have to prepare trading P&L and balance sheet. Okay, trading and P&L account. For the year ended 31st December 2023. Then finally you will need balance sheet as at 31st December 2023. That much we have to do. Now what happens always when we have a situation like this? First thing we are supposed to do is, as a working note, we'll prepare statement of affairs. Statement of affairs as on 31st December 2022. That means opening balance sheet. Opening balance sheet information, what do we have? We have things given here. See, 2022. We have cash balance. Put it into the balance sheet. Cash 4,000. Then we have debtors 27,500. Debtors 27,500. Then we have unsold inventory at cost, that is stock. Stock is 10,000. Then we have prepaid expense. $2,000. Then we have creditors. $29,500. Creditors 29,500. Is this clear? That is the situation. Then what do we have? We know the bank balance 11,000. Bank balance is 11,000. Why did we prepare this opening balance sheet? So we know the what is the capital. So 4,000 plus 27,500 plus 10,000 plus 2,000 plus 11,000 minus 29,500. So 25,000 is the balancing figure. This is your capital. Balancing figure 25,000. Is this clear? Okay. So whenever we are finalizing the balance sheet, that time we'll take that capital and start. Okay. That shouldn't be an issue. That should be it. Or we can write now only capital. Opening balance 25,000. Now we'll go into our preparations of all the things. All preparations will start. Cash. We'll have to balance brought down, by balance carried down. To balance brought down, by balance carried down. What is cash? 4,000 and 7,000. 4,000 7,000. Next, debtors. Okay, bank. To balance brought down, by balance carried down. What is the bank opening balance they have told in the question? Opening balance of bank is 11,000 and the closing balance of bank is 16,500. 16,500. Then what we are going to do? Debtors. Debtors, can you see they have the opening balance 27,500. So you'll write to balance brought down 27,500 and debtors closing balance by balance carried down. What is the debtors closing balance? 37,000. 37,000. Then creditors by balance brought down. What is the creditors balance? 29,500. And then you can write to balance carried down 25,500. Is it clear? Yes, that's how it should be. Okay, now let's continue. Let's start reading the question from starting. From here, deposits, cash out of cash sales. Cash out of cash sales. So when you deposit, what is the entry? For depositing, always the entry is bank account debited to cash account. 1,25,000. And here you will write by bank account 1,25,000. Okay, collection from credit customer. Collection from credit customer 3,50,000. What is the entry for this? Bank account debited to debtors account 3,50,000. And debtors you are going to write by bank account 3,50,000. Next, income from personal investment. Income from personal investment. So that will be bank account debited to capital account 36,000. Bank account debited to capital account 36,000 and in balance sheet you write plus additional capital 36,000. Okay. Next, cash withdrawn from personal drawings. Personal drawings. Okay. Cash withdrawn from personal drawings. Not from, it should be for. Okay. Cash withdrawn for personal drawings. So what will be the entry here? Here we will write directly. Here is the balance bank account. By okay, now see they have withdrawn for personal drawings. Personal drawings means what? It is personal, no, that fellow's it has to go no to his pocket. Okay, shop expense means what? It is related to business. So understand this difference. So cash withdrawn for personal drawings. So now what we are going to do? First we are going to write by drawings. By drawings. How much is the drawings? 20,000. And then that 20,000 should be subtracted from the capital where we write minus drawings 20,000. Then next, shop expenses 40,000. So we will write in bank account, we will write by shop expenses 40,000 and then in P&L we will write 2 shop expenses 40,000. Shop expense should go to P&L 40,000. Is it clear? Yes. Checks issued to suppliers. Totally 3,90,000 check we have issued to supplier. When we have issued check to supplier, creditors account debited to bank. Creditors account debited to bank account 3,90,000. And here we will write in the bank account by creditors 3,90,000. Checks issued for personal purpose. Again, we have issued some check for personal purpose. So again, it will be by drawings 55,000. So that also will be subtracted from capital. 20,000 plus 55,000, 75,000. Next, bank charges 500. Bank charges 500. So what will be the entry? Bank charges account debited to bank account. So you will write here by bank charges 500, and bank charges is an expense. Expense will go to P&L. So you will write here 2 bank charges 500. Okay, that should be it with the bank transactions. If you check the bank now, bank is closed now. Use your calculator and see 11,000 plus 125 plus 350 plus 36,000 minus 20,000 minus 40,000 minus 390 minus 55,000 minus 500, 16,500. Bank account is done and dusted. We don't have anything to do with bank account anymore. Closed. Let's go further. Raja informs you that he has the following assets and liabilities. Okay. Prepaid expenses and all is there. Now, prepaid expenses, in our P&L, till now, did we have any expenses? Yes, shop expenses we had. So, when we are showing shop expenses, what we can do is, we will show shop expenses in such a way, 40,000 and adjust the prepaid. Okay, how much is the prepaid? Last year's prepaid is 2,000. So, add it because it is related to this year. This year's prepaid is 3,000. So subtract it because it is related to next year. So totally 39,000 is your shop expense. So last year's prepaid, add it because it's related to this year. This year's prepaid, subtract it because it is related to next year. Okay. That should be it. Then we will go further. Cash balance we have already put. Amount due for customer, the balances are put. Unsold is stock. Prepaid we have taken, liabilities we have taken. He uses, see, understand this, he uses 75% of cash sale proceeds for making cash purchases, the remaining balance being deposited in bank. 75% of cash sale proceeds he is using. So cash sale, whatever we get, 75% he is using for cash purchases, remaining he is putting it into bank. We know what he has put into bank, no? We know what he has put into bank. 125. Can you see over here? 125. So therefore, we are going to write cash account debited to sales account. 125,000 is 25%. How much is 100%? 1,25,000 is what he has deposited. That is only 25%. 1,25,000 into 100 divided by 25. So 5 lakhs is your cash sales. 5 lakhs is your cash sales. So simultaneously, what can you do? You can go to your trading account and write by sales 5 lakh cash sales. Credit sales we have to find. And here, whatever we got, what is he doing with the remaining money? He is using it for purchases. So here, by purchases, cash purchases, 5 lakh into 75%, 3,75,000. 5 lakh into 75%, 3,75,000. Is this clear? Are you following this? That is what they told, 75% of cash sale proceeds for making cash purchases. remaining balance being deposited in bank. So now what we will do, go into the P&L. 2 opening stock will be there, 2 purchases will be there. Purchases, cash purchases 3,75,000. Credit purchases we have to find. Is this clear? Yes. Now what happens after that? He had allowed cash discount of 5,000 to his credit customers. Cash discount he has given to his credit customers. Entry for this will be discount allowed account debited to debtors by discount allowed 5,000, and discount allowed is an expense. It will go into P&L. So you'll write over here to discount allowed 5,000. Next, for prompt payments, he was allowed cash discount by his supplier 7,000. Supplier gave him discount. Discount received. Creditors account debited to discount received. To discount received 7,000, and we can put it into P&L by discount received 7,000. Clear? Collection from credit customers and payment to suppliers of goods are invariably by cross check. So we already took it in check only. You are asked to prepare all these things. Okay. Yes. That's it. So now what we will do, one by one, we will have to close things one by one. Cash account is not closed yet. Nothing is closed in cash account. Can you see 4,000 plus 5 lakhs minus 125 minus 375 and 7,000. 3,000 is still missing. Okay, something is missing. 3,000 is there. We'll keep that pending. Bank is closed. Debtors you see. Opening balance we have. Amount that we have received is there. Okay, discount allowed is also there. Closing balance is also there. What is missing? Sales, credit sales. 2 sales balancing figure. 3,50,000 plus 5,000 plus 37,000 minus 27,500. 364,500 is credit sales. 364,500 is credit sales. So 350 plus 5 plus 37,000. Okay, minus 27,500. 364,500 is your credit sales. Go and add that to your sales. 364,500. So your total sales will become 864,500. Your total sales right now stand at 864,500. Clear? What happens after that? After debtors. Debtors are closed now. Creditors you see, again opening balance is there, closing balance is there, amount paid is also there, discount received is also there, missing thing is credit purchase. So by purchases, balancing figure 390 plus 7,000 plus 25,500 minus 29,500, 3,93,000. 3,93,000. 3,93,000 is your purchases. Put that into your trading account. 3,93,000. So 3,75,000 plus 3,93,000. 7,68,000 is your purchase. 768,000 is your purchases. Okay. So creditors also closed. Debtors also closed. Bank is also closed. In cash, no, there is something missing. 3,000 rupees from where we got? Miscellaneous income. So to miscellaneous income balancing figure 3,000. Miscellaneous income balancing figure 3,000, and you can put that into your P&L by miscellaneous income 3,000. Is this clear? With that we are done with all the ledgers. Now the trading account. Stocks are already there. Can you see the stock is given in the balance sheet itself? Stock is 10,000 and 13,000. Opening stock 10,000. Closing stock 13,000. And because closing stock is 13,000, closing stock will go to balance sheet as well. Stock 13,000. Clear? Then other things that go to balance sheet, cash, closing balance, cash balance is 7,000, bank, closing balance, bank balance we have seen it is 16,500, 16,500, debtors, closing balance, debtors closing balance is 37,000, that will also go to balance sheet. Cash is done. Unsold inventory done. Prepaid expense will also go to balance sheet. Prepaid expense 3,000. Okay. Liability for goods. Wait. Liability for liability. This is 25,500. Creditors basically 25,500 is your creditors. All this is done. Now only need to find the profits. Okay, creditors 25,500. That should be it. Now all that we are supposed to do is use your calculator, find the gross profit. 864,500 plus 13,000 minus 10,000 minus 768. 99,500. To gross profit carried down. 8,64,500 is sales, 13,000 is closing stock, opening stock is 10,000, 768 is purchases, 99,500. By gross profit brought down 99,500. And this will lead to finding the net profit. 99,500 plus 7,000 plus 3,000 minus 39,000 minus 500 minus 5,000. 65,000 to net profit carried forward to balance sheet. 65,000. Add net profit over here 65,000. So now you have opening balance 25,000 plus additional capital 36,000 minus drawings 75,000 plus net profit of 65,000. So you have total capital right now 51,000. Total capital 51,000. Okay, 51,000 plus 25,500. And here you have 30,000 plus 7,000, 16,500 plus 37,000 plus 3,000. So your balance sheet total is 76,500. Balance sheet total is 76,500. Very complex question, very, very important. Understand this. First, you have to prepare cash account, then bank account, then debtors account, then creditors account. Why we are preparing this? For a purpose. Cash account, if you would not prepare, you would not know the miscellaneous income. Bank account, just to check if anything is missing. Debtors, creditors to find the sales. Okay, sales and purchases. Trading account to find gross profit. P&L, you need the net profit. That goes to balance sheet, and then finally your balance sheet will tally. I think they also got it right this time. Yes, that should be it. These are some unsolved questions we have solved from chapter number 3. Okay, we will also solve the past examination questions. Last 2 exams, we'll see what they have asked from these 2 chapters. Okay, we'll do that in the next video. All the best for your CMA exams. Okay, let's begin. So we had solved the unsolved questions in the previous videos, and now we will move into the unsolved case. There is one unsolved case that is there, which you could have tried as homework. Now I'm solving it. Okay, Citizen Sports Club is a prominent sports club of Nagpur, Maharashtra. During the immediately concluded financial year, the club organized a number of activities during the year involving its members. The following extracts of various receipts and payments made by the club during the year ended has been made available to you from the club's official records. Okay. So we are supposed to prepare receipt and payment is given. So maybe they will ask us to prepare income and expenditure account. You have the balance, subscriptions, entrance fees, proceeds from concerts, all those things, regular items only. Mr. Girish Agarkar Secretary of the club has approached you to finalize the accounts of the club. As per his advice, Chief Accountant of the club, Mr. Parash Oja, provided you the following additional information. Extra information is also provided. 1. Subscription included arrear subscription brought over from previous year. Okay, last year subscription outstanding. Interest on investment included 10,000 in respect of interest accrued in the preceding period. It is also related to last year. Upkeep of ground and wages of groundsmen include 30,000 and 15,000 respectively, applicable to preceding year. That is also from last year. We had a similar question. Other ledger balances at the commencement of the financial period were as follows. Capital fund 40 lakh 10,000. Surplus brought forward 8 lakh 90,000. If I am not wrong, this question is same like a question which we just did yesterday. Can you see 40 lakh 10,000, 8 lakh 90,000. Balance sheet was also 13 lakh 60,000. Here also 13 lakh 60,000. Okay, it is same question as question 4. Question 4, can you see this question which we had solved in the previous video? Okay, same as question 4. See everything. Entrance fees to be capitalized, outstanding liability for groundsman, printing, interest accrued and outstanding on investment, depreciation to be provided, 2%, 5%, 33.33%. Everything is same. Okay, same to same it is. So you can just take this. No need to even solve this again because it's already solved. Only thing is name they have changed and numbers are all same. Okay. Now we'll go into our previous examinations. December 2023. We'll see what they have asked in December 2023 from this chapter. Okay. Final accounts, there is one 7-mark question. Then what? Incomplete records, there is one 7-mark question. 14 marks from this chapter. Okay. December 2023. Question number 2B. Question number 2B is asked from final accounts. 7-mark question is asked from final accounts. Clear? So now what we are going to do? From the following details, prepare an adjusted trial balance as at 31st March 2023. Okay, you can see the trial balance here given. Now you are supposed to prepare. Okay, prepare an adjusted trial balance, they said. What did they tell? Not to prepare final accounts, prepare adjusted trial balance itself. Okay, purchases, carriage inward, wages, salaries, rents and taxes, insurance, interest paid, sales, cash and bank, bills payable. Other side, I mean, we have still bills, sundry creditors, plant and machinery, building, furniture, bills receivable, sundry debtors, capital, sundry expenses and opening stock. All this we have. Now, let's see what and all they have asked us to do. Note number 1. Salary and wages due to be paid 2,000 and 1,000 respectively. If it is to be paid, we are supposed to prepare adjusted trial balance only. So what will happen? This will get added to salaries and then you will show it as outstanding salary. This will get added to wages. Then you will show it as outstanding wages, liability. Salary account debited to outstanding salary is the entry. Wages account debited to outstanding wages is the entry. Insurance was paid to the extent of 300 advance, prepaid. So what we will do? Minus from insurance and then we will show it as prepaid. Prepaid insurance account debited to insurance. A sum of 500 to be written off as bad debt out of sundry debtors. So what we will do for this? Debtors we are going to minus and then we are going to show bad debt as an expense. Okay. And a provision for 5% is to be created for doubtful debts. Provision for 5% is to be created for doubtful debts. Okay. What are we going to do? P&L account debited to provision for doubtful debts. But we are not preparing P&L only. No, here they told you to prepare an adjusted trial balance itself. Okay, so P&L will have a loss. For this, the entry is P&L debited to provision for doubtful debts. Okay, sundry expenses include 200 spent for the personal purpose of the proprietor. 200 is spent for personal purpose of proprietor. So what we will do? Minus it from expense, remove from expense, and then show it as drawings. Remove from expense and show it as drawings. Sales for the period include 500 worth of goods, cost price taken by the proprietor for personal consumption. He has also taken goods worth rupees 1000 for personal consumption, which has not been recorded in the books. Oh. This one, what we'll do? We will take it as drawings. Then we will reduce it from purchases. Clear? Sales for the period 500. Period include 500 worth of goods cost price taken by the proprietor. So what we are going to do? This also we will subtract it from sales. Okay, we will remove it from sales because sales includes 500 taken by owner. 500 is taken by owner. So what we have to do? Remove it from sales. Then what we should do? We should take it as drawings. Reverse the sale, then take it as drawings. Depreciation to be provided as follows. These three depreciations, and closing stock should be provided as follows. 20,000. Okay. So everything will get adjusted. So we need to prepare a trial balance. Now, let's do this. Something different. They have asked trial balance. They have asked in final accounts. Okay. Now, we have the trial balance format in the books of whose books they have asked all this. In the books of we don't know. They have not told anything. Now, first thing, whatever requires adjustment, we will do it. First thing is purchases. First item over here is purchases. And purchases has the most adjustments. Okay, first item is purchases. Purchases has the most adjustments. Now, what are we going to do? Try and understand over here. Let's make a working note so that we are clear about things. Purchases. Okay, purchases. 65,000 is written. 65,000. Now, stocks have to be adjusted. So what we are going to do? Stocks minus opening stock. Sorry, plus opening stock. How much is opening stock? Opening stock is 21,000. We'll adjust it with purchases. 21,000 minus closing stock. Closing stock is 20,000. That will be adjusted. 20,000. That time what will you get? You will get 64,000. This is called as adjusted purchases. This is called as adjusted purchases. Adjusted purchases. Is this clear? Okay. Now, you are having adjusted purchases. Clear? Now, there are some things which were there which we have to worry about. What is that? Sundry expenses, all that is fine. Sales, all that is fine. But one drawing is not taken only. So what will happen? Minus drawings minus drawings 1000 minus drawings 1000. This has to be removed from purchases. What about this sales? Sales for the period include 500 worth of goods, okay, taken by the proprietor for personal consumption. It is included in sales. So you remove from sales. Sales will be debited. Sales will reduce. Now, what will you credit? Sales will be debited. What will you credit? Usually, what is the entry for sales return? Sales return account debited to customer. Okay, so now what we have to do? First, we have to reverse it. Sales for the period includes 500 worth of goods which was taken by the proprietor. So first we have to remove it from sales 500. Okay, then we will reduce it from customer as well. Then we will pass the entry. Are you getting my point? Then we will pass the entry for drawings. So what will happen? One more drawings will go from here, and that drawings is 500. 500 rupees goods are also gone. Okay. So now what should we do? This should be our purchases, adjusted purchases. 64, 63, 63, 62,500. Total purchases for us will be 62,500. Is this clear? Yes. So you can write purchases 62,500. Next, after purchases, we have carriage inward. There is no problem with that. You can directly write carriage inward in the trial balance 1000. Next, wages 6000. Now what we have to understand, wages, there is an adjustment. Wages due to be paid 1000 over here. So what we will do, wages 6000 plus 1000. So wages is 7000. And immediately we will write outstanding wages. Immediately we will write outstanding wages 1000. Next. Okay, next one is salaries 10,000. You will write salaries. Okay, salaries 10,000. Salary to be paid is 2,000. So 10,000 plus 2,000 outstanding. So salary will be taken as 12,000. And then you are going to write outstanding salary 2,000. Clear? Next, rent rates and taxes. We don't have anything to do with that. No adjustment, nothing. Rent, rates and taxes. Okay. 1,800. 1,800. Next you have insurance. Insurance had one advance also 300. So what you are going to do, insurance, you are going to write 1,500 minus 300. 1,500 minus 300. Insurance will be 1,200. And then you are going to write prepaid insurance. Prepaid insurance 300. I hope it's clear. Next, after that, then sales, interest paid is there. Interest paid, do we have any adjustments? No. 10th one, we can write interest paid. How much interest is paid? 1,000. 1,000. 11th one, sales. Sales 95,000. From that you remove that 500 drawings ka, that makes it 94,500. 94,500. So these two adjustments are taken care of. Bad debt we have to see. Sundry expenses 2,000 spent for personal purposes. Okay, that we'll have to do. Sales for the period 500, that we are doing now. Sales I have removed 500. Okay. Next. After that, what we are going to do? Cash at bank. No problem there. Bank balance 21,500. Next. Bills payable. No problem there. Bills payable 5,800. Next. Sundry creditors. No problem there as well. 35,000. Next, plant and machinery. Shouldn't be a problem. 10,000. Next, buildings. Oh, plant and machinery we cannot take directly. There is depreciation. Sorry. Plant and machinery 10,000, but depreciation rate is 10%. So plant and machinery 10,000 minus 10%. This will become 9,000. 16th one. Building 5,000. What is the building depreciation rate? 5% minus 5. That makes it 4,750. Then we have 17th one item, that is after building we have furniture. Furniture they have told 10% depreciation rate. Furniture is 3,000. Furniture 3,000 minus 10%, 2,700. So now 18th item, don't forget depreciation. On building it was 1,000. On plant and machinery 1,000. Building it was 250. Furniture it was 300. So 1,550. 1,550. Okay. Next. Bills receivable. Bills receivable 10,000. Next. Sundry debtors. This one we have to be careful. 20th one. Sundry debtors. Sundry debtors. Be careful. It is 40,000. It is showing 40,000. So 40,000, from that you are going to remove 500, that sale. Okay, that sale 500 we are going to remove. And then what we are going to remove? 500 was to be written off as bad debt. So minus 500. So now the sundry debtor becomes 39,000. Sundry debtor becomes 39,000. I don't think there is anything else. We have to create provision for doubtful debts. That's a different topic altogether. Okay, now after that, sundry debtors, let's create provision now only. So it becomes provision for doubtful debts, 39,000 into 5%. 39,000 into 5%. So 39,000 into 5% will be 1950. So we'll create PDD of 1950. Which will result in P&L having a debit balance of 1950. Clear? So when you are done with that, the next thing that we are going to do is capital 60,000, 66,000. Capital is 66,000. We don't have any change in that one. We haven't spoken about anything. Capital 66,000. Next, we move into sundry expenses 5,000. Sundry expenses But there also 5,000 minus, there is one drawing included in that also. 2,000 spent for personal purpose. So minus 2,000, that makes it 3,000 sundry expenses. And the last item that we are supposed to take is drawings. Drawings, 500 was included in sales, 1,000 was included in purchases, 2,000 is included here in expenses. So 3,500 is your drawings. Yes, you can take it down, and this is your corrected trial balance. This is your corrected trial balance. Yeah, if you look at this trial balance, no. If you look at the trial balance, it will not tally. Can you see? Purchase is 65,000, sales is 95,000, credit item is 95,000. Then we have creditors, 35,000. Then we have capital, 66,000. All the liabilities are huge. Assets are small. Okay. So there are some errors which are not told to us. Okay. This is all that we can do with this trial balance. In the books of dash 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 dash, this is what has happened. Okay. So many things are given to us. Information is provided. We prepared the adjusted trial balance. Okay. Can you see they have asked in the question to prepare adjusted trial balance? Okay. Basically, whatever rectifications they told, that they want to see whether you know to do it or not. Okay, that's why it is asked only for 7 marks. If it was fully final accounts, it would have been asked for a little more. Okay, let's go to the next question. In December only they asked one more question from final accounts. That was incomplete records, 7 marks. Rajesh does not maintain proper books of accounts. From the following particulars, prepare the trading, P&L and balance sheet as on that day. They have given debtors account, stock account, furniture account, creditors account. Summary of other transactions is as follows. Cash collected from debtors, cash paid to creditors, salary, rent, all these things are given. He had paid 25,000 as cash balance. He had 25,000 as cash balance in the beginning of the year. Starting of the year, he had 25,000 as cash balance. So we know one by one what and all we require. Whenever it is incomplete records question, we know what and all we require. What is the question number 4? Correct, question number 4. 7 marks it is asked. Oh, I'm sorry. This is asked for 14 marks. Question number 4, 14 marks they have asked, incomplete records, 14 marks. Okay, so question number 4, what and all we are supposed to do? Always, one, we need opening balance sheet. So we need statement of affairs, we call it. Statement of affairs as on starting date. 31st of March 2023, they told us to prepare 31st of March 2022 ka statement of affairs. 31st of March 2022. And we have debtors 90,000, stock 49,000, furniture 5,000, creditors 30,000. Creditors, we have 30,000. And then they said at the end of the question, he had cash balance in the beginning of the year, 5,000. He had cash balance in the beginning of the year, 5,000. Anywhere about bank, they have not mentioned any information only. So you can write cash 5,000. If you total this, you should find the capital. Capital is the missing figure. This will be your balancing figure. So use your calculator. 90,000 plus 49,000 plus 5,000 plus 5,000 minus 30,000. You get capital of 1,19,000. This is your capital. This we will use later. Then after that, we have some ledgers to be prepared. We need debtors account. We need creditors account. Furniture also we have to analyze and see what's happening. Okay. So furniture account also we will prepare. Debtors account, creditors account, furniture account. Then we can prepare cash account, then trading P&L balance sheet. Okay, certain things we cannot avoid. First thing, we need debtors account. Debtors account to find sales, obviously. Then we need creditors account. We need creditors account. Okay. Then we need furniture account. Furniture account. Then we need cash account. Cash account. Then our story starts. Okay, then our story starts where we are going to prepare trading and P&L account for the year ended 31st March 2023. Then we are going to prepare balance sheet as at 31st March 2023. With this will be done with our solution. This is what we are waiting for. Okay, now we'll start with the question. Debtors, we know the opening balance as well as closing balance. 90,000 and 1,25,000. We will enter it. So we'll write to balance brought down 90,000 by balance carried down 1,25,000. So we know the opening balance, closing balance. Stock, opening stock, closing stock. Where will it go? It will go directly into our trading account. If I have a trading account, so much, I'll write to opening stock by closing stock. Opening stock is 49,000, closing stock is 66,000. Opening stock 49,000, closing stock 66,000. Okay. Furniture 5,000, 7,500. So go into the furniture account and write to balance brought down 5,000 by balance carried down 7,500. Next, creditors 30,000, 22,500. Go to creditors ledger and write by balance brought down 30,000 to balance carried down 22,500. Then we go into the summary of the cash transactions. And cash, they have told here end of the year 25,000 is the cash balance to start. So cash account, what we can do? Cash account to balance brought down 5,000. Carried down, we don't know. End of the year, he had cash of 25,000. No? Cash balance is 25,000. Oh. Cash balance is not 5,000, 25,000. That will be a small change. So it will be 90,000 plus 49,000 plus 5,000 plus 25,000 minus 30,000. 139. 139 will be your capital. Yeah, cash balance is 25,000. Cash balance 25,000. He had cash of 25,000 in the beginning of the year. Okay, this should be it. Now what we are going to do? Cash collected from debtors 3,04,000. What should be the entry? Entry is cash account debited to debtors account 3,04,000. Go to debtors account and write by cash account 3,04,000. Next, cash paid to creditors 220. So creditors account debited to cash account 2,20,000. Go to cash and write by creditors account 2,20,000. Next, salaries 60,000. So you will write salary account debited to cash account. So you will write by salaries 60,000, and salary is an expense. It will go to P&L to salaries 60,000. Next, rent 7,500. You will write by rent 7,500, and here you are going to write to rent 7,500 in P&L. Okay, office expenses 9,000. So again you will write by office expenses 9,000, and then you will put it into P&L to office expenses 9,000. Then drawings 15,000. Drawings 15,000. So you will write drawings account debited to cash. So by drawings 15,000, and in balance sheet what you will do? You will write capital and write opening balance 1,39,000, which we just calculated, 1,39,000, and then we will write minus drawings 15,000. Additional capital introduced 10,000. What should be the entry? Additional capital introduced, cash account debited to capital account. Cash account debited to capital account 10,000, and then go into the capital and write plus additional $10,000. Okay, next, cash sales 7,500. Cash sales is 7,500. You can see over here. So you will write cash account debited to sales account. Directly you will write in cash account debited to sales account 7,500. Go to trading account and write by sales, in bracket you write 7,500, plus later we will add the credit sales. Next, cash purchases 25,000. Go to cash account and write by purchases 25,000. Then go to trading account and write to purchases 25,000, plus we will add the credit purchase. Next, discount received 3,500. What is the entry for discount received? Discount received means creditor account debited to discount received. Creditor account debited to discount received 3,500. Put it into P&L by discount received 3,500, because 3,500 is going to be income. Clear? Next, discount allowed 1,500. You can put into P&L to discount allowed 1,500. Then you can put it into debtors account, discount allowed account debited to debtors by discount allowed 1,500. Next, returns inward 5,000. Returns inward means what? Sales returns. So what should be the entry? Sales return account debited to debtors account. So you'll write over here by sales return 5,000. Okay, and sales return will be subtracted from sales. So here you'll write minus 5,000. Next, Returns outward, purchase return. Returns outward is purchase return, creditor account debited to purchase returns. Creditors account debited to purchase returns, that is 4,000. And purchase return also will be subtracted from purchases. So minus 4,000. Next, bad debts. Bad debt, what is the entry? Bad debt account debited to debtors. Go to debtors and write over here by bad debt 1,000. And don't forget to put that bad debt into P&L. Two bad debts 1,000. Sorted. Now what we are supposed to do? We are at the end of the question. Done. That's it. Now we are supposed to close one by one whatever we have. Okay. Now debtors account. First we'll close debtors account. 3,04,000 plus 1,500 plus 5,000 plus 1,000 plus 1,25,000. 1,25,000 minus 90,000. 3,46,500. This is two sales balancing figure. So you got the sales. So what do you have to worry about? 3,04,000 plus 1,500 plus 5,000 plus 1,000 plus 125 minus 90,000. Yes, 3,46,500. So what will you do? Go into your trading account and write 3,46,500. Okay, plus 7,500. Total sales you will get. Minus that 5,000 sales return. So your sales will be 3,49,000. 3,49,000 sales. Clear? Then what we do? Debtors account closed. Now creditors account. Creditors account you check 2,20,000 plus 3,500 plus 4,000 plus 22,500. Okay, minus 30,000. 2,20,000. You're going to write by purchases. Balancing figure. By purchases, balancing figure. Okay, 2,20,000. So what we will do? Go to trading account and write plus 2,20,000. 2,20,000 plus 25,000 minus 4,000. 2,41,000 is your purchases. So your purchases is 2,41,000. So creditors also closed. Now creditors closed. Furniture. Can you see furniture? 5,000 became 7,500. How is it possible? That means they have purchased the furniture. So you have to write furniture account debited to cash account 2,500. And here you are going to write by furniture 2,500. Otherwise there is no way furniture can increase. Okay. So that is the missing link there. Then cash account finally you are going to write by balance carried down. You don't have closing balance in cash, so you're going to calculate by balance carried down. Okay. So 25,000 plus 3,04,000 plus 10,000 plus 7,500 minus 2,20,000 minus 60,000 minus 7,500 minus 9,000 minus 15,000 minus 25,000 minus 2,500. So you are left with a balance of 7,500 cash balance. That will go straight into balance sheet. You will write cash 7,500. Clear? 7,500. Now what you are going to do? Calculate gross profit. You will write to gross profit carried down by gross profit brought down. So you will write 349,000 plus 66,000 minus 241,000 minus 49,000. So your gross profit is 1,25,000. 1,25,000. Then to net profit carried forward to balance sheet. You have 125 of gross profit plus 35,000, sorry, 3,500 of discount minus 60,000 minus 7,500 minus 9,000 minus 1,500 minus 1,000. 49,500. 49,500. Clear? So 128,500 we have, minus 60,000 minus 7,500 minus 9,000 minus 1,500 minus 1,000. 49,500 is your net profit. Quietly add it to balance sheet. Add net profit 49,500. So your capital will be 1,39,000 plus, sorry, minus 15,000 plus 10,000 plus 49,500. 183,500 will be your total. Capital. Now what we have to do, other things. Debtors and all we know. Debtors is 125. Debtors closing balance 125. Then we know stock 66,000. Then we know furniture 7,500. Then we know creditors 22,500. That should be it. This is your small balance sheet. So 183,500 plus 22,500. 2,06,000 minus 7,500 minus 125 minus 66,000. Yes, 2,06,000 is your balance sheet total. This is how it should be. Okay, nice, simple, easy 14-mark question they have given. Okay, balance sheet is here. This is your trading and P&L. This is your cash account, furniture account, creditors, debtors, statement of affairs. All these things you need to do. Clear? Yes. That was your December 2023 exam paper. Yes, we'll go into June 2024 paper. Can you see incomplete records? Again asked for 14 marks. June 2024 paper, again incomplete records is asked for 14 marks. Sohan is a small trader and does not maintain his books of accounts on double entry system of accounting. The details of his business are available to you as follows. Cash, it was 0, it became 1,000. Bank balance, they have given. Sundry debtors, they have given. Sundry creditors, they have given. Stock is their, investment is there, plant is there, furniture is there. Sohan has withdrawn 3 lakhs during the year and he introduced fresh capital. Of 65,000 on 1st October 2022. The provision of 5% on sundry debtors is necessary. Write off depreciation on plant and machinery at the rate of 15% per annum and on furniture at the rate of 10% per annum. Interest on opening capital to be allowed at the rate of 10% per annum. The manager is entitled for a commission at the rate of 10% on the net profits. After charging such commission, you are required to ascertain Sohan's profit or loss for the year ended 31st March 2023. Profit or loss they have asked you to calculate. How will you do this? Okay. Can you see? They haven't given any list of transactions, nothing. Any list of transactions, nothing they have given. Bank balance and all they have given. So all that we know, okay, all that we know is cash has increased, okay. Bank balance has changed. It was liability, we have balance now. Sundry debtors, there is an increase. Sundry creditors, there is an increase. Okay, sundry debtors increase, sundry creditors increase, stock also there is an increase. So, investments they have purchased, so money has gone for that. Plant. So what we have to do, we have to analyze and see how much is our sale, how much is our purchases. Then we can go ahead with everything else. Now, understand this. I'm preparing first bank account. Okay. Bank account. Then we have our debtors account also. Debtors. So basically, how are we going to do this? We are just going to increase. Correct? Okay. Now, understand this. Instead of doing bank account, we have an alternative method. Easily we can do it. Prepare statement of affairs first. 1/4/2022. Okay, 1/4/2022 will prepare statement of affairs. Statement of affairs as at 1/4/2022. We have information. Cash is not there. Bank is there. Bank is credit balance because it is bank OD. Bank is having credit balance 74,000. Bank OD. Then we go into debtors. Debtors 5,30,000. Debtors 5,30,000. Then we go into creditors 1,50,000. Creditors 1,50,000. Then we go into stock 170. Stock 1,70,000. Then we move into investment 120. Investments 1,20,000. Then we go into plant 2 lakhs. Plant 2 lakhs. Furniture is 14,000. Clear? Now, rest of the things are later, no? He has withdrawn some capital and he introduced some fresh capital. Provision of 5% on sundry debtors necessary. Right of depreciation on plant and machine 15%. Furniture 10%. Interest on opening capital to be allowed at the rate of 10% per annum. The manager is entitled to a commission. All this we will see later. On net profit after charging such commission. So first we know this is the situation. Understand again. Bank OD 74,000. Sundry creditors 5,30,000. What? Sorry, sundry debtors 5,30,000. Okay. Sundry creditors 1,50,000. Okay. Stock 1,70,000. Okay. Investments 1,20,000. Okay, that's also done. Plant 2 lakh, furniture 14,000. Plant 2 lakh and furniture 14,000. So now we should get the capital. What is missing for us is capital is the balancing figure. Now 2 lakhs plus 14,000 plus 5,30,000 plus 1,70,000 plus 1,20,000 minus 74,000 minus 1,50,000, 8,10,000 is your capital. If profit is earned, capital will increase, no? Profit is earned, capital will increase. So now what we will prepare? We will prepare statement of affairs as at 31st March 2023. 31st March 2023, end of the year. Now what we have? First thing, cash. Okay. Cash 1,000. Bank balance debit. So we have money in the bank. Bank 40,000. Sundry debtors 8,80,000. Debtors 8,80,000 minus provision for doubtful debts. Minus provision for doubtful debts. What is the provision for doubtful debts? They have told a provision of 5% on sundry debtors is necessary. Okay. At the rate of 5%. So 8,80,000 into 5%. will give you 44,000. So 8,80,000 minus 44,000, 8,36,000 is your debtors net balance. Sundry creditors 195. Creditors 1,95,000. Next, after that you have stock 190. Stock 1,90,000. After that you have investments 135. Investments you have 1,35,000. Then you have plant 2 lakhs. But what did they tell? Depreciation at the rate of 15% per annum on furniture and at the rate of 10% 15% per annum on plant. So now plant will be 2 lakh minus 15%, 1,70,000. 2 lakh minus 15%, 1,70,000. And then we have furniture, which was at 14,000. So 14,000 minus 10%, 12,600. 12,600. So plant has been modified, furniture modified, investment same, stock is given, cash is given, bank is given, debtors we have to create provision. Okay, debtors we have to create provision. The manager is entitled to commission. Okay, interest on opening capital to be allowed at the rate of 10% per annum. The manager is entitled to commission. All that we have seen. Now what we will get? We will get again the balancing figure as capital. We don't have to calculate. I'll tell you. We'll get the balancing figure as capital. Did we miss anything? Everything is related to owner only, no? Withdrawal, drawings is there. Additional capital is there. Then depreciation we have removed. Interest on opening capital to be allowed, that is going to be added to the capital on interest on opening capital 10%. The manager is entitled to commission. Manager is entitled to commission of 10% on the net profits after charging such commission. Okay, manager will be entitled to a commission. Okay. Now whatever remains is capital because manager commission we would have paid. Now whatever remains is capital. So finally we want what? Your required asset and so on's profit or loss for the year ended. We want the profit or loss of so on. Correct? Commission is paid, over, finished. So now what we will do is capital is the balancing figure. Find the capital first. So asset side 1,70,000 plus 12,600 plus 1,35,000 plus 1,90,000 plus 1,000 plus 40,000 plus 8,36,000 minus 1,95,000. You're getting 11,89,600. 11,89,600. 170 plus 12,600 plus 135, 190 plus 1,000 plus 4,40,000, 836,000 minus 195,000. 11,89,600. Now understand. Computation of profit. See the computation of profit. Okay. What is the profit? What is the opening capital? What is the opening capital? Opening capital is given 8,10,000. Opening capital is 8,10,000. Now go to the question. He had withdrawn 3 lakh during the year. Okay. So minus drawings. It should go down 3 lakh. Okay. 3 lakh should go down. Next. And introduce fresh capital of 65,000 on 1st October. Okay. Plus additional capital 65,000. Okay. Next, provision for doubtful debts, all that is done. Interest on opening capital to be allowed. So he is going to get add interest on capital. Opening capital was 8,10,000. On that, they are going to give interest of 10%. 10% per annum. 10%. So this will be 81,000 will get added again to his capital. interest will get added. Correct? When we do all this, if you see 8,10,000 minus 3 lakhs, okay, plus 65,000 plus 81,000, the total is only 6,56,000. 8,10,000, if you remove the drawings, add the additional capital, add the interest on capital, it's only 6,56,000. But what is the closing capital which we got? Closing capital which we got is 11,89,600. 11,89,600. Therefore, the difference between these two, 11,89,600 is 5,33,600. This is the profit for the year. This is the profit for the year after commission, everything. Commission is all removed, no? After commission only this comes and gets added to capital. So 5,33,600 is our final profit. 5,33,600 is our final profit. This is the computation of profit. What we did, we compared two capitals and we found the profit. Is this clear? Yes, this should be your solution. That's it. So we have solved two 14-mark questions and then also the previous questions, everything unsolved questions we have solved. That's it. All the best for your CMA exams. See you in the next video, guys. Welcome students. Let's go into the next chapter. Same thing what we have been doing in the previous two chapters. We will complete all the unsolved questions and then go into the past examination questions and solve that as well. So the first question we are going into is this question which is on your page number 436. So we are into partnership now. First 4 chapters we finished. Okay, now we are going into partnership. Question number 1. A, B and C are partners in Costco engineering work, sharing profits and losses in the ratio of 6:3:5. This is their profit sharing ratio. The balance sheet as on 31st December 2023 is given below. They are giving you the balance sheet. Balance sheet is given. You have capital A and B. You have current account A and B. Then you have reserves, creditors, mortgage loan. Then you have assets, land and building, furniture and fixtures, debtors, stock, bank, and C's current account. Can you see C's current account is on this side? That means C has a debit balance. Now, it was decided by the partners to dissolve the partnership on 31st of December 2023. They are dissolving the partnership firm. The following amount has been realized. Furniture and fixtures 2,000, land and building 6,000, debtors 20,000, stock 15,000. This is the money that they got. Creditors are agreed to forego 25% in full settlement of their total dues. Creditors agreed to forego 25%. That means they are giving up 25%, but they are getting paid for 75%. The full amount of mortgage loan has been paid. Realization expenses paid for 1,650. It was ascertained that B had become insolvent and B's estate had contributed only 50 paise in a rupee. Who is insolvent? B is insolvent. You are required to prepare realization account, bank account, partners capital account following the rules given in Garner versus Murray. What does Garner versus Murray tell? If there is an insolvent partner, other solvent partners will bear the loss in the capital ratio if one partner is insolvent. So question number 1. Okay, first thing that we are going to prepare is realization account. 100% we need realization account whenever there is dissolution. So realization account, that's the first thing. Then they asked us to prepare bank account. That's the next thing. Bank account, and finally we move into partners capital account. You can see they have told you realization account, bank account, partners capital account following the rules of Garner versus Murray. So partners capital account, if you are preparing, partners current account balance gets transferred to partners capital account. Partners current account balance will get transferred to partners capital account. So we have partners capital account. Who are the partners we have in this question? A, B and C. A, B, C are 3 partners. So we will have A, B, C, A, B, and C. Okay, so first thing what we are going to do, empty the balance sheet. Whatever is there in front of us, let's empty that. First thing is capital account. So go to capital account and write by balance brought down. A's capital is 25,000, B's capital is 15,000. A's capital 25,000, B's capital 15,000, nothing in C's capital account. C's capital account is 0. Current account 1,500 and C has a credit debit balance. So you'll write by partner's current account. Partner's current account. A is 1,000, B is 500. A is 1,000, B is 500. Then you're going to write to partner's current account. We have C, which is 4,900. C is having 4,900. Okay, A, B, and C, and partner's current account. Two partners have credit balance and one partner has debit balance. Next, after that, reserves. 1,400 reserves are there. Reserves will get distributed between partners again. So we'll write over here by reserves. It will get distributed in what ratio? In the ratio of their profit, 6:3:5. 6:3:5. How much do we have in reserves? We have 1,400 in reserves. So 6:3:5 is basically 6 by 14, 3 by 14, and 5 by 14. So you have 1,400 into 6 by 14, 600. Then 300 and 500. 6:3:5. Reserves get distributed. Creditors, where will creditors go? Creditors will go into realization account at book value. It get transferred to realization account. So you'll write over here by creditors account. By creditors account 28,600. 28,600. Then you have mortgage loan. So you'll write over here by loan account 4,000. Loan account is 4,000. Then you have land and building. We'll write to land and building account 10,000. Then you'll write to furniture and fixtures 5,000. Furniture and fixtures account 5,000. Next, to debtors 30,000. To debtors account 30,000. Then you have stock 23,100. So to stock account 23,100. Then you have bank. Bank will not go into realization account. Bank will be in bank account only. You'll write over here to balance brought down. What is the bank balance? 2,500. 2,500. With this, what we have done, we have emptied the balance sheet. Balance sheet is empty. Again, whatever happens, it has to be routed through these ledgers itself. Okay. Now it was decided that partners will dissolve on 31st of December. Following amount has been realized. Furniture we got 2,000. Land and building we got 6,000. So what we will write? Bank account debited. You're getting money to realization account. Furniture you got 2,000. Plant and machinery, land and building you got 6,000. So plus 6,000. Debtors 20,000. Stock 15,000. Plus 20,000 plus 15,000. Okay. So total amount we got is 2,000 plus 6,000 plus 20,000 plus 15,000. So totally we have 43,000 that is received. 43,000 we have received, and we can write in realization account by bank account 43,000. By bank account 43,000. Next, creditors are agreed to forego 25% in full settlement of their dues. Go and check. Creditor amount is 28,600. So you're going to write realization account debited to bank account 28,600 minus 25%. 25% they are going to forego, so we are not going to pay them. 28,600 minus 25%. 21,450. 21,450 by realization account 21,450. Then they have also told in the question that the full amount of mortgage loan has been paid. Mortgage loan is how much? 4,000. So we will write the entry realization account debited to bank account 4,000. And here we can write by realization account 4,000. So realization, we are making payment, okay, for the mortgage loan paid and the creditors also paid. Next, what do we have? We have realization expense paid 1,650. So the entry remains same, realization account debited to bank account 1,650, and in bank account you're going to write by realization account 1,650. Clear? What next? Then we have realization expenses paid. B became insolvent. B is the person who is insolvent, and B's estate had contributed only 50 paise in a rupee. So whenever we have the situation, first we are going to close realization account. Close the realization account. Check what is the profit or loss. 10,000 plus 5,000 plus 30,000 plus 23,100 plus 21,450 plus 4,000 plus 1,650, 95,200 minus 28,600 minus 4,000 minus 43,000. So the total loss that we have is 9,600. By partners capital account, we have three partners A, B and C. 9,600 is the loss, okay, and it is shared in the ratio of 6:3:5. So 6 by 14, 9,600 into 3 by 14, and 9,600 into 5 by 14, 6:3:5. So 9,600 into 6 by 14, that makes it 4114, and 9,600 into 3 by 14, 2057, and finally you have 9,600 into 5 by 14, 3429. 3429. So 3429 plus 2057 plus 4114. Totally 9,600 is your loss. So what will you do? Go into partners capital account and write to realization account, and you're going to write 4114 2057, 4114 2057, and finally you have 3429. 3429. This is the realization loss. Who is the partner who is insolvent? The insolvent partner is B. It was ascertained that B became insolvent. Okay, you can check, see here, B has become insolvent. Okay, so whenever there is a situation of insolvency, immediately if we have a loss, the solvent partners will bring money. Who are the solvent partners in this case? A is solvent, so he'll bring this, and C is solvent, so he'll bring this. So we'll write over here by bank account. A will bring 4114, B will bring nothing because it's insolvent, and C will bring 3429. C will bring 3429. So you can write here in bank to A's capital account 4114, and you can write to C's capital account 3429. 3429. This is the situation with the partner's capital, to A's capital account, to C's capital account. What next? What happens after this? So with this, we are closed with realization account. Realization account is closed. Next, what we are supposed to do? check what is the partner's capital. Which partner should we send out? We have to send the partner who is insolvent over here. The insolvent partner is B. See what is the situation. B has to give money or B has to take money. B has to take money, 15,000 plus 500 plus 300 minus 2057. 15,000 plus 500 plus 300 minus 2057. So basically B has to get 13,743. B has to get 13,743. So if you check the question, our loss on realization is 9,600 and final dividend to B 4,400, balance paid off A and C. So partner is insolvent, but partner does not have to bring any money. If partner is insolvent and partner has to bring money, then we have to worry about Garner versus Murray. Okay, if the partner does not have to bring any money, there is no question of worrying about Garner versus Murray. Garner versus Murray is when there is an insolvent partner, his loss will be borne by other solvent partners. You can see over here in B's capital account, there is no debit, only one debit here, and then everything is credit. So B does not have to give money, B has to take money from us. So what we will do, you can check to bank account. B has to take money, so 15,000 plus 500 plus 300, minus 2057, 13,743. 13,743. Go to bank account and write by B's capital account. 13,743. What about A? If you check A has 25,000 in his capital account plus 1,000 plus 600. Minus 4114. 22,486. 22,486. So here you can write by A's capital account 22,486. And what about C? You can see in C's capital account, C has to give us money, but C is not insolvent. C is not insolvent, so C will bring money. So you can write over here by bank account, balancing figure for C 4,900 plus 3,429 minus 500 minus 3,429. So we have 4,400. Amount paid to C will be 4,400. So here you can write to C's capital account 4,400. So C is going to bring 4,400 rupees. Now you can check the bank account. What is the situation with the bank account? 3,429 plus 4,400. 57,443. 21,450 minus 4,000 minus 1,650 minus 13,743 minus 22,486. You can check the realization account. The loss is actually 19,600. 19,600, 19,600 and 19,600 realization loss. So 19,600 into 6 by 14. This becomes 8,400. And here you have 19,600 into 3 by 14. That is 4,200. And then finally you have 19,600 into 5 by 14, 7,000. So totally 7,000 plus 4,200 plus 8,400, 19,600 is your loss. Okay, you can go and put that over here. Realization loss. Okay, realization loss 8,400, 4,200, 4,200 and 7,000. This is your realization loss. B is insolvent. So these people will bring money. Only these two will bring money. So you can write 8,400 and 7,000. And here also you can write A's capital account 8,400 and 7,000. Okay, that's the amount that is brought in. Then what we are going to do? We are going to check for B's capital account. Check B's capital account 15,000 plus 500 plus 300. Okay, minus 4,200. So 11,600 is what is going to be paid. 11,600. Okay, 11,600 we are paying to B because B has to get money. Okay, as we proceed further, let's look into A. A's account 25,000 plus 1,000 plus 600 plus 8,400 minus 8,400, 26,600. 26,600 we are paying to A, 26,600. Finally, we check for C. If you check C, 4,900 plus 7,000 minus 500 minus 7,000. So you have 4,400. 4,400 is paid to C. That is correct. There is no issue with that. C 4,400. Now you can check the bank account. 2,500 plus 43,000 plus 8,400 plus 7,000 plus 4,400. 65,300, and on the other side you have 21,450 minus 4,000 minus 1,650 minus 11,600 minus 26,600. So total of the bank account is 65,300, and with that the bank account is closed. So what we have done in this question, you can see realization account. First, transfer all assets and liabilities to realization account at their book value, empty the balance sheet. Then when we sell, we get money. When we pay, we lose money. All that is recorded, and loss is transferred to realization, partners capital account. The loss, realization loss, the solvent partners, in this case only A and C, they bring in money for their share of realization loss. Insolvent partner, if he has loss, that will be borne by other solvent partners, but in this case insolvent partner does not have any loss. So finally we make payment to all the partners who have to get money, and the partner who has to bring money will bring money. C has to bring money. C is not insolvent, so C will bring money. Clear? Yes, that should be it. Okay, A, B and C. You can see C's current account over here, this side, A and B, this side. Yes, that should be it. I think there is a small change here. This is 19,600. That is correct. Final dividend from B, 4,400. That is not the case. This is actually from C. And balance paid off to A, 23,850, and B, 14,350. Okay, they have gotten the numbers interchanged over there. Okay, this is the correct solution that we have to follow. That was question number 1. Let's go into question number 2. When we go into question number 2, again it's partnership itself. You can see P and Co having P and Q as equal partners. Equal partners means their profit sharing ratio is 1:1. Decided to amalgamate with R and Co having R and S as equal partners on the following terms and conditions. Okay, two partnership firms are there, P and Co, and then we have R and Co. In P and Co, P and Q are partners. 1:1 is the ratio. In R and Co, R and S are partners. There also 1:1 is the ratio. The new firm PR and Co to pay 12,000 each to each firm for goodwill. They are going to pay 12,000 for goodwill. New firm. Okay, so 12,000 plus 12,000, total amount it is paying is 24,000. Next, the new firm to take over investments at 10%, depreciation, land at 66,800, premises at 53,000, machinery at 9,000, and only the trade liabilities of both the firms. Okay, the debtors being taken over at given value. Typewriters written off worth 800 belonging to R and Co and not appearing in the balance sheet was also not taken over by the new firm. Okay, Bills payable pertains to trade transactions only. So bills payable also will be taken over. All the 4 partners of the new firm will bring in 1,60,000 as capital in equity shares, in equal shares. That means they will bring 40,000 each. They are going to bring 40,000 each. The following are the balance sheets of both the firms on the date of amalgamation. You have P and Co also, you have R and Co also. You can see trade creditors, bills payable, bank OD, P's loan. So what is not taken over will be just paid off by these people itself. Okay, and then you have partners capital, PQRS, general reserve, investment fluctuation fund, a fund which is maintained for what reason? For the fluctuation in investments. Okay, cash, investment, debtors, less the provision whatever is created, furniture, premises, land, machinery and goodwill, purchased goodwill, all this is there. Okay, assuming immediate discharge of bank overdraft, pass necessary journal entries to close the books of P and Co and R and Co. Also pass journal entries in the books and prepare balance sheet of the new firm. First we have to find out what is a purchase consideration. Okay, purchase consideration of both. The purchase consideration means what amount that is going to be paid. You can see over here they have told 12,000 each. A new firm PR and Co to pay 12,000 to each firm for goodwill, and then they have also told here 1,60,000. All 4 partners will in the new firm to bring in 1,60,000 as capital in equal. That means 80,000 for one firm, 80,000 for the other firm. Can you see purchase consideration is 80,000, 80,000. A and Co, B and Co. Actually, it is P and Co and R and Co. They have gotten the names wrong. It is P and Co and it is R and Co. Okay. First, they have asked us to pass journal entries in the books of both the firms. Pass necessary journal entries to close the books of P and Co, close the books of R and Co. Then we will prepare pass journal entries in the books of the new firm. Now, first, journal entries in the books of P and Co. Journal entries in the books of P and Co. Yes. Now what we are going to do? Transfer all the assets and liabilities to realization account. First thing we are going to transfer everything to realization account. Okay. You can see first transfer all the assets. You can see cash over here. Investments, debtors, furniture, everything will be transferred to realization account. Can you see new firm to take our investment at 10% less, land at 66,800, premises at a particular value, machinery at a particular value, and only trade liabilities of both the firms. And they told bills payable pertains to trade transactions only. So trade creditors they are going to take, bills payable they are going to take, but they are not going to take bank overdraft and they are not going to take P's loan. Is this clear? So only those 2 liabilities they are going to take. So now first thing that we are going to pass, first journal entry, transferring all the assets. Assets we have. Okay, transfer all the assets. Cash we are going to keep it separate. Okay, we have investments. So first thing I'm going to write realization account debited to investments account. Realization account debited to investments account. First investment is 10,000 gone. Transfer to realization account. Next you have debtors. So you'll write to debtors account. How much is the debtors? 10,000. So you'll write 10,000 again. Provision is 1,000. That is the liability that has to be created. That has to be entered separately. Furniture 12,000. So you'll write to furniture account 12,000. Then you have premises 30,000. So to premises account 30,000. Then you have no land here, machinery 15,000. So you're going to write to machinery account 15,000. The next thing, goodwill, it's a purchased goodwill, so transfer it to goodwill account 9,000. Then do we have any other asset? No. That's it. That will be transferred to realization account 10,000 plus 10,000 plus 12,000 plus 30,000 plus 15,000 plus 9,000. Totally it becomes 86,000. Totally it becomes 86,000. I hope it's clear. Yeah, 10,000 of investment plus 10,000 of debtors plus 12,000 furniture plus 30,000 premises plus 15,000 machinery plus 9,000. That makes it 86,000. Okay. Now, what about liabilities? Liabilities also has to be transferred to realization account. You have trade creditors and bills payable. Okay. So first thing you are going to do, trade creditors account. Trade creditors account debited. Okay. That is 20,000. 20,000. Next, bills payable is also debited. Bills payable account debited, that is 5,000. Next, bank OD and P's loan. Bank OD, what's going to happen? First we will debit it and we'll write over here bank OD debited 2,000. This is going to be paid by us itself. It is not going to be taken by the new company. P's loan, what we are going to do? We are going to adjust it with P's capital account itself. Okay, then we have, that's it. So all these liabilities will be transferred to realization account. 20 plus 5 plus 2, 27,000 transferred to realization account. Next, what we are going to do? Next, the P's loan. P's loan 6,000 will be transferred to P's capital account. So you're going to write P's loan account debited to P's capital account. P's loan is 6,000. 6,000 and 6,000. Next, what we are going to do? General reserve and investment fluctuation fund 8,000, 2,000. It will be distributed to partners. So fourth, we are going to write general reserve account debited 8,000. Investment fluctuation reserve account debited 2,000. P's capital account 5,000 because it's going to be shared equally to Q's capital account 5,000. So it's going to be distributed 5,000 and 5,000 equally to the two partners. Okay, this is the situation. So right now what did we do? We just emptied all the items that is there in the balance sheet. And don't forget that provision for doubtful debts is also there. Provision for doubtful debts debited 1,000. So this becomes 28,000. Okay, this 1,000 also has to be transferred. So now what next? What next? They are going to take over and they are going to pay. All the four partners in the new firm is going to bring in 1,60,000 as capital and in shares, in equal shares. Correct? So what is the purchase consideration now? Purchase consideration, these two partners will bring 40-40. Those two partners will bring 40-40. So now what we are going to do? First thing, we are going to pay this bank OD. Bank OD we are going to pay on our own. So we will write the entry realization account debited 2,000 to bank account 2,000. Realization account will be debited to bank account, but because realization account already has a bank OD sitting over there, this 2,000 that will be paid, money goes, so bank account is credited. Bank account is credited. Clear? Yes. Next, what we are going to do? New firm. Okay, new firm is going to give us capital. Capital investment is going to be made by new firm. What is the name of the new firm? New firm is PR and Co. So PR and Co. So the entry is going to be PR and Co. account debited 80,000 to realization account 80,000. This is 40,000 plus 40,000. Total amount that is going to be brought in is 80,000. That is the new company's capital. New company's capital. So now what we are going to do? Close the realization account, transfer the profit or loss to the partners. Then whatever is there, okay, capital account over here will get closed. It will get transferred to the new firm. Okay, now realization account. You can check the realization account 86,000. Okay, 86,000. minus 28,000. Okay, and then we have realization account again plus 2,000. They're going to make a payment. Then we have minus 80,000. That means the loss on realization is 20,000. 20,000 is the loss on realization account. We haven't prepared realization account, but if you want for your understanding, you can just prepare realization account. See, debit is 86,000. Then credit is 28,000. So remove 28,000. Then debit is 2,000. Add 2,000. Then credit is 80,000 minus 80,000. That means 20,000 is the loss or profit. You can see over here. If I prepare realization account, okay, realization account, debit 86,000, debit 2,000, credit 28,000, and then we have a credit of 80,000. If you check this, 80 plus 28 minus 86 minus 2. So 20,000 is the profit. 20k profit on realization we have, which will get transferred to partners. 7. We are going to write realization account debited 20,000 to P's capital account 10,000 to Q's capital account 10,000. To P's capital 10,000 to Q's capital 10,000. This is the profit on realization. Then finally what we are going to do? We have some money. I think out of the cash balance, which was 15,000, okay, that out of that 2,000 you have used to pay the bank OD. 2,000 you have used to pay the bank overdraft. So now what we will do? Cash is gone. Okay, realization is also gone. So partners capital we have to transfer. This cash will go to the new firm. New firm is PR and Co. debited, okay, to cash account. PR and Co. debited to cash account. Cash account 15,000 was there. 15,000 minus 2,000. So 13,000. 13,000 you're just going to transfer to PR and Co. So now PR and Co. what is the situation? Whatever is there in the partners capital account will get transferred to PR and Co. And with this we close the books. You can see the situation in PR and Co. PR and Co. has 80,000 plus 13,000 cash. Okay, 80,000 plus 13,000 cash. Now you go and check what is the balance in P's capital account, what is the balance in Q's capital account. First thing that we have to see is P's capital account had 35,000. So take 35,000 in your calculator. P's capital account has 35,000. First entry there is no P, second entry there is no P, third entry P's capital account plus 6,000. You just transferred 6,000. Then P's capital account 5,000. Then there is P's capital account 10,000. That makes it 56,000. So what we will do? We will write P's capital account debited 56,000. Then go into Q. You can see Q over here 22,000. Take 22,000 in your calculator. Go back into your material. Okay. In the third entry, nothing. In the fourth entry, we are giving 5,000 to Q. Then we are giving 10,000 to Q, 37,000. So you can write Q's capital account debited. Q's capital account debited 37,000. Okay. To PR and Co 93,000. That is the end of the journal entries. You can see PR and Co it was 93,000 only. How? PR and Co 80,000 over here. They have to pay us and we have given them 13,000 cash also. So total amount is 93,000. PR and Co 93,000. With that we close P and Co's balance sheet. Okay. P and Co's balance sheet, P and Co's books are closed. Now what we have to do? We have to pass similar journal entries in the books of Q and Co. Now next we move into journal entries in the books of Q and Co. Next, journal entries in the books of Q and Co. Journal entries in the books of Q and Co. First, same thing we are going to do. Transfer all the assets and liabilities. Okay, Q and Co. Cash you keep it pending because you need it to pay the bank OD. Now, first thing is investments. So you're going to write realization account debited to investments account. Realization account debited to investments account 8,000. Then you have debtors. Debtors directly they have given 4,000. So you can write to debtors account 4,000. Next, furniture 6,000. So to furniture account 6,000. Next, premises not there, land 50,000. So you're going to write to land account 50,000. Next, you don't have any asset. So you can total this 8,000 plus 4,000 plus 6,000 plus 50,000. 68,000 are your assets. Then next you go into liability side. Okay, trade creditors 10,000. So you will write trade creditors account debited 10,000. Next, there is no bills payable. Bank OD. Bank OD account debited 10,000. To realization account 20,000. So liabilities are also transferred to realization account. Third, what we are going to do, we are going to pay the bank OD. So realization account debited 10,000 to cash account 10,000. You paid the bank OD, that is also done. Next, what we are going to do, okay, we are going to check general reserve 3,000, investment fluctuation fund 1,000. So for general reserve account debited 3,000, investment fluctuation fund debited 1,000. Two, who are the partners here? R and S are the partners. So to R's capital account 2,000 equal partners, to S capital account 2,000 again equal partners. Both the partners are equal partners. So we are just transferring the general reserve balance and the investment fluctuation fund balance to the partners. Next, what do we have? They are giving 80,000 again new. This firm also will give 80,000 only. So we are having again same entry, PR and Co debited 80,000 to realization account 80,000. So here the capital is 80,000 investment, there the capital is 80,000, total is 1,60,000 which they had told in the question. So we are going to write 80,000. Next, after that what's going to happen? If you check after that, realization account, we have already transferred everything. So close the realization account, transfer the profit or loss. First go into realization, you have 68,000 debit. Then we have 20,000 credit. Then we have 10,000 debit, 58,000. Then we have realization account 80,000. That means 22,000 is the profit. So you will pass the entry realization account debited 22,000 to who are the partners? R's capital account. R's capital account 11,000 to S capital account 11,000. R's capital account 11,000 and S capital account 11,000. This is the situation with realization profit distributed. Now what we are going to do? We are going to transfer that money. We have some money left in cash. We had actually, can you see over here, 12,000 and the bank OD was 10,000, 2,000 is remaining. So we will pass the entry, okay, PR and Co debited 2,000 to cash account. PR and Co debited 2,000 to cash account. So amount is transferred to PR and Co. Next, finally, what we are going to do? Transfer P's capital account, Q's capital account, whatever is there, it will go to the new firm. It will go to new firm. Can you see the new firm's balance over here? 36,000 was there in R's capital account. 36,000, take 36,000 in your calculator. Okay, first entry there is no R's capital, second entry there is no R's capital, third entry there is no R's capital, fourth entry you have 2,000. So plus 2,000. Then you have 11,000. So plus 11,000. Total 49,000. So you will write R's capital account debited 49,000. Then we go into next person. After R it is S. S has 20,000. So take in your calculator 20,000. Go into the journal entries that you have passed. First entry nothing, second entry nothing, third entry nothing, fourth entry 2,000 plus 2,000, fifth entry nothing, sixth entry 11,000 plus 11,000. So you have 33,000. 33,000. S capital account debited 33,000, which makes it 82,000. To PR and Co account 82,000. 82,000 is transferred to PR and Co. And 82,000 was there in PR and Co. Can you see PR and Co 80,000 here? And the 2,000 cash which we have transferred to them. So totally 82,000 is there. These are your journal entries. Clear? Next, what did they ask? They asked journal entries in the books of PR and Co. Journal entries in the books of PR and Co. First entry. Okay, first entry you're going to take over. So you'll pass the entry business purchase account debited to business purchase account debited to, okay, we are going to purchase, understand this, to whom? First we are going to make the payment to the partners of P and Co. Then we are going to make the payment to the partners of Q and Co. So to P and Co account to Q and Co account. How much we are supposed to pay? We are supposed to pay 80,000 and 80,000. So 80,000 to P and Co, 80,000 to Q and Co. So totally the business purchase is 1,60,000. Next, what we are going to do? We are going to take over the assets and liabilities. Assets and liabilities we are going to take over. Now, cash of both the companies. Cash account debited. First company cash account is 13,000. And second company cash account is 2,000. So total cash we are going to take over is 15,000. Then we have investments. Investments account debited. Investments account debited. You can see investments, they have told in the question, investments are taken over at 90%, 10% depreciation. So investment of first company is 10,000. So investment will become 9,000. Investment of second company is 8,000. So investment will become 7,200. So 9,000 plus 7,200 will become 16,200. Then after investment, the next thing is debtors. What did they tell about debtors? Debtors are taken over at given value itself. So debtors will be 10,000 and 10,000 and 4,000. No provision at given value itself. So debtors account debited 10,000 plus 4,000, 14,000. Next, furniture. What did they tell about furniture? Okay, they have not told anything about furniture. The new firm to take over. Okay, investment at 10% depreciation and land at 66,800 and premises at 53,000. Now, after debtors, the next thing is furniture. Furniture will be taken over at book value. So furniture account debited. We have 12,000 and 6,000. 12,000 plus 6,000. Total furniture value has become 18,000. 18,000 is a furniture value. Then you have premises. Premises, what did they tell? Premises is taken at 53,000. Premises is taken at 53,000. So we'll write premises account debited 53,000. Then after that, after premises, the next thing is land. Land is taken over at 66,800. So we'll write land account debited 66,800. Then after that, Land is done. Then you have machinery and goodwill. Machinery, what did they tell? It's taken over at 9,000. So you're going to write machinery account debited 9,000. So till now, what did we do over here? Cash, what was the balance over there? It was transferred. Investment, 10% depreciation. Debtors at existing value, furniture at existing value, premises and land and machinery, they have given the values. You can see cash is done, investment done, okay, debtors also done, furniture done, premises taken over, land taken over, machinery taken over. Goodwill, what did they tell for goodwill? Goodwill account debited. Okay, goodwill, they have told in the question itself, the new firm to pay 12,000 each firm as goodwill. So you'll write 12,000 plus 12,000, total goodwill value will be 24,000. What are the liabilities that we are taking over? Liabilities taken over, typewriter worth 800 belonging to R&Co, not appearing in the balance sheet, not taken over by the new firm, so forget it. Okay, bills payable pertaining to trade transactions only. So trade creditors and bills payable they are going to take. So you're going to write 2 creditors. Creditors is 20,000 and 10,000, so it becomes 30,000. Then you have bills payable, 2 bills payable account. The bills payable is 5,000. Other than that, we are not taking over any other liability. So you are going to write 2 business purchase, to business purchase account. Business purchase account is 1,60,000. Okay, this should be the situation. Now you are going to check, are we paying more or less? Just check. 1,60,000 plus 5,000 plus 30,000 minus 15,000 minus 16,200 minus 14,000 minus 18,000 minus 53,000 minus 66,800 minus 9,000 and minus 24,000. Okay, that means 21,000 will go to reserves, to capital reserve, balancing figure 21,000. 21,000 will go to capital reserve. Clear? After that, we don't have anything else. These are the two journal entries. Third journal entry is not there. P's capital account, P and Co's account, you are transferring 80,000. Okay, then the third journal entry will be creating the 4 partners. Who are the 4 partners? P and Co debited, Q and Co debited, P and Co debited for 80,000, Q and Co debited for 80,000, to P's capital account 40,000, to not Q and Co, R and Co, no? R and Co, and here also it is not Q and Co, it is R and Co. So P's capital account 40,000 goes, Q's capital account 40,000 goes to. Then we have R and S. R's capital account 40,000 goes, and then we have 2 S capital account. S capital account also we are transferring 40,000. With this, what we are done? We are done with the journal entries in the books of the new firm. So we are going to prepare balance sheet. How will the balance sheet look? Balance sheet as at, we have capital. Under capital we have P, Q, R, S. All 4 are 40,000, 40,000, 40,000 and 40,000. 4 partners. Then we are going to have even capital reserve. We have created one capital reserve, 21,000 extra that we had received. So 21,000 is the capital reserve. Okay. Then what we are going to do? Go into the asset side. All these things that we have purchased. Cash, 15,000 cash we got. Then we go into investments, 16,200. Investments, 16,200. After investments, the next thing is debtors, 14,000. Debtors, 14,000. After debtors, the next thing we have is furniture, 18,000. Furniture, 18,000. After furniture, the next thing is premises, 53,000. Premises, 53,000. Then you have Land 66,800. Land is 66,800. After land, you have machinery 9,000. Machinery 9,000. Goodwill 21,000. Sorry, 24,000 goodwill. Okay, then you have the two liabilities that you have taken over, that is creditors and bills payable. Creditors 30,000, bills payable 5,000. You can write creditors 30,000 and bills payable 5,000. This is your balance sheet. You can take the balance sheet and total it. 2,16,000. Yes, balance sheet total comes up to 2,16,000. This is your balance sheet. Okay, this is your solution. So they have asked journal entries in the books of selling firms, balance sheet in journal entries in the books of purchasing firm, and finally the new balance sheet of the new firm. New balance sheet of the new firm. The new firm is PR and Co. PR and Co. We have the balance sheet given. Clear? This should be the situation. You have first journal entry, second journal entry, third journal entry, then you have the balance sheet as well. Next, that is your question number 2. Then you have your question number 3. Let's proceed to next question. Yes, let's proceed to the third question now. We finished the first two. Let's go into the third question of partnership. Question number 3. Amar, Akbar and Anthony are equal partners. That means their profit sharing ratio is 1:1:1. Okay. Of Messrs. Andal and Co. The balance sheet of the firm as on 31st December 2023 was as follows. They have given the balance sheet Ram, Manas and Param it seems. Okay. There is some error again as always. This is Amar. This is Akbar. Okay, and this is Anthony. Amar, Akbar and Anthony, capital account balances are given. Loan from bank, creditors, then you have fixed assets and current assets given. On that date, it was decided to convert the partnership into limited company called Pandal Limited. Okay, they are converting it into a company called Pandal Limited on the following terms. Land to be revalued at 1,50,000. Plant and machinery to be revalued at 2,50,000. Depreciation amounting to 20,000 is to be written off on building. Provision of 10% book valued. Provision of 10% books valued to be made of absolute stock. Lot of spelling mistakes. Just make it correct. Not made of absolute stock. Provision for doubtful debts should be made at 10% of debtors. Discount of 6% would be earned on creditors when paid out. The new company issued 12,000 equity shares of 10 each, credited as fully paid up. Such share capital being valued at 1,50,000. Okay, and the balance payable is to be discharged by issue of 10% debentures of 100 each. So this is the PC calculation, purchase consideration. Show necessary ledger accounts to close the books of Andal and Co. and show the opening balance sheet of the new company. All partners are solvent and have sufficient cash resource to as may be necessary to settle the respective accounts. Shares and debentures are divided equally among the partners. Okay, first we have to calculate, before anything, we have to calculate purchase consideration. So computation of PC. Computation of PC, purchase consideration. Clear? So first, one by one, what and all we are going to take? There is land. Okay, land. What did they tell about land? Land to be revalued at 1,50,000. So land value is 1,50,000. Next we have building. Building, what did they tell? They said depreciation amounting to 20,000 to be written off on building. So building value will be 70,000 minus 20,000. So this becomes 50,000. Building value is 50,000. Next item is plant and machinery, 2 lakhs. Plant and machinery to be revalued at 2,50,000. So now what we are going to do, plant and machinery, it will be revalued at 2,50,000. Next, after that you have stock. What did they tell about stock? Provision of 10% to be made for obsolete stock. That means stock is going to reduce. So stock is going to be, right now stock is showing 3 lakhs. So this will be 3 lakh minus 10%, 2,70,000. 2,70,000. After that you have debtors. Provision for doubtful debts to be made at the rate of 10% of debtors. So now you will write debtors 1 lakh and provision for doubtful debts 10,000. Provision for doubtful debts 10,000. So this is also sorted. Next, when we go into liabilities, look at the liability side. First you have one loan from bank. Nothing is spoken about that. So loan from bank. Loan from bank is 5 lakhs. Loan from bank is 5 lakhs. Then what do we have? Creditors, but discount of 6% would be owned when creditors are paid out. So creditors will be creditors 1 lakh minus 6%, that makes it 94,000. 1 lakh minus 6%, that makes it 94,000. That is the entry for this one. Okay, now you have the net assets. This is your purchase consideration, PC, purchase consideration. Okay, have a look at it. Let's calculate. Yes, 1,50,000, 1,50,000 plus 50,000 plus 2,50,000 plus 2,70,000 plus 1 lakh minus 10,000 provision for doubtful debts minus 5 lakhs minus 94,000. That makes it 2,16,000. Purchase consideration is 2,16,000. Is this clear? You can see over here purchase consideration 2,16,000. They got it right. Okay, 2,16,000. And they have told company will issue 12,000 equity shares of 10 each, credited as fully paid up, such share capital being valued at 1,50,000. That means out of 2,16,000 rupees, 1,50,000 will be shares issued. Company is going to issue shares, and balance, that is 2,16,000 minus 1,50,000, 66,000 will be debentures issued. 66,000 will be debentures issued. Okay, shares issued, we know that shares are going to be issued at 1,50,000, 12,000 shares. So therefore you can just write over here 1,50,000 divided by 12,000 shares. So 1,50,000 divided by 12,000 shares. This is going to be 12.5 per share. Face value of the share is 10 rupees. They are issuing it at 12.5 per share. Debentures are issued at what price? 10% debentures at 100 each. So 66,000 divided by 100. They are going to issue 660 debentures. 660 debentures issued. Is this clear? Now this is the situation. Okay, computation of PC. This is how you are going to do. Now they have asked what you are supposed to do. Prepare ledger accounts to close the books of underlying company. Prepare ledger accounts. Okay, then you are going to prepare the opening balance sheet of the new company. Okay, first thing, in the books of Andal and Company. In the books of Andal and Company, you are going to have realization account. You're going to have realization account First, what you're going to do? Transfer all the assets and liabilities. Then we will also maintain partners capital account. Partners capital account. We have Amar, we have Akbar, and we have Anthony. Amar, Akbar, and Anthony. Okay, these are the two things. Then we are going to close the books. Okay, first what we will transfer? Transfer all assets and liabilities to realization account. Land 50,000, building 70,000, plant and machinery 2 lakhs. So what we will do first? Realization account debited to land account. Realization account debited to land account 50,000. Next, building. Realization account debited to building account 70,000. Next, realization account debited to plant and machinery account. This comes up to 2 lakhs. Okay, then we have stock. Realization account debited to stock account. Stock is showing 3 lakhs. Then realization account debited to debtors account. To debtors account, and debtors are showing 1 lakh. Then going to the liability side, you have capital. Capital of Amar, Akbar, and Anthony. Amar is, go to the partners capital account and write by balance brought down. What is Amar's capital? 50,000. What is Akbar's capital? 1 lakh. Then you're going to write this side to balance brought down. What is Anthony's capital? 30,000. Anthony's capital is 30,000 debit balance. Okay. Then you have loan from bank. Transfer to realization account by loan account. The loan is 5 lakhs. Then you have creditors 1 lakh by creditors account 1 lakh. Clear? This should be it. This is your Amar, Akbar, Anthony situation. Okay, everything is transferred. Now what we are going to do? Somebody has to give us money. Who is that somebody? The new firm. New firm is called as Pandal Limited. It's a new company. Pandal Limited will have to give us money because they are purchasing our partnership firm. So the next thing, ledger that we require is Pandal Limited account. Pandal Limited account. Pandal Limited has to give us money. Pandal Limited account debited to realization account 2,16,000. Remember, we calculated purchase consideration is 2,16,000, and here we are going to write by Pandal Limited account 2,16,000. 2,16,000 is going to be given. How is Pandal Limited giving us all this? They are giving us equity shares as well as they are giving debentures. So next ledger that we require is equity shares in Pandal Limited. Equity shares in Pandal Limited. Okay. Then we also are getting debentures in Pandal Limited. We are getting equity shares in Pandal Limited and we are also getting debentures in Pandal Limited. Equity shares in Pandal Limited and debentures in Pandal Limited. So what we are going to write, equity shares in Pandal Limited account debited to Pandal Limited account. They gave us 1,50,000 of equity shares, and here we are going to write by equity shares in Pandal Limited account 1,50,000. Then what are they giving us? They are giving us debentures. Debentures in Pandal Limited account debited to Pandal Limited account. Debentures they are giving 66,000, and here we can write by debentures in Pandal Limited account 66,000. 66,000. Clear? And this is the situation. Now what next? Now what next? Okay, we got the shares, we got the debentures. Now that debentures will be distributed to partners. They have told in the question itself, okay, all partners solvent and they're going to bring money if required. Shares and debentures are divided equally among the partners. Shares and debentures are divided equally among the partners. So first we will close the realization account. Check if we have profit or loss. 5 lakhs plus 1 lakh plus 2,16,000 minus 50,000 minus 70,000 minus 2 lakhs minus 3 lakhs minus 1 lakh. So basically we have a profit of 96,000 to partners capital account. We have Amar, we have Akbar, and we have Anthony. This is going to be 96,000 into 1 by 3. 96,000 into 1 by 3. 96,000 divided by 3. That's going to be 32,000, 32,000 and 32,000. Okay. They have given here, see, profit on realization 32, 32 and 32. And here we can write by realization account 32,000 profit to Amar, 32,000 profit to Akbar and 32,000 profit to Anthony. 32,000 profit to Amar, 32,000 profit to Akbar and 32,000 profit will be transferred to Anthony. Okay, with that we are done. Now what we are supposed to do? What we are supposed to do? All the shares are given to whom? Shares are equally given to Amar, Akbar and Anthony. So here we are going to write by partners capital account. By partners capital account. Okay, Amar, Akbar, Anthony. So 1,50,000 will be shared equally, 50,000, 50,000 and 50,000. And here we can write 2 equity shares in Pandal Limited. 2 equity shares in Pandal Limited, 50,000, 50,000 and 50,000 is given to 3 partners. Then the debentures. Debentures are also shared between partners. You can write by partners capital account. We have Amar, we have Akbar and we have Anthony. 66,000 divided by 3 partners. 22,000, 22,000 and 22,000. It is distributed between 3 partners. Now here we can write 2 debentures in Pandal Limited, 22,000, 22,000 and 22,000. 22, 22 and 22. It is distributed. Now what we are going to do? Okay, this equity shares is closed. This debentures is closed. Now we have to just see if at all any partner has to get money, he will get it. If at all partner has to be given money, it will be given. Look at Amar's account. Amar 50,000 on the credit side plus 32,000 on the credit side minus 50,000 he got shares minus 22,000 he got debentures. So 10,000 is still remaining. Okay, so what we are going to write, to bank account, Amar will be given 10,000. Amar will be given 10,000. Look at Akbar, 1 lakh plus 32,000, 1,32,000 minus 50,000 shares minus 22,000 debentures. That means still Akbar has to get 60,000 and we will give 60,000 to Akbar. If you look at Anthony, Anthony has to get 32,000 minus 30,000 minus 50,000 minus 22,000. So Anthony has to give 70,000. So we will bring over here by bank account, Anthony will bring 70,000. Can you see? Anthony is bringing 70,000, which is given 10,000 to Amar and 60,000 to Akbar. And with this, the books are closed. With this, the books are closed. What we need to do next? What have they asked next? They have asked you prepare the opening balance sheet of the new company. See, cash brought by Anthony 70,000. Prepare the new balance sheet of the company. Pandal Limited. Pandal Limited. Balance sheet. Okay, when are we doing all this? 31st of December. So 1st January 2024. Balance sheet as at 1st January 2024. This is the balance sheet. This is the balance sheet. Clear? Now what? What are we going to do? We know everything, no? All that is required for the balance sheet we have already prepared in our calculations over here. Land 150, building 50. So go and write in the balance sheet, land will be showing 1,50,000. Building will be 50,000. All this we have in our purchase consideration calculation. Okay, building 50,000, plant and machinery 250. Right, plant and machinery 2,50,000. Then we have stock. Stock will be showing 2,70,000. Stock will be showing 2,70,000. Then after that, what do we have? We have debtors 1 lakh. You can write debtors 1 lakh minus provision for doubtful debts 10,000. So you have a net situation of 90,000 debtors. Then after that, loan from bank 5 lakhs. You have loan 5 lakhs. Then you have creditors 94,000. Now what we have to understand, okay, we have to go into the shares and we can write share capital, and in that we have issued equity share capital, equity share 1,20,000. 1,20,000. How is it? Because 12,000 shares into 10 rupees face value. Equity shares will always be shown at face value. Then we are going to write securities premium. Securities premium 30,000. Then you are going to write 10% debentures 66,000. This should be your balance sheet. This is the end of our balance sheet. 1,20,000 plus 30,000 plus 66,000 plus 94,000 plus 5 lakhs. So that totals up to 8,10,000. 8,10,000 minus 1,50,000. We can check whether it is tallying. 50,000 minus 2,50,000 minus 2,70,000 and 90,000. Yes, this should be your balance sheet as at 1/1/2024. Balance sheet as at 1/1/2024. You can see the balance sheet total 8,10,000. This is your solution for the third practical question or practice question which they have given. Pandal Limited's balance sheet, ledger accounts in the books of the old partnership firm. Okay, and the PC calculation. What assets we got, what liabilities are coming. Net will be the PC calculation. That also has to be shown. Okay, that is question number 3. Let's go into question number 4. Question number 4. Let's go into the fourth question. Question number 4. Okay, Abhi, Sara and Parth carry on business in partnership under the style of A and Co, sharing profits and losses in the ratio 5:3:2. It's not equal in this question. It is 5:3:2. They have floated A Private Limited for the purpose of takeover of their business. The following is a balance sheet of the firm. You can see the capital of Abhi, Sara and Perth, and then you have creditors. On the asset side, you have cash, bank, debtors minus provision, stock and fixed assets. Okay, expenditure related to A Private Limited, formation expense 12,000, bank account note 3,000, total 15,000 they have given. What is the note? We will see. We will read the note. In the name of A Private Limited, deposit at par value of 300 shares of 10 each, subscribed equally by the partners as subscribers to the memorandum and articles of association. On that day, A Private Limited took over the business of the total consideration of 5 lakhs, excluding 300 shares allotted to the subscribers of memorandum. The purchase consideration was to be discharged by the allotment of equity shares of 10 each at par in the profit sharing ratio and 15% debentures of 100 each at par for surplus capital. The directors of A Private Limited valued fixed assets of A Limited at 4 lakhs. Okay, what have they asked you? They told this thing is there, no 3000. This is nothing but a deposit of par value in the name of A Private Limited, a deposit of par value 300 equity shares of 10 each, subscribed equally by the partners as subscribers of memorandum. That is like the first shares that is taken by the shareholders to start the company. They need to have the shares, no, to start the company. That is the first shares. Clear? Yes. Yeah. So you are asked to state the number of equity shares and debentures allotted by A Limited to Abhi, Sara and Parth and show the journal entries in connection with the above transactions in the books of A Private Limited. So first what we are supposed to do in the books of Abhi, Sara and Parth. In the books of Abhi, Sara and Parth, the three partners. What did they ask you to prepare there? What did they ask you? State the number of equity shares and debentures allotted by A Limited to Abhi, Sara and Parth. So what is better to be done is always prepare realization account. Okay, first we will prepare realization account and then we will go into partners capital account. Partners capital account, we have Abhi, Sara and Parth. Abhi, Sara and Parth. Okay, now you can check, see the capitals 1,01,000, 1,51,000 and 1,33,000. So in partners capital account you can write by balance brought down 1,01,000, 1,51,000 and 1,33,000. So three balances you have, and then you have creditors. You will transfer creditors to realization account. So we'll write by creditors 50,000. Then you have cash 6,000, bank 14,000. Okay, cash and bank you have. You can do one thing that also can be transferred to realization account only. To cash account 6,000 and to bank account 14,000. To bank account 14,000. Then we have debtors. You can write to debtors account 60,000 and then here you will write by provision for doubtful debts 2,000. Okay, then you have stock. So you'll write to stock 42,000. Then you have fixed assets at 3 lakhs. So you can write to fixed assets 3 lakhs. This is also done. Okay, then we have expenditures related. This is called as formation expenses. To formation expenses, which is 12,000. Then we have over here 3,000 we have spent for purchasing equity shares. You can write here to equity shares in, what is the name of the company? The name of the company is A Private Limited. A Private Limited. We have 3,000. Okay, and then they have told the total purchase consideration excluding 3,300 shares discharged by equity shares of 10 each at par in the profit sharing ratio and 15% at the rate of 100 each at par for surplus. Okay, 5 lakh shares are there that is going to be distributed. So 5 lakhs. First what we are going to do, the purchase consideration will be discharged by allotment of equity shares of 10 each at par in profit sharing ratio and 15% debentures at par for surplus capital. Extra capital whatever is there, for that we are going to issue debentures. Is this clear? Okay, I think that should be clear. Now understand this. So total purchase consideration is how much? 5 lakh rupees. Who is going to give us? A Private Limited. So we are going to write by A Private Limited 5 lakhs. By A Private Limited, 5 lakhs. That should be it. After this, what we are going to do, just distributing all that things. Okay, so now you can just check what is the profit or loss. We should have profit or loss that we need to check. So realization account 5 lakhs plus 50,000 plus 2,000. Okay, minus 6,000 minus 14,000 minus 60,000 minus 42,000 minus 3 lakhs minus 12,000 and 3,000. So we have 1,15,000 of profit. So you're going to write 2 partners capital. We have 3 partners, Abhi, Sara and Parth. Abhi, Sara and Parth. 1,15,000 is the profit. It will be distributed in their profit sharing ratio is 5:3:2. So you can write 5 by 10. 1,15,000 into 3 by 10. 1,15,000 into 2 by 10. Clear? This should be the calculation. So 1,15,000 into 5 divided by 10. We have 57,500. 1,15,000 into 3 divided by 10. You have 34,500. And 1,15,000 into 2 divided by 10, which is 23,000. Put that into partners capital by realization 57,500, 34,500. Okay, wait. Equity shares, it is not in profit sharing ratio. Sorry, there is a small mistake here. These 3,000 equity shares, they are equal, not in profit sharing ratio. Can you see? Subscribers to memorandum, it was subscribed equally by the partners. So this will not come into realization account. You'll have to put it directly. This will not come to realization account because it is taken equally. So what we are going to do, we are going to write over here by, okay, it is just distributed among partners. Sorry, 2 equity shares in A Private Limited. It is going to be 1,000, 1,000, 1,000. Can you see it is 3,000? It is taken equally by the partners. So 1,000, 1,000 and 1,000. So let's recalculate the profits. Okay, you can just check. 5 lakhs plus 2,000 plus 50,000 minus we have 6,000 minus 14,000 minus 60,000 minus 42,000 minus 3 lakhs minus 12,000. You have 1,18,000. 1,18,000 into 5 by 10 into 3 by 10 into 2 by 10. So 1,18,000 into 5 divided by 10, that gives you 59,000. 1,18,000 into 3 by 10, that gives you 35,400. And 1,18,000 into 2 by 10, that gives you 23,600. Right in partners capital account, 59,000, 35,400 and 23,600. Okay, 59,000, 35,400, 23,600. Okay, that should be how it is. Is this clear? Yes. With that, we got our realization account done. Yes, and you can see over here now 1,01,000 and 59,000. This much is there in the partners capital account. So now 2, you can check this 2. Okay, 1,01,000 plus 59,000 minus 1,000. So you have 1,59,000 balance. Okay, and here 1,51,000 plus 35,400 minus 1,000. That makes it 1,85,400. And the third one, 1,33,000 plus 23,600 minus 1,000, 1,55,600 to A Private Limited. Okay. Now, what is the amount payable? Amount payable to partners. Amount payable to partners is, we have the first person, that is Abhi, Sara and Parth. Abhi, Sara and Parth. So 1,59,000, 1,85,400, 1,55,600. So if you total this, 1,59,000 plus 185,400 plus 155,600, this totals up to 1 lakh. This totals up to rupees 5 lakhs. And the purchase consideration is 5 lakhs only. And the purchase consideration is 5 lakhs. Clear? Are you following this? Now you go back into the question. Purchase consideration to be discharged by allotment of equity shares of 10 each at par in the profit sharing ratio and 15% debentures of 100 each at par for surplus capital. They haven't told us how much is the equity shares and how much is the debentures that are issued. Are you getting my point? They should at least tell us what is the debentures, what is the equity shares. So now only thing that we can do, okay, this is wrong. Only thing that we can do is Abhi, Sara and Parth, whatever earlier capital they had, that we will give equity shares to them. Equity shares of 10 each. So now what we can do, this 5 lakhs, okay, is the purchase consideration. What we can do, due to lack of information in the question, the only thing that can be done is, okay, this is how it is going to be, and equity shares issued. Equity shares issued. Earlier, Abhi had 1,01,000, 1,01,000, and Sara had 1,51,000, so 1,51,000, and Parth had 1,33,000, so 1,33,000. Okay, and then for the balance, debentures are issued. For the balance, we can issue debentures 1,59,000 minus 1,01,000. So you have 58,000 worth of debentures issued. And here 185,400 minus 151, that makes it 34,400 debentures issued. And here you have 155,600 minus 1,33,000, that makes it 22,600 debentures issued. So this should be amount payable to partners. This is how it is going to be, amount payable to partners. Clear? Due to lack of information, this is how we can do it. In the exam, don't worry. See, already they are getting names wrong only. So 2 questions they have merged. When they are merging 2 questions, they have missed a lot of information. So in the exam, this problem won't arise. It will be given clearly. Clear? So show the journal entries in the books of A Private Limited. Show the journal entries in the books of A Private Limited. What are we getting? All the assets and liabilities. So next thing that we have to write is journal entries in the books of A Private Limited. Journal entries in the books of A Private Limited. This is the thing. What are we getting first? First we can write business purchase account debited to partners of, what is the name of the partnership firm? A and Co. Partners of A and Co. So this is going to be 5 lakhs. This is going to be 5 lakhs because they said purchase consideration is 5 lakhs. Then second, what are we going to do? We are going to get all the assets and liabilities. Cash account debited. Cash account debited 6,000. Bank account debited 14,000. Then debtors account debited 60,000. Okay. Then stock account debited. Stock account debited 42,000. Then fixed assets, they said revalued at 4 lakhs. So you can write fixed assets account debited 4 lakhs. Then you have these two things, formation expenses. Okay, you can write preliminary expenses debited 15,000 both together. Okay, then you can write 2 provision for doubtful debts 2,000 and 2 creditors it's going to be 50,000. Then you're going to write 2 business purchase 5 lakhs. Now you're going to check if it is extra or shortage. If it is extra, if you have paid extra, that is considered as goodwill. If you pay less, it is going to be considered as capital reserve. So you can just check this entry, 6,000 plus 14,000 plus 60,000 plus 42,000 plus 4 lakhs plus 15,000. Okay, minus 2,000 minus 50,000 minus 5 lakhs. So you have 15,000 which will be considered as goodwill. Goodwill account debited, balancing figure 15,000. Third entry. What is the third entry? Partners of A and Co. debited 5 lakhs. And what are we giving them? Equity share capital. You can see the equity share capital. Equity share capital is 1,01,000, 151 and 133. 1,01,000, 151,000 plus 133,000. 3,85,000. Equity share capital is 3,85,000. To 10% debentures account. How much is the debentures? Obviously the balance 1,15,000. Debentures are issued for the balance 1,15,000. Yes, these should be the three journal entries that we have to pass in the books of A Private Limited, the new company. Clear? Lot of information is missing in the question. So from what is available, we have done this. Examination questions, you don't have to worry. They will give you all the information that is required. Clear? Yes, we have an unsolved case. Unsolved case we have. We'll solve this as well. Yes, we'll go into the unsolved case. PQR. It is a partnership business in Guwahati, Assam, engaged in the wholesale of edible oil. The business has 3 partners, PQR, okay, who started the business way back in October 1987. As per their partnership deed, the profits are shared in the ratio 5:3:2. Okay. Even though their business was going on pretty well, none of their daughters and sons agreed to carry on the business started on by their fathers. So during the year 22-23, the partners mutually decided to dissolve their business after the close of the accounts of that financial year. The balance sheet as on 31st of March 2023 is given below. So what they are doing, they are dissolving the partnership firm. You can see the capital of 3 partners, then we have creditors, then few assets are also there. Machinery and stock are sold at 2,50,000 and 1,80,000 respectively. Car is taken over by Q at 1,20,000, an amount of 20,000. 2 lakh could be realized from debtors. Okay, some assets we are taking, selling, and one asset is taken by one of the partners. It was agreed between PQR that any deficiency of any partner in capital account is to be met by other partners in their profit sharing ratio. If any partner has deficiency, others will bear it in profit sharing ratio. They agreed. During the dissolution process, P was declared insolvent. P is a partner who became insolvent. The third partner, R, could bring in 50,000 only. P became insolvent, so he could not bring anything. R could bring only 50,000. Ascertain the amount of profit or loss arising in the event of dissolution of the firm. Determine the amount of deficiency of P and how such deficiency has been borne by other partners. Show the settlement of the bank account of the firm at the end of the dissolution process. Simple dissolution they have asked you. So what you are going to do, it is not going to be taken over by somebody. It is just closed. Partnership firm is closed. So unsolved case. Unsolved case. What you're going to do, first thing you're going to have is realization account. Okay, first thing that we need is realization account. After that, you will prepare the partners capital account. Okay, partners capital account. we have three partners P, Q and R. P, Q, R are the three partners. So partners capital account. Then what we need to prepare? Bank account. Finally, we also need to prepare bank account. Okay. Now one by one, simple dissolution. What will we do? First, transfer all the assets and liabilities to realization account. First one we have machinery. You will write realization account debited to machinery account. Realization account debited to machinery account 5 lakhs. Clear? 5 lakhs is transferred to realization account. Then car. Realization account debited to car account 1 lakh. Then debtors. Realization account debited to debtors account 4,50,000. Next, stock. Realization account debited to stock account 6 lakhs. Next, you have bank balance. Bank balance, go to bank account and write to balance brought down 50,000. To balance brought down 50,000. Clear? Now what you are going to do? Capitals. Go to partners capital account and write by balance brought down. The capital of P is 1 lakh. Capital of Q is 4 lakhs. And capital of R is 2 lakhs. Capital of R is 2 lakhs. Then you are going to write in realization account by creditors. Creditors are 10 lakhs. 10 lakhs. Is this clear? Now what we are going to do? One by one. See what they have told. Machinery and stock are sold for 250 and 180. Machinery and stock are sold for 250 and 180. So you'll get money. Bank account debited to realization account. 2,50,000 plus 1,80,000. So that makes it 250, 350, 4,30,000. 4,30,000. And here you are going to write by bank account 4,30,000. Bank account debited to realization account 250 plus 180. Okay. Then after that, what we are going to do? After that, car is taken over by Q for 1,20,000. So Q's capital account debited to realization account. Q is taking it over at 1,20,000. And here we are going to write by Q's capital account 1,20,000. By Q's capital account 1,20,000. Clear? Next, what do we have? It was agreed that, okay, 2 lakh, an amount of 2 lakh would be realized from debtors. Debtors are going to give us 2 lakh. So we are going to write again bank account debited to realization account 2 lakhs. And here we are going to write by bank account, we got 2 lakh from debtors. Okay, next, it was agreed between P, Q and R. If deficiency is there, what to do? All that we have already seen. First, we are going to close the realization account. Check if there is any profit or loss and then transfer it to partners capital account. Now we have 10 lakhs on the assets credit side plus 4,30,000 plus 1,20,000 plus 2 lakhs minus 5 lakhs minus 1 lakh minus 4,50,000 minus 6 lakhs. So we have a profit of 1 lakh. 1 lakh profit is there. So you're going to write, you're going to write two partners capital account. Let's check again. 10 lakh plus 4,30,000 plus 1,20,000 plus 2 lakhs minus 5 lakhs minus 1 lakh minus 4,50,000 minus 6 lakh. Yes, 1 lakh there is profit that will be transferred to P, Q and R in their profit sharing ratio. Can you see their profit sharing ratio is given in the question as 5:3:2. So into 5 by 10, into 3 by 10, into 2 by 10. So this is going to be 50,000. This is going to be 30,000. And this is going to be 20,000. 50, 30 and 20. Clear? That is transferred to partners capital account. Here you can write by realization 50,000, 30,000 and 20,000. 50,000, 30,000 and 20,000. This should be the situation. Now what we are going to do? Check. Okay. Check what is the situation. Any partner does not have a negative balance. Can you see P? 1 lakh plus 50,000, 1 lakh 50,000. That means we have to pay P. So we will write over here to bank account 1 lakh 50,000 will be paid to P. So here you will write by P's capital 1 lakh 50,000 will be paid to P. Look at Q, 4 lakh 30,000. 4 lakh 30,000 minus 1 lakh 20,000, 310. 3 lakh 10,000 is to be paid to Q. So by Q's capital account 3 lakh 10,000. Next R 2 lakhs plus 20,000, 2 lakh 20,000. We're going to write by R's capital account 2 lakh 20,000. Now if you just check this, 150 plus 310 plus 220 minus 50 minus 430, you have 200. That's the end of the bank account. Bank account closes on its own. Why we don't have to worry about person becoming insolvent and all that? See over here. Okay. P was declared insolvent. Third partner R could bring 50,000 only. They don't need to bring only any money. They don't need to bring any money because already there is balance in their capital account. They need to get money. So we are just giving them money. So there is no question of insolvency or person is not able to bring money and others have to bear that loss. All that is not there in this question. Clear? This is your unsolved case. Realization account, partners capital account and bank account. See, amount of profit or loss on dissolution that we calculated in realization account, which was 1 lakh. Then determine the amount of deficiency and how much deficiency. Nothing, no deficiency. Settlement of bank account. Finally, we have done that as well. Clear? That should be it with this particular question. What will we do next? Next, we will go into the examination questions. Like how we did in all the other cases, we'll go into examination question. June 2024, we'll see what they have asked from partnership. Chapter 1 basics we have covered. Chapter 1 basics. Consignment is also done. Hire purchase is also not done because it's in an upcoming chapter. Okay, consignment done. Hire purchase to be done. Incomplete records also we have completed. Okay, then they have asked fifth question. There is a partnership question for 14 marks. I think only one partnership question is there. Yes. And then one theory. What is piecemeal distribution? Theoretical question they have asked. So partnership question is asked for 14 marks. Let's read the question. Question number 5. 14 mark question. June 2024. Okay. June 2024. We have a question. Question number 5. Question 5. 14 marks. Okay. This should be the question. Question number 5. X, Y and Z were partners sharing profits and losses in the ratio of 3:2:1. What is the profit sharing ratio? 3:2:1. The firm's balance sheet on 31st of March 2023 was as follows. Now, let's continue. Okay, we have this situation with us. This is the balance sheet. You can see creditors, bills payable, general reserve, capital account of XYZ. And then we have cash in hand, cash at bank, debtors minus provision, bills receivable, stock, investment, furniture, land and building. Okay. Now, what is the situation? Why retired on 1st April 2023? Retirement. And it was agreed that he should be paid all his dues in full on that day. Nothing will be transferred to Y's loan account. Entire amount will be paid to Y on that day itself. For this purpose, goodwill was to be calculated on the basis of 4 years purchase of super profit method. So we have to calculate goodwill under which method? Super profit method. Other information given as follows. Average capital employed in the business is 26 lakh 10,000. Net trading profit for the last 3 years is given to you. Last 3 years profit. Okay. Rate of interest expected on capital having regard to risk is 10%. Fair remuneration to partners for their services 1,20,000 per annum. This much is given for goodwill calculation. Goodwill computation, we have to use this. Then stock and furniture to be depreciated by 10%. Provision of 5% on debtors to be created for doubtful debts, and a provision for liability of 18,000 to be created against bills discounted. Value of land and building to be appreciated by 235. Investment is to be taken at its market value. Due to revaluation, the value of assets and liabilities are not to be altered. Value of assets and liabilities are not to be altered. Moment they tell us this. So point number 5, point number 6, point number 7, they have spoken about revaluation, but then they told we should not alter it. So we have to prepare something called as memorandum revaluation account. Increase it, distribute to everyone, decrease it, distribute it to the remaining partners. In order to meet Y's obligation, X and Z bring in additional capital of 3,50,000 and 7,20,000 respectively. The profit or loss sharing ratio of X and Y in the new firm will be 5:3. New ratio is also given. You are required to. We'll see what and all we are required to do. Calculate the value of goodwill and show its treatment. First is goodwill. Okay, can you see they have told goodwill is to be calculated 4 years purchase of the super profit method. Last 3 years profits are also given to us. First, you tell me goodwill computation. First thing that we are going to do is goodwill computation. Goodwill computation, what is the formula? Super profit into number of years of purchase. Super profit into number of years of purchase. Super profit, what is the formula? Average profit minus normal profit. Average profit minus normal profit. That is the formula for super profit. Okay. So normal profit, how we are going to calculate? Capital employed into NRR, normal rate of return. All this is given in the question itself. Can you see rate of interest expected from capital having regard to risk is 10%. So now what we are going to do, super profit, first we'll find average profit. We will find average profit given in the question. Last 3 years profit is 630, 540 and 675. 6,30,000 plus 5,40,000 plus 6,75,000. 6,75,000. The whole thing divided by 3. So 6,30,000 plus 5,40,000 plus 6,75,000. 18,45,000 divided by 3. You will get average profit of 6,15,000. Average profit is 6,15,000. Is this clear? This is your average profit. What is your normal profit? Normal profit is capital employed into NRR. They have told average capital in the business was 26,10,000. So 26,10,000 into 10% is the NRR. 2,61,000. 2,61,000. Therefore, super profit is equal to average profit 6,15,000 minus normal profit 2,61,000. So 6,15,000 minus 2,61,000. This gives us 3,54,000. Super profit is 3,54,000. What did we do first? We calculated average profit 630, 540 and 675. Where are we getting this? From the question. Can you see over here? 6,30,000, 5,40 and 6,75,000. Divide that by 3, you will get average profit. Average profit is how much? 630, 540 and 675. 630 plus 540 plus 675 divided by 3. 6,15,000 is average profit. Normal profit, capital employed into NRR. Capital employed given, NRR given. 26,10,000 into 10%, 2,61,000. 26,10,000 into 10%, 2,61,000. So 6,15,000 minus 2,61,000, 3,54,000 is your super profit. 3,54,000 is your super profit. Now you have 354, which is your super profit. Okay, what next? Now the goodwill will be how many years purchase they said. Goodwill is to be calculated at 4 years purchase. So 3,54,000 into 4. 3,54,000 into 4 will give you 14,16,000, which is the goodwill. 14,16,000 is the goodwill. Goodwill will always be distributed in sacrificing ratio. So what we should do, we have three partners, X, Y, Z. X, Y, Z. What is their old ratio? Their old profit sharing ratio was 3:2:1. So you will take 3/6, 2/6 and 1/6. New ratio. What is the new ratio between X and Z? Sorry, X and Y. Who is the partner who is retiring? Y is retiring. I think profit sharing ratio between X and Y in the new firm. This is wrong. X and Z in the new firm it should be. Okay. X and Z in the new firm is 5:3 because Y retired already. X and Z only are remaining. 5/8. Y is 0. 3/8. So when we do this, we can take 6 and 8. The LCM for 6 and 8 will be, you can take it as 48. 8 6 are 48. So 6 8s are 3 8s are 24 minus 8 6s are 5 6s are 30 is equal to minus 6/48. Minus 6/48. Here if you see, this is 2/6. 2/6, if you have to get to the same terms, you have to multiply into 8 into 8. This becomes 16/48. Then when we calculate over here, this is again 48. 6 8s are so 8 minus 8 6s are 3 6s are 18. That makes it minus 10/48. Therefore, can you see over here, gain ratio is how much? 6:10, or you can take it as 3:5. 6:10 or 3:5. This person is gaining. This person is gaining. This person is sacrificing. This person is gaining. Clear? Now, how much is, understand, Y's share of goodwill. Y is the person who is going. Y's share of goodwill. Goodwill is 14,16,000. 14,16,000 is the goodwill. 14,16,000 into Y's share is how much? Y's share is 2/6 or 16/48. You can take 2/6 or 16/48. 14,16,000 into 2 divided by 6. 4,72,000. 4,72,000 is Y's share of goodwill. Y's share of goodwill is how much? 4,72,000. Now when you have 4,72,000, they have also asked in the question, okay, calculate value of goodwill and show its treatment. So it will be X capital account debited. X is sacrificing, X is gaining, so X will give. Z's capital account debited to Y's capital account. Y is going, so he has to get 4,72,000, and this will be given by the others in the ratio of 6:10. So 4,72,000 into 6/16, 1,77,000 will be given by X, and then 4,72,000 into 10/16, that makes it 2,95,000. So 295 plus 177, 472 is given to Y, and this is the treatment for goodwill. Always the gaining partner will give it to the sacrificing partner. Next, what did they ask? This is done. Calculate the profit or loss on revaluation of assets and liabilities and show its adjustment among partners. So next thing that they have asked in the question is revaluation account. Revaluation account. But we know that we have to prepare memorandum revaluation account. We have to prepare memorandum revaluation account. Okay, memorandum revaluation account will be prepared. Now you have to understand one thing. First, we will do the revaluation, share it among all partners, then we will reverse the revaluation. Okay, now, first this and this point, all related to goodwill that we have done with. Fair remuneration for partners for their services, 1,20,000 per annum. Oh, ho, 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 ho. We missed that point. Remuneration for partners is how much? 1,20,000 per annum. So what we are going to do? Super profit, average profit minus normal profit, 3,54,000 minus 1,20,000 per annum. Fair remuneration to the partners is 1,20,000. So super profit will be minus 1,20,000. So 354 minus 120. Okay, 2,34,000 is a super profit. 2,34,000. Okay, average profit minus normal profit. Remove. Now, what you can do one thing. Average profit you calculated. Here only you can subtract minus 1,20,000. So 6,15,000 minus 1,20,000. So average profit becomes 4,95,000. And so you can take it over here, 4,95,000 minus 261. 4,95,000 minus 2,61,000. That gives you 2,34,000. Okay, you can see over here, 2,34,000 will be your super profit. So 2,34,000 into 4. 2,34,000 into 4, 9,36,000 will be the goodwill. Goodwill is 9,36,000. So here what we can do? 9,36,000 into 2 by 6. 9,36,000 into 2 divided by 6. 3,12,000 is goodwill. 3,12,000. So 3,12,000 will be given in the ratio of 6:10. So we can take it that way. 3,12,000 into 6 by 16, 1,17,000. 1,17,000, and then you can take 3,12,000 into 10 divided by 16, 1,95,000. Now, what we are going to do? First, calculate super profit. Okay, but when you are calculating super profit, you have to calculate average profit. Average profit, when you do, remove the remuneration. They said fair remuneration per partner is, fair remuneration for the partners is 1,20,000. So 6,15,000 average profit. From that, remove the remuneration. You get average profit of only 495. 495 minus 261. 495 minus 261 will give you 2,34,000, which is your super profit. Multiply into 4 years purchase. 4 years purchase will give you 9,36,000 goodwill. We already know the gain ratio. 9,36,000. Okay, into what is the ratio for the partner who is retiring? Y, 2 by 6. That gives you 3,12,000 is Y share of goodwill. Who will give that? X and Z. In what ratio? 6:10, which was their gain ratio. Is this clear? Yes. Till here we are done. Now we go into revaluation. Memorandum revaluation. Now here first 4 points done. Next, stock and furniture to be depreciated by 10%. Look into the question. How much is stock? Stock is 3,15,000. So write stock is going down, loss. So you can write to stock account 31,500. 10% depreciation. Stock and furniture to be depreciated. Now furniture you can check 4,20,000. So to furniture account 42,000. 10% depreciation. So 42,000. Next, after that, stock and furniture depreciated by 10%. Provision of 5% on debtors to be created for doubtful debts. What is the debtor value? You're going to write, okay, to provision for doubtful debts. You're creating provision. So 8,70,000. 8,70,000 into 5%. So if you take a calculator, 8,70,000 into 5% gives you 43,500. But we already have some provision of 30,000. Minus 30,000, 13,500 will be the provision. So 8,70,000 into 5%. That gives you 43,500. But we already have 30,000. You can see over here provision of 5% to be created for doubtful debts and a provision for liability of 18,000 to be created against bills discounted. So to provision for liability for bills discounted. Provision for liability for bills discounted, which is 18,000 to be created. 18,000. Clear? This is your evaluation regular procedure. Next, value of land and building to be appreciated by 2,35,000. Land and building has to be increased by 2,35,000. So you'll write over here by land and building account 2,35,000. Next, what did they tell you? Investment is to be taken at its market value. See the investment. It is 375 over here, but market value is 410. That means we are going to increase it. So you're going to write by investments 4,10,000 minus 3,75,000. That makes it 35,000. That makes it 35,000. Increase in the investment value. Then they have told due to revaluation, the value of assets and liabilities are not to be altered. Till here we have done. This is still revaluation. After that, it's nothing to do with revaluation. So now what we will do, whether there is profit or loss, we will distribute it to the partners. We'll distribute it to partners. You can check 2,35,000 plus 35,000 minus 31,500 minus 42,000 minus 13,500 minus 18,000. 1,65,000 is the profit. So you'll write over here to partners capital account. We have X, Y and Z. 1,65,000 into, what is their old profit sharing ratio? 3:2:1. So 3 by 6, 2 by 6 and 1 by 6. So you can write 1,65,000 into 3 by 6, 82,500. Then you can write 1,65,000 into 2 by 6, 55,000. And 1,65,000 into 1 by 6, 27,500. Yes, this should be the situation. Next, what we are going to do, memorandum revaluation account. They said revalue, but it should not change the value. So what we did right now, everything we are going to reverse. Everything. This is the thing of memorandum revaluation. So stock, you have written to stock. Here you'll write buy stock. Buy stock account 31,500. Okay. You have written to furniture. You're going to write buy furniture. Buy furniture account 42,000. You have written to PDD. You're going to write buy PDD. Buy PDD account 13,500. Then you are going to write by provision. By provision 18,000. Then what you are going to do? Land and building was increased. Now you will decrease it. To land and building 2,35,000. Investment was increased. Now you are going to decrease to investments 35,000. Now what will happen? Earlier we had a profit. So obviously now we will have a loss, and that loss will be shared by partners. By partners capital account X and Z. Y will not be there because Y is retired. So X and Z. So you'll write 1,65,000. The new ratio between X and Z is 5:3. So you're going to write 5 by 8. 1,65,000 into 3 by 8. 1,65,000 into 5 divided by 8. 1,03,125. 1,03,125. 1,65,000 into 3 by 8. 61,875. This is your memorandum revaluation account. This is what happens when they tell you to revalue and then they tell you assets and liabilities should not change. Clear? Next, what we are going to do? Third one. Show the balance of partners capital account after Y's retirement. Okay. So the next thing that they have asked is partners capital account. Partners capital account. We have X, Y, Z, X, Y, Z. You can check the question. What was their partners capital balance? 970, 740 and 380. So you will go and write by balance brought down 9,70,000, 7,40,000 and 3,80,000. 9,70,000, 7,40,000 and 3,80,000. That is the capital balance. What will you do with reserves? Reserves will be distributed to the partners in their profit sharing ratio. You will write by reserves 5,10,000 in the ratio of 3:2:1, 2,55,000 and 5,10,000 into 2 by 6, 1,70,000 and 5,10,000 into 1 by 6, 85,000. Clear? This is your general reserve which is distributed to the partners. Then what we are going to do? Revaluation. Then revaluation you are going to write over here by memorandum revaluation account. You can see the revaluation 82,500, 55,000, 82,500, 55,000 and the third partner 27,500. And then what we are going to do? To memorandum revaluation account, X is 1,03,125. Y nothing because Y is gone. 61,875. Then the goodwill distribution. Goodwill distribution we have calculated and kept. X and Z will pay to Y. So you will write over here to Y's capital account. X is going to pay how much? 1,17,000. 1,17,000. How much will Y pay? Y will pay 1,95,000. 1,95,000. And here you are going to write by X capital account and give Y 1,17,000. And here you are going to write by Z's capital account and give Y 1,95,000. 1,95,000. Clear? After that, what do we have? Can you see? Due to revaluation, assets and liabilities not altered, not to be altered. In order to meet Y's obligation, X and Z will bring in additional capital of 350 and 720 respectively. X and Z are bringing money. So you're going to write bank account debited to capital account. So here by bank account, X will bring 3,50,000. Z will bring 7,20,000. X will bring 3,50,000 and Z will bring 7,20,000. That should be it. What we are going to do to Y? We are going to pay the entire amount. So we will write over here to bank account. How do we know that? They have told here in order to meet Y's obligation. And here also they have told it was to be agreed that it should be paid all its dues in full on that day. Entire amount whatever we are supposed to pay to Y, we are going to pay to Y. This will be the balancing figure for Y. Check the calculations. Be careful. 7,40,000 in Y's capital account plus 1,70,000 the reserve share plus 55,000 the revaluation profit share plus 1,17,000 goodwill share plus 1,95,000 goodwill share. Total amount is 12,77,000. So 12,77,000 is what we are going to pay to Y. Is this clear? Then after that, the other partners will just continue. So to balance carried down. To balance carried down. Check for X 9,70,000 plus 2,55,000 plus 82,500 plus 3,50,000. Okay. 1 second. Yeah, 9,70,000 plus 2,55,000 plus 82,500 plus 3,50,000. 16,57,500. Oh, sorry, minus. The loss is also there. 103,125 minus 1,17,000. So 14,37,000 375. That is the balance. When we go to Z, Z had a balance of 380 plus 85,000 plus 27,500 plus 7,20,000 minus 61,875 minus 1,95,000. 955 625. 955 625. This should be the balance of the other two partners, X and Z. That is the third thing that they have asked. Fourth thing, prepare firm's balance sheet after retirement of Y. The next thing that they have asked is balance sheet of firm after retirement of Y. Balance sheet of the firm after retirement of Y. Now you have to understand two things. Assets and liabilities, whatever you revalued, everything you reversed. So you're just going to take the old values only of assets and liabilities. Now capital account, you know. Capital. You have X 14,37,375. You have Z 9,55,625. Now you go into the old balance sheet. Okay, can you see general reserve that is already distributed, gone. Creditors as it is, right? Creditors 4,25,000. Then the next thing is bills payable as it is. You can write bills payable 1,35,000. 1,35,000. When you go into the asset side, we have cash 17,000. Cash 17,000. Then you have bank. Bank, you have to be careful. We had 2,48,000. 2,48,000 in the bank account. Plus amount was brought by the old partners 350 and 720. So plus 3,50,000 plus 7,20,000 minus amount is paid 12,77,000. 12,77,000. So now if you calculate, 2,48,000 was already there. 3,50,000 was brought by X. 7,20,000 was brought by Z. Minus 12,77,000 you're going to pay to the retiring partner. What will be left in your bank account is only 41,000. 41,000 will be left in your bank account. After that you have debtors. So debtors will be 8,70,000 minus provision for doubtful debts 30,000. You're going to put it as 8,40,000. Why same thing? Because whatever extra provision we created, we have reversed it. Bills receivable 1,65,000. We had created provision which is also reversed. Stock in trade 3,15,000. Next, investment. It was also increased, but then it is decreased. Investment 3,75,000. Next, you can see furniture 4,20,000. This was decreased, but it is increased again because we have reversed all the revaluations. Finally, land and building 780. Land and building 7,80,000. Okay, you can check the balance sheet now. 14,37,375 plus 9,55,625 plus 4,25,000 plus 1,35,000. You get 29,53,000. 29,53,000. You can cross check the asset side as well. Okay, asset side you have cash 17,000. You have bank 41,000. You have debtors 8,40,000. You have bills receivable 1,65,000. You have stock 3,15,000. You have investments 3,75,000. You have 4,20,000 of furniture and 7,80,000. This should be your balance sheet, and balance sheet is tallying 29,53,000. Can you see the question? They asked four things: calculate goodwill, show its treatment, done. Calculate profit or loss on assets revaluation, show the adjustment, that is done. Show the balance of partners' capital, that is done. And balance sheet is also done. 14 mark question they have asked in the exam. 14 mark question. From here, you can see first what did we do? Goodwill computation. Then we calculated sacrificing and gain ratio. Then we distributed the goodwill, memorandum revaluation, revalued, distributed the profit to all the partners, reversed the revaluation, and then what did we do? We calculated the loss and distributed to the other partners. Then we prepared partners' capital account. Okay, let's go into the next exam paper. December 2023, fifth question. December 2023, question number 5. Again, it is asked for 14 marks. Question number 5 asked for 14 marks. Let's have a look at it. A and B were carrying on business as equal partners. That means their profit sharing ratio is 1:1. The firm's balance sheet as on 31st December 2022 was as follows. Can you see the firm's balance sheet they have given? A and B capital, bank loan, current liabilities, sundry creditors, bills payable. Then asset side you have leasehold building, plant and machinery, furniture. Current assets you have stock, debtors and bank. The business was carried on till 30th June 2023. When did they give you the balance sheet? 31st December. 6 months they have continued the business. Partners withdrew in equal amounts half the amount of profit made during the period of 6 months from January to June. Whatever they have made, half the amount they have withdrawn. After charging depreciation on leasehold building, plant and machinery and furniture 10% per annum, 10% per annum and 10% per annum. Meanwhile, sundry creditors were reduced by 15,000. Sundry creditors went down. Bills payable by 2,500 and bank loan by 20,000. On 30th June, stock was valued at 7,09,000. Book debts were 75,000. Cash at bank was 2,500. On 30th June, the firm sold the business to a limited company for 4 lakhs. Balance 4 lakh payable in equity shares of 10 each. What did they do? 6 months they continued the business and then they sold the firm to a company for 4 lakh rupees 4 lakhs. Purchase consideration is given 4 lakhs. Partners decided to take shares in the profit sharing ratio, any difference to be settled in cash. Okay, profit sharing ratio is 1:1 only. You are required to prepare statement of net assets as on 30th June. What is the net asset on 30th June? Statement of profit earned during the period ended 30th June 2023, realization account and capital account of partners. 4 things that they have asked. First thing that we are going to do is statement of net assets on 30th June 2023. 30th June 2023, we need to know what is the statement of net assets. We'll go one by one. First, building. We'll go one by one. 1 second, give me a second. Yes. Statement of net assets. First, you have building. What was the building value? Building value was 80,000. They told 10% depreciation, but depreciation per annum. So what you will do? 80,000 minus 5%. Why I am taking 5%? 10% is for the entire year. So for half year, it will be 5%. 80,000 minus 5%, you will get 76,000 is the building. Next item, plant and machinery. You will write plant and machinery. Plant and machinery is 1,80,000 minus 5%. 1,80,000 minus 5%. 1,71,000. Why am I taking 5% again? Because it is only for half year. Next you have furniture. There also 10% depreciation is there. So you will write furniture 20,000 minus 5%. So you will take 20,000 minus 5%, 19,000. So building 5% depreciation, plant and machinery 5% depreciation, furniture 5% depreciation. Is this clear? Then you have stock. What did they tell? On 30th June, stock was valued at 7,09,000. Stock was valued at 7,09,000. So you will take stock 7,09,000. Next, after stock, you have book debts, debtors. So you can take debtors. What is the debtor value? Book debts. Book debts were valued at 75,000. You can take 75,000 book debts. Then we have cash at bank. Bank balance also they have given was 2,500 on 30th June. 2,500. Then we go into our liabilities. What are the liabilities that we have? Bank loan is there. They have told sundry creditors were reduced by 15,000. So first we will take sundry creditors. Earlier sundry creditor, you can see it is showing 70,000. So 70,000 minus 15,000, that makes it 55,000 is your sundry creditors. Next, after sundry creditors, what do we have? Sundry creditors done. Then they have told bills payable by 2,500. Can you see bills payable is 10,000? So you will write bills payable 10,000 minus 2,500. That makes it 7,500 bills payable. After bills payable, what is the next thing that we have? You have bank loan. What did they tell? Bank loan by 20,000. Bank loan is reducing by 20,000. So you have bank loan 40,000 minus 20,000. Bank loan is 20,000. You can see here bank loan is showing 40, 40 minus 20, 20. Is this clear? This is your net assets. Net assets on 30th June 2023. 30th June 2023, that is your net assets. So what you're going to do? 76,000 plus 1,71,000 plus 19,000 plus 7,09,000 plus 75,000 plus 2,500 minus, subtract all the liabilities, 55,000 minus 7,500 minus 20,000. So 9,70,000 is your net assets. 9,70,000 is your net assets. You can check again. 76,000. Check for calculations. 76,000 plus 1,71,000 plus 19,000 plus 7,09,000 plus 75,000 plus 2,500 minus 55,000 minus 7,500 minus 20,000. 9,70,000 is your net assets. Your net assets is 9,70,000. Now what we are going to do next? Statement of profit earned during the period of 6 months. During the period of 6 months, what is the profit earned they have asked. Okay, now understand this. If you prepare this, okay, what is the capital? Capital on 31st of December 2022. We already know the capital. The capital of the three partners is 138, 152. Two partners, 138 and 152. So you'll write 1,38,000 plus 1,52,000. So 1,38,000 plus 1,52,000, 2,90,000. 2,90,000 is the capital on 31st of December 2022. 2,90,000. Is this clear? Now what is the capital? Can you see the net assets? Asset minus liability. This time the capital is capital on 30th of June 2023 has reached 9,70,000. The capital on 30th of June 2023 is 9,70,000. Clear? Therefore, increase in capital. Increase in capital. So 9,70,000 minus 2,90,000. 6,80,000 is the increase in capital. Capital has gone up by 6,80,000. Can you see what they have told in the question? Can you see what they have told in the question? Over here, the partners withdrew in equal amounts half the amount of profit made during 6 months. Half the amount of profit they have withdrawn. So increase in capital plus amount withdrawn half the amount of profit they have withdrawn. So what is remaining is other half, 6,80,000. So 6,80,000 plus 6,80,000. You will get 13,60,000. This is profit earned during 6 months. Profit earned during 6 months is 13,60,000. Are you getting my point? 13,60,000 profit was earned. Half the amount they have withdrawn, half the amount is remaining in their capital account. This is the second thing that they have asked in the question. Third thing that they have asked, realization account and capital account of partners. Next thing that they have asked is realization account and capital account of partners, because we are closing the partnership firm now. Okay, we are closing the partnership firm. So you're going to prepare realization account, and then you're also going to show partners capital account. Partners capital account. What is a partners capital account? We have A and B, only two partners, A, B, A and B. Okay, two partners are there. Now, first thing what we are going to do, transfer all the assets and liabilities to realization account. Which assets and liabilities we are going to transfer? Not the one which is there in the balance sheet. Not the one which is there in the balance sheet. We are going to transfer on 30th June. So remember that we have already prepared the assets and liabilities on 30th June. So building account 76,000. Building account 76,000. Go to realization account and write to building 76,000. Then you are going to write plant and machinery. Plant and machinery has been, it has become 171. So you will write to plant and machinery 1,71,000. The next item which is going to be transferred, furniture 19,000. So you're going to write to furniture 19,000. Next asset that we are going to transfer is stock 7,09,000. You're going to write to stock. After stock, the next thing is debtors 75,000. You're going to write to debtors 75,000. Why are we not taking the items which are given in the balance sheet? Because it's on 31st December. We are closing the partnership firm on 30th June. Okay, debtors. Then we'll also have to prepare bank account by default. Always. You're going to write to balance brought down 2,500. Okay, this is when you are transferring all the assets. Assets 1, 2, 3, 4, 5, 6 assets are there. We have transferred 5 here and 1 is still remaining in the bank. The other liabilities we have creditors 55,000. So we are going to write by creditors 55,000. After creditors, the next thing is bills payable 7,500. By bills payable 7,500. By loan 20,000. Loan was 40, it became 20. Okay, this should be it with the realization account. Start. Then partners capital, you can write by balance brought down. Partners capital was 138 and 152. 1,38,000. 1,52,000. We know what is a profit by P&L appropriation account. By P&L appropriation, we have already calculated profit is 13,60,000. It will be shared 6,80,000 and 6,80,000 because they are equal partners. Then 2 drawings, they are going to withdraw. So 6,80,000 divided by 2. 3,40,000. Half the amount they are going to withdraw, 3,40,000 and 3,40,000. Is this clear? So half the amount they are going to withdraw and half the amount they are going to retain. Now this much we have done. Correct? This much we have done. 680 profit they earned. Now if you see 1,38,000 plus 1,52,000 plus 6,80,000 plus 6,80,000 minus 3,40,000 minus 3,40,000. If you check, you will get 9,70,000, and that was the capital account balance. See, after removing all the drawings, 9,70,000 only will remain. This is the thing. Then what we are supposed to do? Purchase consideration. How much is the purchase consideration? They have told in the question itself that they are giving 4 lakh. Purchase consideration is going to be 4 lakh in equity shares. So 4 lakh, what we are going to do? Purchasing company will give us, what is the name of the purchasing company? Purchasing company's name is, where did they tell us? Limited company, they said. They didn't give us the name. Partners withdrew. Okay. Business was carried on and then partners withdrew. All that they have told. On 30th June, the firm sold the business to a limited company. Name is not given. Purchasing company. That's it. So by purchasing company, we are going to get 4 lakhs. 4 lakhs is going to be given in shares. The partners decided to take shares in the profit sharing ratio. Equally, they are going to take the shares. Okay. Then what we are going to do? Close the realization account. Close the realization account. Transfer the profit or loss. 76,000 plus 1,71,000 plus 19,000 plus 7,09,000 plus 75,000 minus 55,000 minus 7,500 minus 20,000 minus 4 lakhs. So totally we have loss of 5,67,500. So we are going to write by partners capital account. We have two partners A and B. 5,67,500 into half. 5,67,500 into half. 283,750. 283,750. 283,750. 283,750 and 283,750. You're going to write over here to realization account 2,83,750, 2,83,750. Realization account. Is this clear? This is the loss distribution we have done. 283,750, 283,750. Any doubts with this? No. This is it with realization. Now what we are going to do? The shares whichever is there, 4 lakh of shares which we got, it is going to be distributed between the partners. So purchasing company to realization, shares to purchasing company, and those shares will be given to the partners. So you're going to write 2 equity shares in purchasing company account, 2 lakhs and 2 lakhs. 2 lakh and 2 lakhs. That is going to be distributed. Going back to the question, can you see they have told any difference to be settled in cash? If there is any difference, partners will bring money, and this should be the end of their partners capital account. Check for A. 1,38,000 plus 6,80,000. 8,18,000 is there. Okay. Minus 3,40,000 minus 283,750 minus 2 lakhs. So 5,750 rupees shortage. 5,750 rupees is there that we are going to give. So we are going to write to bank account 5,750, and here we will write by A's capital 5,750. Again you can check. 1,38,000 was there, plus he got his profit share of 680, minus he has taken half of the profit 340 gone, minus revaluation loss 283,750 minus 2 lakhs. That makes it 5,750. He has not shortage, he has to give money. So you can see over here by bank account 5,750. He has to bring 5,750. So here you can write to A's capital 5,750. A is bringing money. Let's check with B. What is the situation? B had 1,52,000 in his capital account, plus he got 6,80,000 is profit share, minus 3,40,000 is withdrawal, minus 283,750 minus 2 lakhs. That means 8,250 is still there in the capital account of B. So here we are going to write by bank 8,250. So here, one second, what did we just do? Sorry, yeah, here, to bank 8,250 by B's capital account 8,250. If you check, no, 2,500 plus 5,750 is 8,250. So, simple logic, A's capital account, there was shortage. So, A brought money. B's capital account, there was excess. So, we gave money to B. This is the end of our partnership firm. Bank account is just required for your understanding. Partners capital account done. Realization account also done. Before that, we calculated the profit and we also calculated the net assets on 30th June. This is your 14-mark question which is asked in the exam. 14-mark question they have asked in the exam. Next, they have asked branch accounts and all, which we are going to do. Couple of standards are also there. Partnership, they have asked one question for 7 marks. Sorry, 4 marks. They have asked one 4-mark question from partnership, 5-mark question basics, and one more 5-mark question. 4-mark question they have asked. Can you look at it? A and B were partners in a firm and their capital was 5 lakh and 3 lakh respectively on the 1st April. So 8A. This is question number 8A, asked for 4 marks. Okay, let's see what they have asked. Profit for the year ending 31st March 2023 amounted to 2,10,000. Drawings of the partner is 1,60,000 respectively. It was observed that the following errors were committed while distributing the profit. They made some errors. Manager's commission of 10% on profits before charging such commission was omitted. Okay. Closing inventory was valued at 70,000 whereas its net realizable value was 50,000. Outstanding salary of employees 40,000 were not recorded. A had given loan of 1,50,000 to the firm on 1st December. Interest was omitted to be recorded for this loan. Loan was given to B on 1st July amounting to 1 lakh, bearing interest of 8%. Interest was omitted to be charged by the firm. Then what did they tell? Interest on capital 6% was not allowed and interest on drawings was not charged at the rate of 10%. On the basis of the above information, answer the following questions. How much interest should be paid on A's loan to the firm? Is it a charge or appropriation of profit? A's loan. A's loan. First thing they have asked is interest on A's loan. Interest on A's loan. How much was A's loan? Can you see they have told A had given a loan of 1,50,000. So 1,50,000 is the loan. What is the interest rate? Interest rate, have they told anywhere? No. Interest on capital 6% was not allowed. Interest on drawings 10%. A had given loan. Interest was omitted to be recorded. If they don't tell, interest on loan of partner will always be taken as 6% into, it is taken on 1st December 2022. That means December, January, February, March. 4 months interest is pending into 4 divided by 12. 1,50,000 into 6% into 4 divided by 12. That is basically 3,000. 3,000 is the interest on A's loan. They are asking you, is it a charge against profit? Where is it? Yeah, is it a charge against profit or appropriation of profit? It is an expense. So it is a charge against profit. That means even if we don't have profit, we have to pay this loan. Second, we'll go into second question what they have asked. What is the amount of net profit? They have asked you what is the amount of net profit. Now in the question, first thing, then they have asked what is the amount of divisible profit that is to be distributed. What is each partner's share of profit? Now first thing we will calculate correct net profit. Computation of correct net profit. They have already given one net profit. Net profit given in the question. How much is the net profit given in the question? They said that profit for the year amounted to 2,10,000. Profit for the year is 2,10,000. This is the net profit. Okay. Drawings is given. It was observed that following errors were omitted. Manager's commission 10% on the profit before charging such commission. Manager's commission will be the last thing. This will always be the last thing. Before charging commission, whatever is there, 10% commission we are supposed to give. Closing inventory was valued at 70,000, but it was supposed to be only 50,000. Cost or NRV, whichever is lower. So minus reduction in stock, reduction in closing stock. That is going to be 70,000 minus 50,000, 20,000. The stock is going to reduce. If stock reduces, profit also reduces. This is done. Outstanding salary 40,000 was not recorded. So what we will do, minus outstanding salary. So if you record an expense, profit will reduce again. Again the profit reduces. Next, A had given loan. Okay, interest was omitted. So what we will do, minus interest on, okay, that will be last. Interest on loan is later because it's an insider's profit. This also will keep it pending. Loan was given to B on 1st July amounting to 1 lakh bearing interest of 8% per annum. It was omitted to be charged by the firm. So loan was given to B. So what we will do, plus interest on loan given, this also will be after the commission. After the commission, we'll keep whatever is related to partner, we'll keep it pending. We'll do it later. This also later. Interest on capital later, interest on drawings later. This much is the appropriation right now. This is the mistake. So now what we have, if you check, 2,10,000 was there, minus 20,000, okay, minus 40,000. So right now the profit is 1,50,000. This is the net profit before commission. This is the net profit before commission minus commission at the rate of 10%. They said commission, manager's commission is on the profit before charging such commission was omitted. 10%, 15,000. So 1,35,000 is net profit. 1,35,000 is net profit. Okay, now what we are going to do, net profit will come to P&L appropriation. Okay, 1,35,000 is the net profit. Now what we have to be very careful is minus interest on loan. Interest on loan. Okay, A had given loan. Loan given by A. We have already calculated that interest on loan is how much? 3,000. Minus 3,000 interest on loan goes. Then plus interest on loan given to B. Interest on loan given to B. A had given loan. Loan was given to B. Okay, 1 lakh. So we are going to take 1 lakh into, what was the interest rate? 8% per annum into 8% into, this loan was given on what date? 1st July. July, August, September, October, November, December, January, February, March. 9 months interest into 9 divided by 12. So 1 lakh into 8% into 9 divided by 12, that gives you 6,000. 6,000 you're going to add. Then what we are supposed to do? Okay, loan was given, this is done. Loan was taken, that is also done. Interest on capital 6% per annum was not allowed. So minus interest on capital. Interest on capital. We have A, we have B. What is the capital of the two partners? 5 lakh and 3 lakhs. So what we are going to do, 5 lakhs into 6%, and the second person is 3 lakhs into 6%. So this becomes 30,000 and this becomes 18,000. 30,000 and 18,000 interest on capital is reduced. Interest on capital is reduced. Okay. Then what we are going to do, interest on drawings. Drawings of the partners was 1 lakh and 60,000 respectively. Interest on drawings is not 6%. It is going to be at the rate of 10%. So add interest on drawings. Interest on capital we are giving, interest on drawings we are taking. So we have A, we have B. Okay, 1 lakh is the drawings. So we are going to take 1 lakh into 10% into 6 divided by 12. 1 lakh into 10% into 6 divided by 12. 5,000. Next, what is the situation? We have 60,000. 60,000 into 10% into 6 divided by 12. So 60,000 into 10% into 6 divided by 12. 3,000. Can you see what we have done? We had made some mistakes, that is rectified. Then we got net profit before commission, 1,50,000. Out of that, remove the commission, you will be left with 1,35,000. Interest on loan given by A. A gave loan, so we gave him interest, profit reduces. We gave loan to B, we took interest, profit increases. Interest on capital, we are giving, profit reduces. Interest on drawings, we are charging. They have told entire year's drawing, so we are taking it as evenly 6 by 12. This will be your final profit. So what you will do, 1,35,000 minus 3,000 plus 6,000 minus 30,000 minus 18,000 plus 5,000 plus 3,000. So totally you have 98,000. Okay, you can just check. 135 minus 3 plus 6 minus 30 minus 18 plus 5 plus 3, 98,000 is your divisible profit. Divisible profit is 98,000. Last thing that they have asked in the question is how each partner, what is each partner's share of profit? Their profit sharing ratio is what? Anywhere in the question have they told their profit sharing ratio? Can you see? Where partners in a firm and their capital was 5 lakh, 2 lakh, profit for the year ended is given, drawings is also given, error is also given, but anywhere they have not told what is the profit sharing ratio. Okay, therefore, when it is not mentioned, profit sharing ratio will be equal to A and B in the ratio of 1:1. So it will be basically 98,000 divided by 2, 49,000 for A and 49,000 for B. This will be your solution. Is this clear? This is a 4-mark question. Actually, it will take you a little more time than what is supposed to be taken for 4-mark question, but it's easy 4-mark question in the exam. Okay, you can check this. 8A, 4 marks, interest on loan is calculated, computation of correct net profit, then the distribution of profit. Clear? With this, we are done with partnership chapter. We have solved all the unsolved questions, unsolved case, past examination, last 2 exams questions we have solved. That should be it. Okay. See you in the next video. All the best for your CMA exams.